Hi guys, so this video is about GST amendments for CA Inter for May 2023 examinations. First of all, please remember uh, for GST amendments. Okay, better. I will show you the ICAI website in Board of Studies portal. What are the GST amendments applicable for your May 2023 examinations? Kindly listen to this introduction of mine without skipping it. I know you are having timestamps below and you want to skip it. No, please. Very important. GST amendments, it is not that easy now. Almost we have uploaded 9.5 hours of amendment. You can see the video length. It's almost 9.5 to 10 hours of amendment. And this amendment is being dealt by our faculty, expert faculty, SAMBASIVA sir. Okay. Uh, now you can go to the Board of Studies ICAI portal, ICAI Board of Studies. Inside that you will find here something called amendments and developments. Yes, you click on that. So intermediate. Now if you come down, if you see here, for paper 4B, if you observe this one, paper 4B, okay, so indirect taxes supplementary study paper for May 23, November 23. If you click that, approximately 52 pages amendments material opened. Don't conclude immediately. Not just this. There is another amendments material. If you open P4 taxation, this is called as a statutory update. So if you open this, just a minute. Just a minute. Yes. So paper 4, if you open this, again, there is another amendments material for paper 4B, which is 81 pages material, approx 80 pages material. Which means for GST CA Inter May 23, we have two amendments book, which is applicable for May 23 and November 23, which will have 52 pages document, and we have another statutory update, okay, which is having around 80 pages. So totally we are having 130 pages of GST amendments. Now, what I have noticed in some students is they are only listening to 52 pages amendments book, thinking these are the only amendments. No, in GST for May 23, this time we are having amendments of approximately of 130 pages as per ICAI book. You know what? In this particular book, whatever the second book which is released, first of all, if I have to tell you when these books were released by ICAI, this first book, which is having 52 pages, this is called supplementary study material. What the ICAI calls this as is supplementary study material. And this 80 pages book, this is called, statutory update, which is called as supplementary study paper. It is also called as what? Supplementary study paper. Majority of the students are thinking only supplementary study material as their amendments portion. No, we have something else called supplementary or supplementary study paper. So where there are some 80 additional pages of amendments which are released by ICAI. Anyhow, after my initial video, our SAMBASIVA sir will explain you once again clearly within 10 minutes what are the amendments, what are common amendments, all that he will explain. Okay, please watch this entire GST amendments video. Very important. This is very important. From these amendments, direct questions will come approximately for out of 40 marks in GST. I can say 20 marks amendments will only be tested. So this 10 hours video that you are going to watch will definitely fetch you 20 out of 20 marks for sure. So kindly, without skipping, please watch. So in this continuation amendments video by SAMBASIVA sir, so he is taking both this 52 pages amendments video and this 80 pages amendments video completely. This second update, this particular statutory update was released only in the February 3rd week of 2023. Somewhere around February 15, 16, 17 only it was released actually. Okay, some 1 week, I'm not sure exactly, some 1 week plus or minus. Okay, whereas the 52 pages amendments book was released in the month of January 2023. So right now we are doing this video, right now the video you're watching of mine, I'm recording this on 10th March 2023. Only today all the amendments videos were completely recorded by our faculty. Now, so what you need to do is, now in this video, how we have uploaded is first 6.5 hours. First 6.5 hours. I told, right? Institute has released 80 pages amendments material in the latest month, right? So first approximately 6.5 hours will be a discussion on that 80 pages material in depth for May 23, which is very important. So in this material, they predominantly covered amendments falling between 1st May 2022 to 31st October 2022. Predominantly, major amendments are between 1st May 2022 to 31st October 2022. Whereas the balance 3 hours, which is nothing but 50 pages material, which is originally released at first. This will be having amendments between 1st November 2021 to 30th April 2022. 30th April 2022. Now tell me, for May exams, which is most important amendments? Obviously, the latest amendments which are released. This is most important for May exams. I mean, that doesn't mean you can ignore this last 3 hours video. No, you need to cover that as well, because both these materials were released only in the 2023 year. In order of priority, based on importance from exam point of view, we placed 6.5 hours worth of amendments at first in this video, and then you have to do nothing. What you have to do, simply just play the video without skipping any timestamp. Simple. Don't directly jump into any 7th hour or 5th hour like that. No, just watch from the beginning till the end. That's enough. You are done. Now, the question is, sir, we are Shrestha students, subscription students, regular students, or SAMBASIVA taxation GST we purchased, or taxation course we purchased. What about us? For you, whatever recordings that we provided you are November 2022 attempt related recordings. Sir, for May attempt, what we should do? Nothing. Institute itself has not given any separate material for May 23 for GST. Whatever material given by the institute for November 22, the same material is applicable for you. In addition to that, right now I spoke about 80 pages material, 50 pages material, right? This content also you need to watch. Simply, whatever GST recordings you watch in the Shrestha application for subscription regular subject wise, you watch them. Almost 70 hours of GST class we provided. Watch that. In addition to that, come back to this YouTube marathon. This YouTube video, amendments GST video. Inside this entire 9.5 10 hours video also you need to watch. That's it. You are done. Okay, you are updated for May 23 exams. For you, these amendments, okay, almost for you, it is not a test 12 hours video. 10 hours video we uploaded. We uploaded you individual files of 1 hour each, like that, 12 videos. 10 videos. So 10 to 12 videos occupying 9.5 hours. So for you, we uploaded all these videos in your application, in your course itself. You can find subscription, regular or subject wise, you will find there. Okay, those who are not our students, if you want to listen to amendments comprehensively, fully, which are applicable for May, kindly watch this video without skipping till the end. Okay, now Samba sir will continue explaining what exactly this supplementary study material 30th April 2022, what is this statutory update 30th October 2022. So what is this 50 pages material, 80 pages material, all that sir will explain and continue the amendments session. He will continue with the amendments session. So please continue without skipping. All the best. Have a nice time.
A very good evening, students. Welcome to the Shrestha taxation classes. We are discussing GST amendments applicable for May 2023. Right, sir. And for this attempt, May 2023, ICAI has issued one supplementary study material and supplementary study paper. In supplementary study material, it covered all the amendments made in between or made effective till 30th April 2022 have been covered. And in supplementary study paper, which was issued recently, it covers the amendments between 1st May 2022 till 31st of October 2022. So in the first supplementary study material, it covered all the amendments effective till 30th April 2022 by the Finance Act 2021 and as well as by the Finance Act 2022. This is Supplementary Study Material 1. And in Supplementary Study Material 2, or rather I can say Supplementary Study Paper, which was issued very recently, it covered all the amendments between 1st May 2022 till 31st of October 2022. That is the cutoff date for the May 2023 examinations. We know very well that there should be 6 months time gap between the amendments effectiveness and the examination attempt. Since you will be having exams in the month of May, so you need to go for 6 months backwards. So all the amendments made effective till 31st of October 2022 will be applicable to you. So 2 supplementary study materials are there. One should be very, very careful. I'll show you in our ICA website. So ICA website, students, Invoice knowledge portal. And here you can go for, yes, amendments and developments. So you'll be having various CA course, syllabus, study material, ebooks. In that, go for amendments and developments. And here select intermediate and then go for taxation. Here you can see indirect taxes, supplementary study paper for section B, that is indirect taxes relevant for May 23 and November 23 examinations. Okay, sir. And apart from that, you also having statutory update, paper 4, taxation relevant for May 23 examinations. So click here on statutory updates and go for statutory update for section B, indirect taxes. And there you are. So indirect taxes statutory updates. And here you can see the amendments made by the notification circulars issued in between 1st May 22 to 31st October 2022 in the GST laws, as well as the amendments made by the Finance Act 2021 and 22, which became effective from 1st May 22 to 31st October 2022 are given in this statutory update. So that is what I have mentioned here in Supplementary Study Paper 2. All the amendments in between 1st May 22 to 31st October 22. Okay, ma'am. And you can also see the amendment started immediately. Afterwards, sir, what about the amendments between 1st May 21 till 30th April 2022? Look at here. The amendments made by the notifications and circulars issued between 1st May 21 and 30th April 2022 in GST laws, as well as the amendments made by the Finance Act 21 and 22, which become effective between 1st May 21 till 30th April 2022 are given in the Supplementary Study Paper 2022. So this Supplementary Study Paper is different and this Supplementary Study Paper is different. Both are different. I'll show you. Yeah, here it is. So this is covering the amendments between 1st May 21 till 30th April 2022, which is covered in the Supplementary Study Paper 2022, which is covered by Supplementary Study Paper 2022. This is Supplementary Study Paper 1, which was issued way back. Right, sir? And this is the latest one. Which covering the amendments between 1st May 22 till 31st of October 22. This is Supplementary Study Paper 2. So for May 2023 examinations, you have to prepare these amendments and you have to also prepare these amendments. Both you have to prepare. Are you following, every one of you? And these amendments we have already covered. Even for November 2022 examinations. Right, sir. And we've also made the latest recordings on these amendments also. Right, sir. So supplementary study paper 1 amendments we have already covered, discussed. We've already discussed. Since these amendments made effective till 30th of April 2022. Are you following, sir? So these amendments have already been asked in November 22 examinations. So you can go for 6 months back for November 22 examinations. What is the cutoff date? So October, September, August, July, June, May. So 30th April 2022 is the cutoff date for November 22 exams. So the amendments made effective till 30th April 2022 are made applicable for November 22 exams. So which we have already covered for November 22 examinations. I've already covered GST amendments videos. So supplementary paper 1 already discussed. And even in the recent times also, that is in the month of February itself, in this month itself, I have made fresh recordings on supplementary study paper 1. Right, sir? These are made already available in our app. Now we are going to cover this supplementary study paper 2 amendments, which contains the amendments between 1st May 22 to 31st of October 2022. Are you following, sir? So this is the old one, sir. This is the old one. You can see here. The first supplementary study paper, which contains the amendments between 1st May 21 to 30th April 22. Clear, sir? Even though it is mentioned as it is relevant for the students appearing for May 23 and November 23, but it contains the amendments only up to 30th April 2022. And for May 2023 exams, what is the cutoff date? 31st October 2022. That is why for covering the amendments made effective between 1st May 22 till 31st October 2022, the ICI has issued another supplementary study paper very recently in the February 2nd week itself. Are you following? And this is a second supplementary study paper, statutory updates. It was given in the name of statutory updates, and you can see it contains almost 78 pages, whereas the first one contains hardly 52 pages. The second contains 78 pages. This is the latest one. So I've already covered this, the first supplementary study material, and I'm going to cover this. So these two have to be prepared by the students for May 2023 exams, especially GST. Income tax amendments I've already covered. Income tax amendments I've already covered. Right, sir? So GST amendments, the first supplementary study paper, discussion completed. Second supplementary study paper I'm going to discuss. Clear, everyone? Okay, sir. Next. So that I've already explained in this particular notes very clearly. Right, sir? Every one of you. And in our ICI material, ICI also, so we have seen this statutory update now. And look at this, amendments is given a supplementary study paper for section B. And if you open this, the same thing, the old one you can find out, the old one you can find out. Between 1st May 21 till 30th of April 2022. Right? This is the old one, right, which we have already covered for November 22, but at the same time you should also prepare for May 23 as well. Are you following, sir? Every one of you. Okay, right? So this is what I mentioned here, the first one. Okay, now every one of you. So for examination purposes, you have to prepare this and as well as you have to prepare the statutory updates. Clear? Right, sir. So see you in the next session for the latest statutory updates, which were made effective from 1st of May 2022 till 31st October 2022. Clear, sir? Right. A very good evening, students. Welcome to the straight start taxation classes. We are discussing GST amendments applicable for May 2023 exams and as well as November 2023 exams. Sir, I have already told you that in my earlier videos. For this May 2023, our ICI has issued supplementary study material and statutory updates. Supplementary study material containing the amendments from the 1st of May 21 till 30th of April 2022. Right, sir. So that we have already discussed in the previous sessions. So here it is. This is the supplementary study paper for 2022, which contains the amendments from 1st May 21 till 30th of April 2022. So in my previous session, I have completed this supplementary study paper discussion. Right, sir. Now, today we are going to discuss statutory updates for May 2023. Now, in this statutory updates, we are going to discuss about all the amendments made by the notification and circulars issued between 1st May 22 till 31st of October 2022. Right, sir. So the cutoff date for the May 2023 exams is the 31st of October 2022. So whatever the amendments made effective up to 31st October 2022, we are going to be discussed in this supplementary study material, statutory updates material. Okay, sir. Now let us see one by one. So first, from the chapter Supply under GST. The very first amendment, perquisites provided in terms of contractual agreement to employee not liable to GST. Sir, we have already studied that in the schedule number 3, where the services provided by the employee to the employer in the course or in relation to his employment will not be considered as the supply of the goods or services, and hence GST is not leviable. This we have studied in our regular classes. Right, sir? Schedule number 3. You can check out in our main material as well. Supply under GST, starting from the page number 17. So here it is. In schedule number 3, we have discussed this. Activities or transactions which shall be treated neither as supply of goods nor as supply of services. Neither supply of goods nor supply of services. So means it covered under negative list of services. Negative list. When a particular thing is covered under negative list, it is not a supply. When it is not a supply, not liable to GST. Okay, ma. Now let's go to the schedule 3 directly. Yeah, here it is. Negative list. Section 7, subsection 2, clause A, read with schedule 3. Schedule 3 illustrates a supply which cannot be taxed at all. Now, in that, you can see the very first one, services by an employee to the employer in the course of or in relation to his employment. Okay, mom. So in the negative list, the very first transaction is the services provided by the employee to the employer. So in the course of his employment, that is not liable to GST and not liable to GST. Now the amendment is with respect to perquisites provided by the employer to the employee, whether this perquisite amount is liable to GST? Answer again, no. No. If the perquisite provided in terms of contractual agreement, suppose that, sir, when I am entered into an agreement to contract, right, employment agreement, in that agreement it was clearly mentioned that the employee is eligible for HRA, rent-free accommodation, rent-free accommodation. So my employer providing me a perquisite in terms of the contractual agreement, it was clearly mentioned. As you all know that presently I'm working in a central government PSU, India's largest PSU, Coal India Limited. And as per my terms of agreement of employment, my employer have to provide me the rent-free accommodation. And at the same time, electricity charges also free of cost, right? A minimal charges we will pay, and even towards the rent also we'll pay, but a minimum charges. And children's education facility, a minimum charges we will pay, hardly 10% of the local market fees. Hospital facility, 100% free of cost. Are you following, sir, every one of you? So these are all the perquisites my employer providing to me, but it is a part of a contractual agreement. Since it is a part of contractual agreement, now whatever the perquisites I'm enjoying, they are fully exempted from GST, not liable to GST. Sir, what about a perquisite provided which is not in terms of contractual agreement? Assuming that car facility was not mentioned in my terms of agreement. Basically, in our organization, the car facility is provided only to the, E6, E7, E8 rank officers levels. Deputy general manager level officers are eligible to enjoy the car facility. Suppose that for me also a car is provided, but this car facility is not in terms of contractual agreement. Now, whatever the car facility value comes as a perquisite, that is liable to GST in my hands. Right, sir? Because I'm enjoying a perquisite, but it is not a part of contractual agreement, liable to GST. It's clearly mentioned here only in terms of contractual agreement. Then it is not subject to GST. Clearly, you can see here circular number. A circular has been issued in relation to the clarification. So you can see circular number 172/4/2022. So the circular numbers not required to be remembered, and okay, no need to memorize, no need to reproduce in the main exams. Clarifies issue as to whether the various perquisite provided by the employer to its employees in terms of contractual agreement entered into between the employer and employee are liable to GST. It's a issue, and clarification is given. Schedule 3 of the CGST Act provides that services by the employee to the employer in course in relation to his employment will not be considered as a supply of goods or services, and hence GST is not applicable on services rendered by the employee to the employer, provided they are in the course of or in relation to his employment. Any perquisite provided by the employer to its employee in terms of contractual agreement entered into between the employer and the employee, or in lieu of the services provided by employee. See, why my employer providing me perquisites? Because I'm rendering the services to him. Because of that only my employer is providing me the perquisites. So are in lieu of the services provided by the employee to the employer in relation to his employment. It follows therefrom that perquisites provided by the employer to the employee in terms of, this is important point, in terms of contractual agreement entered into between the employer and employee, and will not be subjected to tax. So the key points here is that the employer should provide the perquisites to the employee as a part of the contractual agreement. Then only it is not liable to GST. Every one of you clear now? Okay, so the key word is that contractual agreement. Next, moving on to the second amendment and the biggest amendment. See, you can observe here we are starting in the page number 2 and this amendment continues till page number 11. Page number 11. Biggest amendment, but there is nothing to, worry out. So the amendment contains 8 pages, 9 pages, nothing is there in this amendment. A very simple provision, but elaborated in a very detailed manner. Not required. Within 5 to 6 sentences, we can complete this amendment. But it's okay. Given there now, let us try to discuss second amendment. Clarification regarding the GST applicability on liquidated damages, compensation, penalty arising out of the breach of a contract or other provisions of the law. So 3 important points. Number 1, liquidated damages. Liquidated damages. Number 2, compensation. Number 3, penalty. Now the question is whether the GST is applicable on this or not. That is the question. Whether GST applicable or not on such liquidated damages, compensation and penalty arising out of the breach of a contract. Breach of contract means breaking up the contract, right? Basically, whenever we are entering into a contract, there are some rules and regulations, right, sir? If we are abiding that all the rules and regulations, well and good, successful performance of contract. But if any one party, there are two parties, contractor and contractee. If any one of the parties to the contract not abide the rules and regulations, that means that is a breach of a contract. Suppose that I have given a contract to a person and I ask him to complete within 1 year. Suppose that if he is not able to complete within 1 year, then he is breaching the contract. Then definitely I will levy some liquidated damages. I'll collect some liquidated damages. So breach of a contract or other provisions of the law. So that is the question, whether the GST is applicable on such liquidated damages, compensation and penalty. Now for this purpose, a notification, a circular has been issued. Circular number 178/10/2022 clarifies the issue with respect to the GST applicability on liquidated damages, compensation and penalty arising out of a contract or other provisions of the law. Now clarification. Now the important point, agreeing to an obligation to refrain from an act or to tolerate an act or a situation or to do an act. There are 3 important points again here. Number 1, agreeing to the obligation to refrain from an act. So we are stopping ourselves from doing a particular thing. The best example, non-compete contracts. The best example for this is non-compete contracts. Suppose that I would like to start my chartered accountancy firm in Himayat Nagar. There is also another chartered accountant who is also want to start in Himayat Nagar on the same colony, on the same apartment, in the same floor. Then I requested him that not to open your office on the same colony, same apartment, same floor. So go for another colony. If you and me started the offices on the same colony, same apartment, same floor, then it will be, a sharing of revenue. Means there will be a competition among us. If I offer a IT filing service for 1000, you may offer for 900. Then by seeing that I may offer for 800, unnecessarily we both lose the revenue, lose the clients. So I'm requesting you to start in another apartment, another colony. So non-compete agreements. Number two, to tolerate an act, tolerance. And number three, to do an act. First one, not doing. Second one, tolerating. Third one, doing. Has been specifically declared to be a supply of service. This is a supply of service. In para number 5E of Schedule 2 of the CGST Act 2017, if the same constitutes supply within the meaning of the CGST Act. So expression agreeing to the obligation to refrain from an act has three limbs. I've already mentioned you three limbs. Number one, refraining from the act, stopping ourselves from doing a particular act. Number two, tolerating the act. And number three, to do the act. Now let us see one by one in a detailed manner. First one, agreeing to the obligation, refraining from the act. I've already tell you the example non-compete agreements, where one party agrees not to compete with the other party in a product or service or a geographical area against a consideration paid by the other party. See, if I requested that person, definitely that person will ask me, okay, I will not start my office here, but if I start my office here, I would have get some 100 clients. Out of that 100 clients, I would have get some 5 lakhs rupees. Now, just because I'm not starting my office here, that 5 lakhs becomes me opportunity cost, and you have to pay me that compensation. Of course, I have to pay him. Otherwise, he will start his office against to my office. So I'm stopping him. I'm refraining him from opening his office against to my office. For that purpose, I need to pay compensation, consideration. Yes, I have to pay. So another example of such activities would be a builder refraining from constructing more than certain number of floors, even though permitted to do so by the municipal authorities. Suppose that there are two buildings are under construction. A building with 6 floors, and immediately behind this building, one more building construction is going on. A building with 4 floors. Both the buildings are under construction. The first building builder is Mr. X. Second building builder is Mr. Y. Now the second building builder, Mr. Y, requesting Mr. X, dear Mr. X, if you construct this building with 6 floors, and right behind your building is my building, which containing only 4 floors, there will be a huge problem for my building. What is the problem, man? Sir, your building is 6 floors. My building is 4 floors. How come the sunlight will come into my building? Your building will stop the sunlight So my building won't get a sunlight. So if there is no proper sunlight into the building, then there are no parties come forward and no parties will book the flats. It will be a huge loss for me. So please restrict your building construction only to the 4 floors. So thereby, both of us, our buildings will get the proper sunlight. So then actually Mr. X got the permission from the municipal authorities. The municipal authority issued the issued the permission to construct the building with 6 floors. You have every permission with you. So Mr. X said, why? Why should I stop my building construction to the 4 floors only, where I have the permission for 6 floors? If I construct this additional 2 floors, there will be 20 flats out of it. For every floor, I am constructing 10 flats. In this 2 floor, I will be able to construct 20 flats. If I sold 20 flats, there will be approximately 2 crores profit for me. And you're asking me to stop the construction at 4th floor only, then the 2 crores will become an opportunity cost for me. Will you pay me the 2 crores? Mr. Y have to pay the 2 crores. Otherwise, Mr. X will construct 6 floors and Mr. Y building won't get any proper sunlight and his flat won't be sell out. No. So that's why here Mr. Y have to pay a certain consideration to Mr. X. So that's what mentioned here. Against a compensation, against a compensation paid by the neighboring housing project which wants to protect its sunlight, or the industrial unit refraining from manufacturing activity during certain hours against an agreed compensation paid by the neighboring school which wants to avoid noise during those hours. So there is an industrial undertaking. For this nearby, there is a school. This is an industrial undertaking, and this is a school. Now, during the school working hours, so the school management requested the industrial undertaking not to make any noise. Please stop your production during my school hours. So then the industry said, why should I? I have the permission to do so. If you want me to stop, you have to pay me compensation. Because you're refraining him from doing the manufacturing activity. Without manufacturing, he cannot sell his product. Without selling, he cannot generate the profits. Without profits, he cannot go for expansion. So you're stopping from all this activity for which you're supposed to pay a compensation. So this is what obligation to refrain from an act. 3 examples: non-compete agreements, builder example, and industry example. Clear? Next one. Agreeing to an obligation to tolerate an act or a situation. To tolerate. Example that, sir, in a main road, this is a main road which with a fully crowded area like our Amirpet, like our Panjagutta. Other state students, please don't mind. I am from Telangana and from Hyderabad. So I can take the examples of the places which I know very well. Right, sir? So in this very busy circle, I have a shop. This is my own shop premises. Now, in front of my shop, there is an hawker who asked me a permission, sir, in front of your shop, I would like to open a tea stall or a pani puri stall. It's a fully crowded area and your shop is pretty famous, sir. So, for your shop, there are hundreds of customers regularly coming and going. So if I put my pull cart here containing the tea or, pani puri, it will be a good business for me. Please allow me to operate from the common payment in front of your shop. So then I said, okay, fine. I don't have any problem with your bullet card, but you have to pay me a rent every month. Since I'm allowing you to do your business in my premises, you're supposed to pay me a rent. You have to pay me rent of 10,000 per month. Okay, fine, sir. I'll give you 10,000 per month. See, you might have observed in front of the big stalls, malls, there are some pani puri bandis or tea stalls or juice parlors, fast food centers, especially in front of the D-Mart, especially in front of the very big malls like Next Galleria Mall, like, City Center Mall, like, our Prasad Max. Yes or no, sir? So we are tolerating an act here. What is you are tolerating? Since there is a tea stall, there will be huge people will crowd it, and that may disturb your customers. That may occupy the premises of your parking place. So there is some disturbance, and you're tolerating that disturbance. And of course, you are not tolerating it free of cost. You are taking certain amount for that. Are you following, sir? Every one of you. Okay. And at the same time, there is a residential welfare association. Means an apartment is there. I already told you that for every apartment, there is an association called Resident Welfare Association. Now, exactly adjacent to that particular apartment, there was a school. Now, basically, every day morning, before the classes are starting, there will be prayers, school anthem, national anthem, pledge, everything. Right, sir? Now, every time the prayer is going on, the school using the loudspeakers, whereby the apartment people are getting disturbed. So every time whenever there is a prayer is going on, resident welfare association people are coming and complaining because of the loudspeakers we are getting disturbed. Now the school requested, sir, it is only for 20 minutes or 30 minutes till the prayer complete. So please excuse us, please tolerate us. Okay, we'll tolerate you, but you have to pay certain compensation to us. And the school is ready to pay the compensation to tolerate an act. So the same examples are given here. This would include activities such as a shopkeeper allowing a hawker to operate from the common payment in front of his shop against a monthly payment by the hawker, or an RWA, Resident Welfare Association, tolerating the use of the loudspeaker for early morning prayers by a school located in the colony, subject to the school paying agreed sum to the Resident Welfare Association. There's the second case. Now the third case, agreeing to the obligation to do an act. This would include, sir, again the same example. There is an industrial undertaking. There is an industrial undertaking, a factory, and nearby factory there is an apartment. There is an apartment. Sir, every time the factory manufacturing its products, there will be a pollution arising from out of it. Right, sir? Now, because of that pollution, the people from the apartment are getting illness. They are feeling sick. Now, the apartment people requested that factory to use certain equipments for the zero emission or discharge the pollution at the lowest levels. Actually, sir, whatever the manufacturing activities undertaken by the industry here, they are, whatever the pollution they are getting generated, that is acceptable by the government. See, for everything, there are some certain limits. Now here, whatever the pollution emitting by the factory here, that is well in control, well within the limits only. But even though the apartment people are getting sick, see, there is absolutely no obligation to use the equipments for the zero emission or zero discharge of the pollution. But still, on request of the apartment, the factory agreed to do so. Sir, the factory people said, the management of the factory said, we are ready to install the zero emission equipments, but it costly 10 lakhs to us. If you're ready to pay us 10 lakhs, we will ready to install zero emission equipments. Now the Resident Welfare Association has to pay that 10 lakhs to the factory. Are you following, Seth? So look at here. This would include a case where an industrial unit agrees to install equipments for zero emission or discharge at the behest of the RWA of a neighboring residential complex against a consideration paid by such RWA, even though the emission or discharge from the industrial unit was within the permissible limits and there was no legal obligation upon the industrial unit to do so. There is no legal obligation at all. Are you following, everyone? But still, on request of the Resident Welfare Association, the industry is ready to do so. But for purchasing the equipment, they need money. And they demanded the money from Resident Welfare Association. And of course, Resident Welfare Association is ready to pay. This is agreeing to the obligation to do an act. Next. Above three activities must comply with the following conditions. What are the? Number one, there must be an expressed or implied agreement of contract must exist. See, whatever the three things, three limbs we have discussed so far, agreeing to refrain from an act, agreeing to tolerate an act, or agreeing to the obligation to do an act, there must be an agreement. All the above three activities must under an agreement or a contract. It must be an express contract or employed contract to fall within the ambit of para 5E of the Schedule 2. In other words, one of the parties to such agreement or contract must be under a contractual obligation to either refrain or tolerate or to do. So between the factory and resident welfare association, there must be an agreement or a contract. Between the shopkeeper and hawker, there must be a contract. Between the two builders, there must be a contract. Are you following, Amma? Next, such contractual arrangement must be an independent arrangement in its own right. Such arrangement or agreement can take form of an independent stand, a loan contract, or may form part of another contract. Absolutely no problem. Sir, for accepting that the hawker can have his business in the common payment, right? So we entered into an agreement. That agreement can be an independent agreement or can be forming part of the another agreement. Absolutely no problem. Are you following, sir? So you can see here, thus a person, that is the first person, can be said to making a supply by way of refraining from doing something or tolerating some act or situation to another person if the first person was under an obligation to do so and then performed accordingly. Such contract cannot be imagined or presumed to exist just because there is a flow of money from one party to another. Sir, I am paying amount to that industry and industry installed an equipment for zero emission. So the work done, job done. So just because of that, we cannot assume or we cannot imagine there is a contract between them. Sir, the hawker is paying me every month rent of 10,000 rupees. I'm allowing him to do his business from the common payment in front of my shop. So job done. So because of this, we cannot assume there is a contract or agreement between that hawker and shopkeeper. Since there is a flow of money, there is a contract. No, the contract must be express or implied. There must be an express or implied promise by the recipient of money to agree to do or abstain from doing something in return for the money paid to him. Next, consideration must flow in return to his contract or agreement. There must be consideration. First point, there must be contract, whether it is expressed or implied. Second point, there must be consideration. There must be consideration. See, unless and otherwise the hawker paid to me the rent of every month, I won't allow him to do the business in front of my shop. Unless and otherwise builder Y paid an amount to builder X, builder X won't construct the remaining 2 floors or 4 floors. Yes or no? If the builder Y pay the consideration, then only Mr. X will stop his construction to the 4th floor. If the hawker pay the amount to the shopkeeper, then only the shopkeeper allows him to do the business in the common payment in front of his shop. So there must be consideration. Some consideration must flow in return from the other party to this contract or agreement. Right, sir? Now, taxability of some of the transactions has been discussed in detail as under. First one, liquidated damages. See, do you remember we have seen 3 things: liquidated damages, compensation, penalties, and how they are going to be taxable. Now we are going to discuss liquidated damages. It is common for the parties to entering into a contract and to specify in the contract itself the compensation that would be payable in the event of breach of the contract. See, in every contract, you can see the terms and conditions of every contract. Terms and conditions of every contract. There must be a penalty clause. There must be a liquidity damages clause. In case of breach of the contract by any of the party to the contract, they are supposed to pay this much amount of the liquidity damages. Are you following or not, sir? It's very common, right? You might have studied this in your childhood while you started studying the Contract Act in your CA foundation level. Black's Law Dictionary defines liquidated damages as cash compensation agreed to by a signed written contract for the breach of the contract payable to the aggrieved party. So the taxability or otherwise of the liquidated damages is classified as under. It is argued that the performance is the essence of the contract. Yes. Liquidated damages cannot be said to be a consideration received for tolerating the breach or non-performance of contract. See, I am receiving the liquidated damages, right, sir? But these liquidated damages I'm receiving not for tolerating the breach or non-performance of contract. See, generally we will put the clause in the agreement in order to make alert the parties to the contract. Babu, if you do the breach of contract, this is your penalty. But I'm not saying that do the breach of contract and pay me the penalty. That doesn't mean that. Yes or no? If I include a penalty clause in the agreement, that doesn't mean that I'm enforcing the other party to do so. Are you following or not? So my intention behind putting the liability clause, damages clause is to alert my party so that he complete the contract within the time, so that he cannot breach the contract. Are you following or not, Amma? So that's why I am receiving this liquidated damages for not tolerating the breach of the contract. Yes or no? Right? So they are rather payments for not tolerating the breach of contract. Why should I tolerate, ma? If he breaches the contract, there will be some damage to me. Suppose that I have given the construction of a building and the builder said to me that within 6 months, I'll construct the building and hand over to you. We entered into an agreement, but as agreed, as promised, the builder was not constructed the building within a period of 6 months. He took 8 months time, 2 months extra time he taken. Now, because of that, there is a breach of a contract, because in the contract he agreed to construct the complex by 6 months, but he taken 8 months, 2 months delay. Now, because of this 2 months delay, there is a huge amount of the interest loss to me, rent loss to me. Suppose that if he completed within a period of 6 months, right, sir, immediately I would have given that building on a rental basis. I would have received a rent of 20,000 per month. Now, just because of the 2 months delay, 2 months into 20,000 per month, 40,000 loss of rent to me. And this has happened because of the breach of the contract. So why should I tolerate this? That's why I'm collecting liquidity damages. Are you following or not? So payment of liquidity damages stipulated in a contract to ensure the payment performance and to deter the non-performance or unsatisfactory performance or delayed performance. If I put a penalty clause, then only with that fear of the penalty, you will complete within the time under. Yes or no? Every one of you. Right? Suppose that in a simple language, you are writing CA exams under May 2023. And examination fee amount was announced by the ICAI. Suppose that if there is no deadline, no due date, no penalty for the delayed payment of examination fees, then what you will do? If the exam starts on May 1st, you will pay the exam fee on April 30. Immediately, just one day before your exams. Yes or no? Right? So that's why there is a deadline. That's why there is a late fees for the payment of the examination fee belatedly. Yes or no? See here, the intention of the ICI putting the late fees for the delay in payment of the examination fee is not to enjoy your late fees, but make to ensure that, okay, the student will pay the examination fees well within the time given. Are you following or not? Right. So that's what explained here, and the payment of the liquidated damages is stipulated in the contract to ensure the performance of the contract well within the time, and to deter, to cut non-performance or unsatisfactory performance or delayed performance. Next, liquidated damages are a measure of loss and a damage that the parties agreed would arise due to breach of contract. They do not act as a remedy for the breach of contract. Of course, it is not at all a remedy, sir. Right? They do not restitute the aggrieved person. See, whatever the liquidated damages paid by the contractor to me, it is not a remedy for me. As he agreed in the contract, he is paying to me. That's it. A contract is entered into for execution and not for its breach. Very important point. So whenever you are entering into a contract, it is for execution only, not for its breach. Are you following or not, every one of you? The liquidated damages or penalties are not the desired outcome of the contract. I'm not expecting any liquidated damages, any penalty. I am just expecting the completion of the contract within a time. That's it. That is not the desired outcome I'm expecting from the contract. Are you following or not? By accepting the liquidated damages, the party aggrieved by the breach of the contract cannot be said to have permitted or tolerated the deviation or non-fulfillment of the promise by the other party. Sometimes, even after the payment of the liquidity damages, I'll go to the court of law against my contractor. Just because he paid me the liquidated damages, I'm not tolerating this breach of contract. Are you following or not, Amma? Right. So where the amount paid as liquidated damages is an amount paid only to compensate for injury or loss or damage suffered by the aggrieved party due to the breach of contract, and there is no agreement, important point, no agreement expressed or employed by the aggrieved party to receiving the liquidity damages, to refrain from or to tolerate an act or to do anything for the party paying the liquidity damages. In such cases, liquidity damages merely a flow of money from the party who causes the breach of contract to the party who suffers loss, damage due to such breach. And such payments do not constitute the consideration for a supply and are not taxable. Very, very important point. Very, very important point. Sir, for receiving the liquidity damages, for receiving the penalty, no one will enter into a contract. No one will enter into a contract. Right? Suppose that the same example I'm continue. Me and my builder entered into an agreement where my builder agreed to complete the construction within a period of 6 months. If the construction not completed within a period of 6 months, then the builder agreed to pay me the liquidated damages, which constitute 20% of the agreement value. Right? Suppose that the agreement value is 50 lakhs rupees. 20% of it comes out to be 10 lakhs. Okay now, right? So if the agreement, if the construction completed well within the time period given by me to the contractor, that is 6 months, then the contractor under no obligation to pay me any liquidated damages. First, suppose if the contractor, if the builder not able to complete the construction within the period of 6 months, then he has to pay me 10 lakhs rupees. Suppose that the contractor said, sir, definitely this construction will not be completed within a period of 6 months. Let us, both of us, entered into another agreement for the liquidated damages right now, immediately. So who the hell will enter into a contract, sir, for the liquidated damages? And why the hell the contractor saying immediately on the day of the original contract that the construction will not complete within a period of 6 months? If he is of that opinion, he immediately asks for, sir, 6 months time limit is not sufficient. Give me 1 year. Then we would have entered into for 1 year. Yes or no? See, if he's confident, sir, this is a very big construction, sir. It requires at least 1 year time. Had he said to me, I would have given him 1 year time limit. Yes or no? No, on the day of agreement itself, the contractor said, the builder said, sir, not possible to complete in 6 months. Anyhow, I will pay the liquidated damages for you, 10 lakhs. So let us enter into an agreement for that also. Two agreements, one original agreement, two liquidated damages agreement. No, no one will enter like that. Suppose that, sir, I'm joined here in this organization in September 21. And there is a bond between me and my organization for 5 years. Service bond. We call it a service bond. 5 years. So that means when I signed that bond, I promised to this organization that I'll work for this organization for 5 years. But at the time of signing of the original bond, I cannot say to my employer, okay, employer, max, I will work here for only 2 years. So that means I'm going to break the bond, the service bond of 5 years, right? So let's enter into an agreement for another. Let's enter into an agreement for the, retention of the bond money. Retention of the bond money. See, if we break the bond now, whatever the money cutting from my salary every month, that is 5,000 rupees per month, will be deducted in the form of bond money, service bond, of course, which is refundable to me and after the successful completion of 5 years of service period, right? So 5,000 per month, yearly 60,000, and for 5 years, it will be 3 lakhs. The entire amount of 3 lakhs will be refunded to me after 5 years successful completion of the 5 years. But if I've resigned from this particular job within a period of 5 years, whatever the bond money so deducted, that will be retained. Suppose that within 2 years, I have resigned from this job. Within 2 years, how much? 60,000, 60,000, 1,20,000 retained by the company. And moreover, I need to pay the additional bond money of 1,80,000. So the total I need to pay 3 lakhs Sunday, out of which already 1,20,000 in the form of service bond money, it was deducted from my salary. It was with the company only. The company will retain that amount. And after that, the company asked me to pay the additional 1,80,000. So at the time of signing the agreement for the 5 years, I cannot ask my organization to enter into another agreement so that I am just leave this company within 2 years only. So enter to that contract also, and for the retention of the my service bond money. No, no one will enter into such contract. Are you following or not, Amma? Right? So generally, just now we have discussed, in order to treat refrain to refraining one from doing an act or tolerating an act or obligation to do an act, in order to cover all these three things into the supply of services, there are certain conditions we have seen. There must be an agreement, a contract, and there must be consideration. Here, with respect to liquidated damages or penalties, there is no contract at all. So when there is no contract, how come that liquidated damages, penalties liable to tax? That's what mentioned here and clearly. Right. Such payments do not constitute consideration for a supply and are not taxable. So the important point here is that liquidated damages, penalties are not subject to GST. Examples of such cases: damages resulting from damage to property, negligence, piracy, unauthorized use of the trade name or copyright, penalties stipulated in a contract for the delayed construction of houses, forfeiture of earnest money. The same examples. The key in such cases is to consider whether the impugned payments constitute consideration for another independent contract. See, if there is a contract, it is a supply of service liable to GST. If there is no contract, not liable to GST. As simple as that. So constitute consideration for another independent contract, envisaging, tolerating an act, situation, or refraining from doing any act or situation, or simply doing an act. If the answer is yes, there is a contract, there is a contract, there is a consideration. Yes, it constitutes supply and liable to GST. Then it constitutes supply irrespective of by what name it is called. Otherwise, it is not a supply. So the important point here is that there must be an independent contract and there must be a consideration. If the payment is merely on an event in the course of the performance of the agreement and it does not represent the object as such of the contract, then it cannot be considered consideration. Example chundamma. On the contrary, consider the following example. A contractor may provide the payment by the recipient of the goods or services shall be made before a certain date, and failure to make the payment by the due date shall attract a late fees or penalty. A contractor for transport of passengers may stipulate that the ticket amount shall be partly or wholly forfeited if the passenger does not show up. Suppose that you book a ticket in a railway IRCTC. The ticket got confirmed, but on the date of the journey, you're not turned up. You have not undertaken journey. Then you have cancelled your ticket. Depending upon the time in which you have cancelled your ticket, like we have the time limit now. If you cancel the ticket within 24 hours, within a maximum period of 24 hours from the journey day time, within 48 hours from the journey time, so there will be some percentages, 75% of the money refunded, 50% of the money refundable. Yes or no? So that means certain percentage forfeit by the IRCTC. And next, a contract for the package tour may stipulate forfeiture of the security deposit in the event of the cancellation of the tour by the customer. Suppose that in the month of April, I have planned a Kerala trip. Right, sir. I would like to see the Munnar, Alleppey. Okay. But unfortunately, what happens? In the month of April, I was busy with the audit, Q4 audit. Year-ending audit will obviously it will take the larger time when compared to Q1, Q2, Q3 audits. Okay. So I may not attend that tour. So I've cancelled that particular tour package. But whatever the advance money I have paid, security deposit, that will be forfeited. A contract for lease of movable or immovable property may stipulate that the lessee shall not terminate the lease before a certain period, and if he does so, then he will have to pay certain amount. Premature of the contract. Suppose that we enter into the lease agreement for 10 years. If the lessor terminates the agreement within a period of 5 years, then he has to pay the compensation. Some banks similarly charge prepayment penalty if the borrower wishes to repay the loan before the maturity of the loan period. Suppose that, so recently I purchased a car, sir, and I have taken a loan for 7 years. Suppose the entire amount of the loan I have completed within 4 years. Right, sir? So prepayments. Of course, nowadays for the prepayments, there are no banks collecting penalties only. In the olden days, it used to be, right, sir? Now, for the prepayments, there are no penalties at all. Suppose that if the penalty collected by the banker. Now, in the above examples, amount paid for acceptance of the late payment or early termination of the lease or for prepayment of the loan or the amounts forfeited and cancellation of the services by the customers. As contemplated by the contract as part of commercial terms agreed to by the parties, constitute consideration for the supply of the facility, name of the later acceptance of the late payment, early termination, prepayment of the loan or making arrangement, supply or tour operator respectively. Therefore, such payments, even though may be referred to as fine or penalty, are actually payments that amounts to consideration for supply and subject to GST. In cases where such supply is taxable. See, of course, these are ancillary activities only. If your principal supply is taxable, then these ancillary activities will also be taxable. If your principal supply is exempted, of course, this ancillary activities also exempted. And are you following or not, every one of you? Right. Since these supplies are ancillary to the principal supply, for which the contract is signed, they shall be eligible to be assessed as a principal supply. Naturally, such payments will not be taxable if the principal supply is exempted. That's what I've said already. Are you following now? See, generally, majority of the banking transactions are exempted from GST and are you following, Amma? Now, whenever I'm paying a penalty for the prepayment of the loan, see, loan repayments are exempted. For your kind information, loan repayments are exempted. So when my principal supply is exempted, whatever the penalty I have paid for the prepayment of the loan also exempted. Are you following now? Every one of you. Next. Check dishonor, fine or penalty. Sometimes whenever you are issuing a check, you must be very, very careful, right? Suppose that you have issued a check on a post date, but on the date of the honoring of the check, your bank account not having sufficient balance. What happens? The check will be dishonored. Whenever the check is dishonored, then the bank will levy a penalty on you. Bank will levy a penalty, a fine on you. Now the question, whether that fine or penalty is subject to tax, subject to GST. Answer is no, not liable to GST. Just now I've already told you, many of the banking services are exempted. When your principal supply exempted, of course your ancillary supply is also exempted, right? So the supplier wants the payment to be received on time and does not want the check to be dishonored. So there is never an implied or express offer or willingness on part of the supplier that he would tolerate deposit of an invalid, fake or unworthy instrument of the payment against the consideration in the form of a check, dishonor, fine or penalty. So the fine or penalty that the supplier or a banker imposes for dishonor of a check is a penalty imposed not for tolerating the act or a situation, but a fine or penalty imposed for not tolerating or penalizing, thereby deterring or discharging or discouraging such act or situation. Sir, here the banker said, okay, supplier, you are giving me check to me. If this check is dishonored, I will levy a penalty of 10,000 rupees on you. So when I said this, definitely the supplier will be alert. Okay, unnecessarily, if I don't keep the balance on the date of the payment, the check will be dishonored and I supposed to pay 10,000 rupees. Why? So let us keep the balance on the payment date. So here the banker leaving the 10,000 rupees in order to make the alert, the contractor before he is issuing a check. So the contractor will make sure that on the date of the payment, his account will have the sufficient balance. And there is no agreement between the banker and the contractor who is issuing the check, the supplier who is issuing the check. No contract. For this, levy of the fine or penalty for dishonoring of the check. No contract. So not a supply and not liable to GST. Therefore, check dishonor, fine or penalty is not a consideration for any service and not taxable. Next. Penalty imposed for the violation of the laws. This point we already knows for the non-compliance of any law, for violation of the any laws. If we happen to pay any penalty, that penalties are not taxable. That penalties are not taxable. So penalty imposed for the violation of laws such as traffic violation, for violation of pollution norms or other laws are also not consideration for any supply received and are not taxable. Since I am from the mining industry and I'm very happy to see there is a mining example, right? Sir, whenever we are digging the coal from a mine, first of all, we need to obtain the permissions from the various authorities, and one of the most important authority is DGMS, Directors General of Mines Safety. We need to take the permissions from Environment Department. We need to take the permissions from Forest Department. We need to take the permissions from Minerals Department. We need to take the permissions from Pollution Control Department. So from various departments, various authorities, we need to take the permissions. Suppose that the state government or the central government given us the permission to extract the coal to the extent of the 1 million tons. 1 million tons within a period of 2 years. 2 years is a contract, and within 2 years, we are permitted to extract the coal to the extent of the 1 million tons. Suppose that at the time of entering into the original contract, I've said to the government, dear government, wait. I would like to extract coal to the extent of the 1.5 million tons. So I'm going to violate the rules and regulations you put on me. You given me permission only for extracting 1 million ton coal, but I would like to extract 1.5 million ton coal. 1.5 million ton coal. Now tell me what is the penalty, and let us enter into an agreement with respect to this penalty. No one will do that. If you said like that now, then immediately the DGMS cancel your permission. Idiot fellow, I'm giving you only permission for extraction of the 1 million ton, and you are saying me in front of me 1.5 million ton. How dare you? Yes or no? Right. So the same is case with the fines and penalties imposed by the mining department of central or state government or local authority on discovering mining of excess mineral beyond the permissible limit or of mining activities in violation of the mining permits. So laws are not framed for tolerating their violation. Laws are not created for the tolerance of violation. Okay, ma, 1.5 million ND, you can extract up to 2 millions. We are giving some exceptions in the law. No law permits to do so. Not permit. They stipulate the penalty not for tolerating the violation, but for not tolerating, penalizing, and deterring such violations. There is no agreement between the government and the violators specifying that the violation would allowed or permitted against the payment of the fine or penalty. Hey, what are you talking, man? I'm going to extract 1.5 million ton. What do you want? Penalty? Take this and get out. Is there any agreement for penalty? Is there any agreement for fine? No. So there cannot be such an agreement as violation of law is never a lawful object or consideration. In short, fines and penalties chargeable by the government local authority imposed for the violation of a statute, bylaws, rules or regulations not leviable to task. Simple funda, amma. If there is an agreement, if there is a consideration, whatever the amounts you received in any form, in any name, liable to GST. However, if there is no contract at all, no agreement at all with respect to the fines and penalties, then they are not forming part of consideration. They are not taxable. Next, forfeiture of the salary or payment of the bond amount in the event of the employee leaving the employment before the minimum agreed period. This point I've already explained to you. I've already given an example, my own example. We have a service bond period of 5 years. Every month salary, in every month salary, 5,000 rupees will get deducted from our salary every month. Like that for 5 years. So total comes to be 5,000 per month into 12 months into 5 years. 3 lakhs rupees. Bond money will be deducted from our salary over a period of 5 years. Over a period of 5 years. And this, after the successful completion of service for 5 years, this entire amount of 3 lakhs will be refunded to us. But of course, if I've terminated within 2 years, resigned, not terminated, resigned within 2 years, or within 3 years, or within 4 years, then in our service agreement, service bond agreement, there is clearly mentioned that if the employee resigned within a period of service agreement period, that is 5 years, then whatever the bond money so far deducted, that will be forfeited, and the remaining money will be recovered from the employee benefits. Okay, now, right? Sir, here, whether the forfeiture of salary or payment of the bond money, whether this is taxable, no, not liable to GST again, because there is no contract. If I said to my employer, okay, dear employer, I will be here only for 2 years. Anyhow, you are going to collect from me the bond money. So let's enter into a contract for this bond money retention and recovery. No one will enter that, so no. So that's why it is not taxable. And you can see the provisions for the forfeiture of salary or recovery of the bond amount in the event of the employee leaving the employment before the minimum agreed period are incorporated in the employment contract to discharge non-serious candidates from taking up employment. Sir, here, why the employer putting this condition on it? If any employee leaving the organization within the service agreement period, then whatever the, that amount deducted in the form of bond money, that will be forfeited. Why he is putting that condition? Because he wants only serious employees. He wants the employees only who are going to associate with him for a longer period. That's the main intention behind putting that condition. Yes or no? The said amounts are required by the employer not as a consideration for tolerating the act of such premature quitting of employment, but as penalties for discarding the non-serious employees from taking up the employment. I don't want the employees who will resign within 1 year or 2 years. The doors are not open for them. Right, sir? Further, the employee does not get anything in return from the employer against the payment of such amounts. Therefore, such amounts recovered by the employer are not taxable as consideration for the service of the agreeing to tolerate an act or a situation. I've already said not taxable. Next, late payment of the surcharge or fees. The facility of accepting the late payments with interest or late payment fee, fine or penalty is a facility granted by the supplier naturally bundled with the main supply. It is not uncommon or unnatural for customer to sometimes miss the last date of payment of electricity, water, telecommunication services. Almost all service providers across the world will provide the facility of accepting the late payments with a late fine or penalty. So even if this service is described as a servicing of tolerating an act of the late payment, it is an ancillary supply naturally bundled and supplied in conjunction with the principal supply and therefore should be assessed as the principal supply. See, whenever you are paying the electricity charges belatedly, you're supposed to pay the late fees. Whenever you are missed the due date of the payment of water bill, you're supposed to pay the late fees. It is an ancillary activity to the principal supply. So now whatever the provisions applicable to the principal supply, the same provisions applicable to this ancillary activity also. Now the question arises, so whether this late fees I am paying, whether this is liable to GST, it purely depends upon the liability of your principal supply. If your principal supply liable to GST, this ancillary activity is also liable to GST. If your principal supply not liable to GST, this ancillary activity is also not liable to GST. Suppose that I miss the due date of the payment of the electricity bill. I miss the due date of the payment of the electricity bill. I have paid a late fees of 100 rupees. Now, whether these 100 rupees are liable to GST? No, sir. Because electricity supply is an exempted supply. So when my principal supply is exempted, my ancillary supply is also exempted. Right, sir? Sir, telecommunication services. I miss the due date of internet monthly rentals. I paid a late fee of 200 rupees. Whether this 200 taxable? Yes. Because my principal supply, telecommunication services taxable at 18%. So as my late fees at the rate of 18%. Are you following or not, Amma? Since it is ancillary and not naturally bundled with the principal supply, such as of electricity, water, telecommunication, cooking gas, insurance, etc., it should be assessed as same as the principal supply. However, the same cannot be said of check dishonor, fine, penalty as discussed earlier. Check dishonor, that's something different that I've already discussed. Next, fixed charges of the power. So generally, whenever you observe the electricity bill, there is some tariffs. The initial tariff will be the fixed price charged and irrespective of your usage, a minimum amount of the bill will be charged. Minimum. Suppose that the minimum bill is 200 rupees Sunday. 200 rupees. So up to 100 units, 200 rupees is the bill. So whether you consume 100 units or not, you have to pay the 200 rupees. This is what we call fixed charges of the power. And beyond 100 units consumption, the tariff will comes into picture. 100 to 150 units, 10 rupees per unit. 150 units to 200 units, 15 rupees per unit. Yes or no? Have you ever observed that electricity bill? See, nowadays, everything is online. In the olden days, we used to stand in a long standing queues in front of the electricity department. And generally, as we are Indians, right, we always awake on the last day of the due date. Yes or no? See, whenever you got an electricity bill, it contains a time period of 30 days under. Right? So day 1 to day 29, you will sleep. Time on the late, time on the late, time on the late. There is a lot of time we will pay. And you will definitely wake up only on the last day. Oh shit. Today is the last date for the payment of the electricity bill. So then immediately you ran to the electricity department, and there are so many people like you. Yes or no? Right? So I used to stand in the long standing queues. But nowadays it's purely on your fingertips. You can pay in your mobile phone, no need to go anywhere. Right? So the fixed charges of the power. You can see the price charged for the electricity by the power generating companies from the SEBs, state electricity boards, and DISCOMs, distribution companies. DISCOMs means power distribution companies, right? From individual customers or by SEBs and DISCOMs from individual customers has two components, namely a minimum fixed charge. Irrespective of your usage, minimum you have to pay this much of amount, and variable per unit. The fact that minimum fixed charges remains the same whether the electricity is consumed or not, or it is scheduled or consumed below the contracted or available capacity or a minimum threshold, does not mean that minimum fixed charge or part of it is a charge for tolerating the act or not scheduling consuming the minimum contractor or available capacity or a minimum threshold. Both the components of the price, the minimum fixed charge and the variable energy charges, are charged for the sale of electricity and are thus not taxable, as electricity is exempted from GST. I've already mentioned you. Since your principal supply, the electricity is exempted, whatever the late fee you are paying, that is also exempted. Whatever the electricity charges you are paying, that is also exempted. Are you following, Amma? Next, cancellation charges. It's a common business practice for suppliers of services such as hotel accommodation, tour, travel, transportation, etc., to provide the facility of the cancellation of the intended supplies within a certain time period on payment of the cancellation fees. This also I've explained you the example of IRCTC. You booked a ticket. I've already explained you, right? I booked a ticket, but on the date of journey, I was not turned up for the journey. I was preoccupied with the work and unable to do my journey. So I've cancelled my ticket. I have cancelled my ticket. There are certain cancellation charges levied on me. Whether such cancellation charges liable to GST? I've already mentioned you. It's again an ancillary supply. What is your principal supply? Transportation of passengers by railways. Whether it is taxable or not. General class exempted. Second sitting exempted. Sleeper class exempted. First AC, second AC, third AC, chair car taxable. So if I book a ticket in second sitting and I've cancelled it and cancellation charges levied on me, and such cancellation charges are exempted. Since second sitting an exempted service. Sir, I booked a ticket in second AC, but I've cancelled due to some work. Cancellation charges levied on me. Now such cancellation charges liable to GST because transportation of passengers by railway in a second AC coach liable to GST. Since my principal activity is liable to GST, my ancillary activities of cancellation charges also liable to GST. Following or not? The same explained here with the examples only, right? So the simple thing is that if your principal service is liable to GST, then your ancillary service is liable to GST. As long as your principal supply is not liable to GST, then your ancillary services are not liable to GST. So the example same we have discussed here. Cancellation charges of railway tickets for a class would attract GST at the same rate as applicable to the cost of class of travel. That is 5% GST on first class air conditioned coach ticket and nil for other classes such as second sleeper class. Same is the case for air travel. Air travel services are always taxable. And suppose that if I book a ticket from Hyderabad to Delhi, a flight ticket for 10th of March, but because of my illness on 10th of March, I was not able to make the journey, so I have cancelled the ticket. And such, because of that cancellation, I supposed to pay some cancellation charges. Now, whether this cancellation charge is taxable? Yes. Since my air traveling services, my principal services taxable at 18%, my cancellation charges also liable to GST at 18%. Clear, Amma, everyone? Right. So the same is explained here, Amma. That's it. So with this, we have completed the amendments from the chapter supply under GST. Okay, sir. Right. So I'm winding up the session here. I'll continue the amendments from the chapter charge of GST in the next session. Clear, sir? Till then, have a good day and good night. A very good evening, students. Welcome to the Straight Start Taxation classes. We are discussing GST amendments for May 2023 examinations. Right, Ma? So statutory updates, an additional material given by the ICI Institute, which contains the amendments from 1st of May 2022 till 31st of October 2022. Right, sir. In last session, we have completed the amendments from the chapter supply under GST. Now the time for chapter number 3, that is charge of GST. So let us discuss the amendments from the chapter charge of GST. First one, it is regarding the concept of composition scheme. And this amendment, if you remember, we have already discussed in the GST supplementary study material. I've already told you that this time IC has given two amendments materials. Instead of amending the main material, two amendments materials was given, one in the form of supplementary study paper and the other one in the form of statutory updates. So in the supplementary study paper itself, we have already discussed this particular amendment. Let me show you that. So this is supplementary study paper given by the institute initially, right, sir? And this we have already completed our discussion, sir. Yeah, this is amendment, same amendment. Manufacturers of fly ash bricks, blocks, building bricks, bricks of fossil mails, earth and roofing also ineligible to opt for composition levy. The same amendment, this is supplementary statutory updates material. You can see here statutory updates for May 2023. Now in this material, the same amendment you can observe. Manufacturers of fly ash bricks, blocks, building bricks, bricks of fossil mills also ineligible for opting the composition scheme. Same amendment. We have already discussed on it. See, it's okay, no problem. I'll reiterate once again. See, generally, composition scheme, there are already a list of suppliers who are not eligible for composition scheme. right? So we have seen that the manufacturers of the following goods cannot opt for composition scheme. Who are they? Ice cream and other edible oils, whether or not containing cocoa, the manufacturers of pan masala, manufacturers of the tobacco or tobacco manufactured substitutes, or manufacturers of the aerated water. Earlier, only these people are not eligible to obtain the composition scheme. Not eligible for composition scheme. Now, this list has been increased. Earlier, only 1, 2, 3, and only 4 suppliers are made ineligible for the composition scheme. Made ineligible for the composition scheme. Now, the list increased. 4 more items added. 4, 5, sorry. Already 4 members are there now. 5, 6, 7, 8. So this is latest amendment. Fly ash bricks, fly ash aggregates, fly ash blocks, bricks of fossil males, similar siliceous adds, building bricks, earthen roofing oils. Even these people also now not eligible for composition scheme. Not eligible for composition scheme. Are you following, sir? Every one of you. Right? Next. Now moving on. Next one. Amendments in the list of the notified services, tax on which is payable under reverse charge by the recipient. In the chapter number 3 itself, we have discussed a reverse charge mechanism. Reverse charge mechanism, right, sir? Now, in that particular reverse charge mechanism, in the notified list of services, we got some amendments under it. Now, let us see what are that amendments. Notification number 13/2017 as amended has notified specified categories of supply of services wherein the whole of the tax shall be paid on reverse charge by the recipient of services. Now, with effect from the 18th of July 2022, the said list of services tax on which the tax is payable under reverse charge has been amended as follows. Number 1, services provided by the GTA, Goods Transporting Agency. GTA services. Sir, with respect to GTA services, what is the old provision? Look at here. Everyone, look at here. This is the old provision. This is old provision. Right? So the GTA service provider having two options only. GTA service provider having two options. Sorry, this is not the one. Yeah, here it is. GTA service provider has two options. Number 1, paying the tax at 5%. Number 2, paying the tax at 12%. Right, sir? If he opted to pay the tax at 5% and he providing the services to your specified recipients, then reverse charge comes into the picture. Then such specified recipient will pay the GST under reverse charge mechanism. Sir, in case if the recipient happen to be a non-specified recipient, then it is exempted from GST. The services provided by the GTA to such non-specified recipient exempted from GST. In case if the GTA wants to pay the tax under forward charge mechanism, then it has to opt for paying the tax at 12%. Paying the tax at 12%. Right. So then the GTA can opt for forward charge mechanism. The person liable to pay the GST is a GTA. Sir, who are the specified recipients here? You can see in the list and the specified recipients you can see in the list. Here it is. Services provided by the GTA. The specified recipients are any registered factory, any registered society, cooperative society, registered person, body corporate, partnership firm, association of persons, and registered casual taxable persons. If GTA providing services to these specified recipients, if GTA opt to pay the GST at the rate of 5%, then reverse charge mechanism. If the GTA opt to pay the 12% rate of tax, then forward charge mechanism. Forward charge mechanism. This is the old provision. Now, what is the amendment in it? What is the amendment in it? The amendment is this: who has not paid CGST at 6%. These wordings have been removed. Have been removed. Now, this 12% adoption of the tax rate 12% if the GA opted 12% rate of tax, GTA opted for 12% rate of tax, forward charge mechanism, this remains as it is, no change in it. Now, in this 5%, we got a change. And in this 5%, we got a change. Now, what is the change we have? I'll explain you with the help of the chart. You can see. Yeah, here it is a chart. Right. Now, what is the amendment in it? So this part kept as it is. This 12% part kept as it is, no change, no change. Now, only in this particular thing, we got an amendment. This part, where the GST is payable at 5% and the recipient happened to be specified recipient. Now, again, two options: 5% reverse charge mechanism, 5% forward charge mechanism. 5% reverse charge mechanism, 5% forward charge mechanism. Now that means even under the 5% rate of tax category, the GTA having the option to pay the tax under forward charge mechanism. Now let me explain you this with the help of the notes for the better clarity. Statutory updates for May 2023 exams. Now in that, chapter number 3, charge of GST. Okay, sir. Now in that, the very first amendment is regarding reverse charge mechanism, sir. The very first amendment is regarding reverse charge mechanism, and that is with respect to GTA services. GTA services. Okay, sir. Now, in this GTA services, if the recipient happen to be a specified recipient, then we have two options, right? Now that is 5%, 12%. If the GTA opted the rate of tax of 12%, then forward charge mechanism comes into the picture. The supplier is liable to pay the GST. Now coming to the 5% category, again you have 2 points. Number one, he can opt for the 5% rate of tax, still continue to be reverse charge mechanism. Still continue to be reverse charge mechanism. So the recipient will pay the tax. Specified recipient will pay GST. Specified recipient will pay GST. This is the old provision only. Old provision only. Now the new provision is that forward charge mechanism. Just let me take a different color for the better identification. Forward charge mechanism. This is the latest amendment. But in order to opt for this forward charge mechanism, there are certain conditions to be satisfied. Star mark is put for that only. First condition is that GTA must be registered under GST, right? So registration must have been taken by the GTA, right? And number two, tax invoice should be issued on it. Tax invoice to be issued to specified recipient, to the specified recipient. So even under 5% rate of tax category, now the GTA service provider have the option to opt for forward charge mechanism. Before that, he should have been a registered supplier. He should have completed the registration proceedings. And number two, he should have issued, and he should be issued a tax invoice on which the declaration should be given by him that I have opted for the 5% rate of tax and I am paying the tax under forward charge mechanism. Right, sir? Every one of you. This is the amendment you got. A very, very important amendment. Definitely it will be asked in the main exam. For sure. Right, sir? Sir, what is the logic behind this amendment? Sir, before this amendment, what was the situation? GTA service provider, 5% rate of tax reverse charge mechanism, 12% rate of tax forward charge mechanism. Right, sir? See, if the GTA service provider adopted for reverse charge mechanism, then the GTA service provider is not entitled to avail the input tax credit. Yes or no? That's what we have studied now. Here you can see. If the GTA service provider opted to pay the tax at 5%, then GTA has not taken the input tax credit on goods and services used in supplying such GTA services. Are you following, sir? Every one of you. Right? He is entitled for the input tax credit only when he opted to pay the tax at the rate of 12%. Forward charge mechanism. In this case, there is no restriction on availing the input tax credit. See, generally GTA service providers are, a very huge service providers. Of course, we have the small service providers also, but majorly GTA service providers are having a turnover of very good amounts. Right, sir? Every one of you. Now, in this case, what happens? Generally, if you think from the recipient point of view, suppose that I am a recipient, specified recipient. I'm a registered person, would like to transport my goods from one place to another place. So I would like to enter an agreement with the GTA. I went to the GTA and asked him. So GTA said, yes, sir, we are ready to provide your services, but we have opted to pay the tax at the rate of 5%. So that means we have opted for reverse charge mechanism. Being the recipient, you have to take care of all the GST formalities. You have to pay the GST component to the department. Then being a recipient, generally, I don't want to take any headache of GST formalities. Are you following now? I don't want to take any headache of GST formalities. So being a recipient, what I will think is, so these all GST headache formalities should be taken by the supplier only. So then what happens? So majority of the recipients will not give the contracts to the GTA service provider who is opted to pay the tax at the rate of 5%. Whose services are taxable under reverse charge mechanism. So majority of service recipients won't give their contracts. So there will be a huge loss of business to the GTA service provider who opted to pay the tax at the rate of 5%. So that's why department come up with this an amendment. Said, okay, GTA service provider, I understand your problem. Wait, I'm giving you an option. So under 5% rate of tax also, I'm giving you an option to pay the GST under forward charge mechanism. Are you following, sir? Every one of you, right? So this 12% as it is continuing, no change in it. Now under 5% also, yes, we have the option of now forward charge mechanism. And with respect to non-specified recipients, there is no change in it. No amendment taken place with respect to non-specified recipient. When GTA provided the services to unregistered consumers, that is non-specified recipients, it is exempted from tax. Exempted from tax. No change in it. Right, sir? That was the amendment. You can see. So that's why these particular wordings has been striked off. Okay, everyone. Next, you can see here. So when GTA providing the services to this specified recipients, who are the specified recipient? Any factory registered or any society registered or any cooperative society or any person registered or any body corporate or any partnership firm, association of persons or any casual taxable person. Hereinafter referred to as specified recipients. Are you following, sir? Every one of you. Right? Now, look at it. What is the amendment here? Here it is the amendment. Further, nothing contained in this entry shall apply where the supplier has taken registration under the CGST Act 2017 and exercised the option to pay the tax on the services of GTA in relation to the transportation of goods supplied by him under forward charge and two conditions. I've said two conditions now. Condition number one, he has taken registration. Condition number two, supplier has issued a tax invoice. Who is the supplier? Amma here? GTA. GTA has issued a tax invoice to the recipient charging the CGST at the rate applicable and has made the prescribed declaration on such invoices issued by him. That is what the two conditions I've written here now. Condition number one, registration. Condition number two, tax invoice to be issued by the service, issued to the service recipient, specified recipient. Yes or no? Right? So nothing contained in this entry shall apply. Nothing apply. Whatever the provisions we have discussed in this reverse charge mechanism so far, that provisions are not applicable. Not applicable if the supplier taken registration and the supplier has issued a tax invoice. So that means even under the 5% forward charge mechanism also, 5% rate of tax also, the forward charge mechanism comes into the picture. Earlier, what is the condition, Amma? The GTA service provider is entitled to the forward charge mechanism only when he has not opted to pay the GST at the rate of, only when he opted to pay the GST at the rate of 12%. Right now. But even under 5% category also, now we have that provision. Any doubts, Amma? Everyone? Look at this chart. Just try to remember this chart, more than enough for you. Clear? Now, moving on. Next, another entry in the composition or reverse charge mechanism. Services supplied by central government, state government, union territory, local authority to a business entity. See, whenever the services are provided by central government, state government, local authority, union territory, when these are providing services to a business entity, then such services are taxable under reverse charge mechanism. Yes or no? Excluding, we have some exceptions. We have some exceptions. What are that exceptions, Amma? Renting of immovable property, services specified below. So when this particular provision is a reverse charge mechanism. For reverse charge mechanism, excluding means what, Amma? These are taxable under forward charge mechanism. Right, sir? Every one of you. Okay. Now, in services specified below, services provided by the Department of Post, Postal Department services. If you remember, sir, if you remember, services provided by Department of Post. Services provided by Department of Post. Only 4 services are taxable, sir. What are the taxable services, Amma? Taxable services. What are the, Amma? Taxable services. Number 1, speed post. Number 2, express parcel post. Number 3, life insurance. Number 4, agency services. So services provided by the Department of Post, only these 4 services are taxable only. Remaining all other services, remaining all other services provided by Department of Post are exempted from GST. This is what we have studied earlier. This is what we have studied earlier. Are you following, sir? This is the old version, sir. This is the old version. Now, what is the new version? What is the new version? Sir, as per the old version, what Amma? Only the 4 services provided by the Department of Post are taxable. What are they? Speed post services, express parcel post services, life insurance services, and agency services. Now the new version is that from the new version, these are all being removed. And what do you mean by, sir? Even the speed post, express parcel post, life insurance, agency, all these services are also exempted. No, wait. Now, what is the new version? You can see here. For this purpose, let me take you to the exemptions chapter. I just would like to correlate the exemptions chapter amendment with this charge under GST. Yeah, here it is, exemptions from GST. You can check it out. So here the very first one itself is regarding the services provided by the Department of Post. Right, sir. So now here also you can see the striking of speed post, express parcel post, life insurance, agency services. Right, sir. Now what are taxable? Look at here, the taxable regarding provided information is given in a note point. Just give me a second. Yeah. Here you can see some new exemptions introduced. Some new exemptions introduced. In that, the very first one is that services provided by the Department of Post by way of postcard, inland letter, book post, ordinary post, envelopes weighing less than 10 grams. Right, sir? Now, what is the new rule? The new amendment? Let me take you a different color. Yes. Now the new rule is that new exemption is that services provided by Department of Post. Exempted services is equal to number one, postcard, inland letter, book post, postcard, inland letter, book post, then ordinary post, ordinary post. See, all these are by default exempted. No, sir. There is a condition. There is a condition where weight of the envelope, weight of the envelope should be less than 10 grams, should be less than 10 grams, where the weight of the envelope, you can see clearly given here, envelopes weighing less than 10 grams. If these particular services, suppose that I am sending a postcard where the weight of the envelope is greater than or equal to 10 grams, even if the weight of the envelope is exactly equal to 10 grams, such postcard services taxable under GST. Taxable under GST. And taxable under GST, reverse charge or forward charge? See, we've already discussed. Department of Postal Services are always taxable under forward charge mechanism. So don't get the doubt of reverse charge mechanism. So what is a new provision now? Services provided by the Department of Post in the form of postcard, inland letter, book post, ordinary post, where the weight of the envelope is less than 10 grams, then it is exempted. Otherwise, it is taxable. Otherwise, it is taxable. So in all other cases, in all other cases, taxable under forward charge mechanism. Taxable under forward charge mechanism. Then definitely you will get a doubt here. Sir, what about that services provided by the speed post, express parcel post, life insurance agency? Simple answer. Simple answer. Whether speed post, express parcel post, life insurance agency services covered under this exempted category? No, sir. Then it is taxable under forward charge mechanism. Then it is taxable under forward charge mechanism. Are you following now? Every one of you. See, now the main purpose of this amendment is that the department has widened the taxable category of services provided by the Department of Post. Earlier, only 4 services are taxable. Now, apart from that 4 services, apart from the 4 services of the express parcel post, speed post, life insurance agency, even if you are receiving a postal card service where the weight of the envelope more than 10 grams, taxable. Even if you're rendering the services of a book post where the weight of the envelope more than 10 grams or at least equal to 10 grams, taxable. Ordinary post where the weight of the envelope greater than or equal to 10 grams, taxable. So the scope of the Department of the Postal Services taxable has been widened. Are you following or not, Amma? Every one of you. Right? Next. Right? Next. So come back to the charge of GST category. Charge of GST. Yeah, we come here. So services provided by the Department of Post, if rendered to the business entity, of course, even excluding category, Anyhow, I already told you Department of Post Services always taxable under forward charge mechanism. That is why it is excluded from the reverse charge mechanism. Every one of you following now, right? Next. So the amendments are mentioned here in a highlighted or striked off manner. And so I'm discussing only those. See, these are all already existing provisions only. These are all existing provisions only. So I'm not covering that. Every one of you following now, right? Next. Services by way of, yes, this is yet another very, very important amendment. Services by way of residential, renting of residential dwelling to a registered person. A very, very important amendment. Now, what is this? Let me explain you with the help of the notes again. Entry number 5AA. Renting of residential dwelling services. See, dwelling means building andi. Dwelling means what amma? Building andi. Renting of residential building services. Now, let me explain you this with the help of the notes chart. Okay. So if you remember, when it comes to renting of immovable property services, renting of immovable property services, what are the provisions we have discussed? If such immovable property has been rented for commercial purposes, then taxable under GST. Taxable under GST. If the residential renting of immovable property for residential purposes, then see, the old provision is that it is exempted from GST. Exempted from GST. This is the old provision, sir. This is the old provision. Then what is a new provision, sir? What is a new provision? Right. Now the new provision is that amended provision. Amended provision is that if the tenant if the tenant is a registered person, the tenant is a registered person, then it is taxable. It is taxable under reverse charge mechanism. If the tenant is a registered person, then it will be taxable. It will be taxable under reverse charge mechanism. If the tenant happen to be unregistered person, the tenant happen to be unregistered person, it is exempted from GST. Exempted from GST. So this is the old provision and the new provision comparison and in a single chart. So renting of immovable property, so far what we have studied, Amma, so far we have studied if that immovable property is given on let out basis for a commercial purposes, it is taxable under GST. If the renting of immovable property is given on rental basis for residential purposes, exempted from GST. So far we have studied this. But now, even if such immovable property, that residential building, is given on let out basis for residential purposes with in relation to a registered recipient. If the recipient, who is the recipient here? Tenant. If the tenant is happen to be a registered person, then such renting of residential dwelling services taxable under reverse charge mechanism. If the tenant is an unregistered person, then the old provision continues, exempted from GST. A very, very important amendment. Clear, Amma? So check it out here. Services by way of residential dwelling to a registered person. This is very important. To a registered person. So supplier could be any person, but recipient must be a registered person. Then it will be taxable under reverse charge mechanism. Such registered recipient has to pay the GST under reverse charge mechanism. Clear, sir? Every one of you. Next. Yeah, these are the amendments from the chapter charge under GST. Clear, sir? Every one of you. So just go through it and ask the doubts if any. Completed, sir. Now let's move on to the next chapter, exemptions from GST. Exemptions from GST. Okay, now chapter number 4 in our material. Some new exemptions have been introduced. Some existing exemptions have been removed. And in some existing exemptions, some some provisions got changed. See, that is what amendment mean to be. Amendment can be a new provision. Amendment can be deletion of existing provision. Amendment can be a modification of existing provision. So some new exemptions, some deletion of existing exemptions, some modifications in the existing exemptions. Clear, sir? Now let us see one by one. First one, amendments in the services exempted from tax. Notification number 12/2017 provides the list of services exempted from CGST. Parallel exemptions given from the IGST as also. Okay. The amendments in the list of exempted services have been highlighted in bold or strike through. Okay. First one, services provided by CG, SG, UT or LA, local authority, excluding the following services. See, generally the services provided by the CG, SG, UT, LA exempted from GST. But we do have some exceptions. 4 exceptions we have studied. Do you remember? First one, services provided by the Department of Post. Second one, services in relation to aircraft or a vessel inside or outside the precincts of the port or airport. And third one, transportation of goods or passengers. Right, sir? And fourth one, we have studied that any other services apart from those 3 provided to the business entities. Do you remember, sir? Every one of you. Right. Now here, what is amendment we got? The services provided by the Department of Post. What is amendment we got? That I've already discussed. That I've already discussed in my notes. Yeah, this is the amendment. Okay, now. So previously, services provided by the Department of Post, only 4 services are taxable. In speed post services, express parcel post services, life insurance services, and agency services. These 4 are taxable, remaining all other exempted. But what is the new provision now? What is the new provision now? Only the postcard services, inland letter, book post, ordinary post, where the weight of the envelope is less than 10 grams, exempted. More than 10 grams, taxable. Equal to 10 grams, taxable. All other cases, taxable. Taxable under forward charge mechanism. This point we have already discussed. Okay, now come back. Right, next. And the same amendment in all the entries have been given in it. Same amendment in all the entries. Services provided by, again, same. Services provided by CG, SG, Union Territory, Local Authority to a business entity with an aggregate turnover of up to the amount in the preceding financial year as make it eligible for exemption. Right, sir? So then, in that case, if the services are right, for these purposes of the entry, it is hereby clarified that the provisions of this entry shall not be applicable to. I've already mentioned you that CG, SG, UT, LA services other than these four remaining all are exempted. With respect to these four services in the form of Department of Post, services in relation to aircraft or vessel, transportation of passengers, or transportation of the goods, and any other services other than the above three. Okay, now in that the very first one, Department of Post, and Department of Post, we got an amendment, and that amendment will be having the impact on all other related amendments. Yes or no? See, wherever the services provided by CG, SG, UT, LA comes into the picture, this amendment will have its effect on it. Okay, now next. Same again. Entry number 8. Services provided by CG, SG, Union Territory, Local Authority to another central government, to another central government, to another state government, or another union territory. See, it's a different entry only. Here, who is the service provider? CG, SG, LA, or UT. Could be any one of these four only. And who is the service recipient? Either CG or SG or LA or UT. If services are providing among them, nothing contained in this entry shall apply to services. Again, same, that four services comes into the picture: Department of Post, aircraft or vessel, transportation of goods or passengers. In that, we got amendment of this entry, the same amendment explained here. Next, same one. See, every amendment you are observing in every entry, the recipient is changing. In the first entry, you can see here, services by central government, state government, union territory, local authority, excluding the following services. Here, the recipient could be any person. Recipient could be any person. Okay. Now, in this entry, you can see the recipient up to such turnover, recipient to a business entity whose turnover is less than the threshold limit during the preceding financial year. Right, sir? And then in entry number 8, the recipient is to another central government, state government, union territory, local authority. In entry number 9, the recipient is, right? So services provided by the CG, SG, UT, or local authority where the consideration for such services not exceeding 5,000 rupees. If the consideration amount is less than 5,000 rupees, we have already discussed it is exempted from GST. Whoever might be the recipient, whoever might be the recipient. But however, we have an exception to that. Nothing contained in this entry shall apply to same. Again, that four services comes into the picture. Right? In that, the very first one is the Department of Post, where we got amendment. Next. Entry number 12. Entry number 12. Services by way of renting of residential dwelling. Just now we have completed this entry number 12 by way of renting of residential dwelling for use as a residence. Except where, this is amendment, except where the residential dwelling is rented to a registered person. So that means if that residential dwelling is rented to a registered person, then it is taxable. See, up to this is the old provision, Amma. Up to this is exempted. This is exemption. For exemption, we have an exception. So exemption ki exception and meaning and taxable annate. It is taxable, right? For an exemption, if you have an exception, what does that mean? The exemption no more applicable. Now it will be a taxable supply. Clear now? Next amendment. Entry number 15. Transportation of passengers with or without accompanied belongings by an air in economy class embarking from or terminating in an airport located in the state of Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, or at Bagdogra located in West Bengal. So what is amendment in it? The amendment is that earlier, with respect to this specified airports, Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Bagdogra. With respect to this specified airport, any kind of air transportation services, will it be economy class or will it be business class or will it be executive class? Whatever might be the kind of class, it is fully exempted. So all air transportation services, irrespective of the class, if you availed from or if you availed to these specified airports, then it is fully exempted from GST. But now this exemption is restricted only to economy class. That's the amendment. So that means suppose that, sir, I have booked a ticket from Hyderabad to Manipur and I have booked the ticket in a business class. In a business class. Old provision is that, Babu, your services are fully exempted from tax. But new provision saying, since you booked a business class, it will be taxable. So the exemption is restricted to only economy class. Are you following or not, every one of you? So if you'd like to see, you can see the old provision as well in our main material. Exemptions starting from 74. Exemptions. Agriculture, education, college, hostel, Indians, health related, construction, passenger transportation services. Yes, here you can see. Here you can see transportation of passengers with or without accompanied belongings by air embarking from or terminating in an airport located in this specified states only. You can see simply they clearly mentioned by air embarking from directly. But now in the amended provision, they said economy class. By air in economy class. Okay now. So now with respect to the specified airports, the air transportation services are exempted only when you availed such services in an economy class. Clear, sir? Next. After that, B and C, they remain as it is, but of course we got an amendment in them also. What is that amendment, sir? The amendment is that, see, generally if non-air conditioned contract services, if you directly avail, it is exempted. But if you book a non-contract air, non-air conditioned contract carriage through an e-commerce operator, now it is taxable. Now, who will pay the tax? E-commerce operator will pay the tax. This amendment we have already studied in this supplementary study material. And in this supplementary study material, I think in exemptions also, in an exemption only we have discussed. Yeah, here it is. Transportation of passengers. Nothing contained in the items B and C. B and C contained non-air conditioned contract carriage and stage carriage other than air conditioned carriage. If these services are supplied through e-commerce operator, then what happened, Amma? In such case, the tax and such supplies shall be paid by the e-commerce operator. Right, sir? Already we have discussed this amendment and right. So nothing contained in these items B and C shall apply to the services supplied through e-commerce operator services and notified under section 9(5) of the CGST Act. Right. So services by way of transportation of passengers by radio taxi, motor cab, maxi cab, motorcycle, omnibus or any other motor vehicle supplied through e-commerce operator. In such cases, the tax on supply of such services shall be paid by the e-commerce operator. In other words, in case where the services of transportation of passengers by non-air conditioned contract carriage other than radio taxi excluding tourism right, by non-air conditioned stage carriage supplied through e-commerce operator. Such services are not exempted. Further, tax on such services are provided by e-commerce operator. Okay, Namma, every one of you. Next, services by way of transportation by rail or a vessel from one place in India to another of the following goods. Services by way of transportation of goods by rail or a vessel. See here, we got some exemptions Amma, with respect to some specified goods. If you remember, we can check it out in our material also. Here it is. Transportation of the following goods by rail or vessel GTA in a goods carriage exempt. So these are all, exempted. And if these goods are transported by rail, vessel or GTA, it is exempted. But now in this, we got some strikings. What are they? This one. If such goods are transported by rail or vessel, the transportation of the following goods by rail or vessel is exempted. What is that? Railway equipments or materials. Now this has been striked out. Striked out. Now what do you mean by that? Means services by way of transportation by rail, right? And what is getting transported here? Railway equipments or materials. Now such services are taxable. Such services are taxable. Are you following, sir? Every one of you. Right? And taxable with effect from 18th of July 2022. Clear, sir? Next. Services provided by goods transport agency by way of transport in goods carriage of, see, earlier we have studied, I think here itself it is there. The old provision you can see, right? If the goods are transported in a single goods carriage where the consignment value not exceeding 1500 rupees, not the consignment value, sorry, the amount charged for such transportation not exceeding 1500 with respect to a single goods carriage. With respect to a single goods carriage. However, if the goods are transported with respect to a single consignee, it does not exceeding 750 rupees. Earlier, we used to have limits 1500, 750. For single goods carriage, 1500. For single consignee, 750 rupees. Then it will be exempted. Now, even that amount also removed under that 1500, 750 has been removed. Are you following now? Now, transportation of the goods by the GTA, by way of transportation of the goods, it will be taxable irrespective of whether that single, the amount charged for the single goods carriage is less than or equal to 1500 or more than 1500, irrespective of the fact whether it with respect to a single consignee, the goods are transporting with respect to a single consignee, whether the amount exceeding 150 or not, irrelevant, and it will be fully taxable now, irrespective of the amount limits, fully taxable. Right, sir? Next. Agricultural related services. Sir, when it comes to the agricultural related services, look at the old provision under it. Yeah. Agriculture related services. Okay, now the old provision, let me take you to the old provision. The old provision saying that loading, unloading, packing, storage or warehousing of agricultural produce. Storage or warehousing of the agricultural produce fully exempted from GST. But now the limit, the item wise limit is given, sir. Item wise limit is given now. Only the services by way of storage or warehousing of cereals, pulses, fruits are exempted from GST. Nuts, vegetables, spices, copra, sugarcane, jaggery, raw vegetable fibers, cotton, flax, jute, indigo, unmanufactured tobacco, betel leaves, tender leaves, coffee, and tea. Now, all these are under taxable category. Only the services by way of storage and warehousing of the cereals, pulses, fruits are exempted from GST. Even vegetables exempted from GST. Remaining all other are taxable under GST. Sir, I am providing the services by way of storage and warehousing of sugarcane, jaggery, taxable. Earlier it used to be exempted, now it is taxable. Are you following or not, every one of you? That's the amendment from the agricultural related services. The remaining all the old provisions only, no change. See, those who are highlighted and striken up only their amendments only. The remaining are the old provisions only. No change in it. Yeah. Services by way of fumigation in a warehouse of the agricultural produce. Earlier, fumigation services are exempted under. You can see services by way of fumigation in a warehouse of agricultural produce. Earlier, it used to be exempted. Now, it has been removed from exemptions. It has been removed from exemption. That means now it is a taxable service. Now it is a taxable service. Taxable supply. Fumigation services in relation to agricultural produce, it is a taxable supply now. Clear, sir? Every one of you. Okay. Now, next. Coming to the healthcare services. With respect to healthcare services, we have discussed all the services are exempted. You can see the old provision. First, let me show you the old provision. Healthcare services. Yeah. The very first one. No. Religion related, coaching related, agriculture, education, health related services. We have seen so many services under this category exempted from GST. Now, what is the amendment we got here? So the amendment is here this. The provision is that services by way of healthcare, services by a clinical establishment and authorized medical practitioner or paramedics exempted from GST. However, the amendment is, see, whatever there in the bold is amendment done. The amendment is, however, nothing contained in this entry shall apply to the services provided by clinical establishment by way of providing the room, having the room charges exceeding 5,000 rupees per day to a person receiving healthcare services. Suppose that Mr. X is there and right, he fell sick. He admitted into the hospital. So hospital allotted him a private room where the hospital collecting the room rental charges of 6,000 rupees per day. It will be fully taxable now. Earlier, it used to be fully exempted. Now it is fully taxable. Now it is fully taxable. But of course, if that room happens to be ICU, intensive care unit, or CCU, critical care unit, or ICCU, intensive cardiac care unit, or NICU, neonatal intensive care unit for kids. This is for kids. If the room happened to be any of these, it is fully exempted. It is continued to be fully exempted. Continue to be fully exempted. If the room other than these four and the rental charges exceeding 5,000 per day, fully taxable. That's why it's clearly mentioned here. Services provided by clinical establishment by way of providing the room other than ICU, CCU, ICCU, and NICU. See, with respect to these four rooms, whatever might be the rental charges, whether it is less than 5,000, whether it is more than 5,000, fully exempted. If the room happened to be other than these four, you just kept in an observation room, that's it. But in a private room, observation, private room, and the hospital charging more than 5,000 per day as a rental charges, it will be fully taxable. So that's the only amendment we got in the healthcare services. Clear, Amma? Every one of you. Next. Entry number 80. Services by way of training, coaching in recreational activities relating to arts, culture, sports. See, earlier this used to be the wordings Sunday. This used to be the wordings. You can see in older provision also. Coaching related here only we have seen in the entry number 3. Religion, yeah, coaching related services. Services by way of training in or coaching in recreational activities relating to arts or culture or sports by charitable entities registered under the Income Tax Act. This is the old provision, right? The old provision look like this. Now the new provision, right, sir? This is the new provision. This is the old one, and this is a amended one. Now, what is the amended provision here? Services by way of training or coaching in recreational activities, right? So services by way of training or coaching in recreational activities, right? Relating to arts or culture by an individual. A new word has been added, by an individual, or sports by charitable entities registered under 12AA or 12AB of the Income Tax Act. So point number B, this remains to be same only. In point number A, there got an amendment, right, sir? So now the coaching related services in relation to the arts and culture, if the recipient happened to be an individual, it is exempted. If the recipient is other than individual, it will be fully taxable. It will be fully taxable. Suppose that I have been appointed as a coach of the badminton, and who appointed me? Invoice company. For whose benefit? For the benefit of their employees. Now there is a contract between me and Infosys company. I am the service provider providing the coaching, right? In relation to the, Infosys company. Arts or culture అన్నాడు కదా, badminton sports category లోకి వస్తుంది. So remove that badminton example. So I am the coach, dance master, right? I've been engaged by the Infosys company for the benefit of their employees. Are you following, sir? Right? See, I am providing the services to the Infosys company. Recipient, who is the recipient here? Infosys company, other than individual. Now these services are taxable. Are you following, every one of you? Right? So recreational activities in relation to the arts or culture by an individual. Clear? Wait a second. Services by way of training or coaching in recreational activities. Sorry, service provider status here must be an individual, not the service recipient. Service provider status must be an individual, then it will be exempted service. Other than individual, it will be a taxable service. Clear, sir? Every one of you. Okay. Now, so far in today's session, we have completed amendments from the chapter charge under GST, right? Chapter number 3 and chapter number 4 also, exemptions. We have seen the changes in the existing exemptions, right, sir? Now I am stopping the session here today, right? In the next session, I'll start the new exemptions introduced. What are the new new exemptions introduced in this chapter that I'll be covered in the next session, sir? Okay, now till then, have a good day and good night, sir. A very good evening, students. Welcome to the Gst taxation classes. We are discussing statutory updates for May 2023 examinations in the subject of goods and services tax. Now, in the last class, we have started discussion regarding the statutory updates from the chapter exemptions, and we have completed the amendments with respect to the existing exemptions. What are the changes happened in the existing exemptions we have discussed. Now let us start with the new topic from the chapter exemptions. So we need to start with new exemptions introduced. So what are the new exemptions introduced in between 1st of May 2022 till 31st of October 2022 by the Finance Act 2022 and as well as through rules and regulations and by issuing a notifications, circulars. Okay, so the following new services have been exempted from GST. The very first one is, we've already discussed, services provided by the Department of the Post. We have explained through notes also. What is the old provision? Services provided by the Department of the Post. The old provision is that only the 4 services are used to be taxable. They are the speed post services, express parcel post services, life insurance services, and agency services. And remaining all other services provided by the Department of the Post are exempted from GST. That's the old provision. Now, what is the new provision, Amma? This is a new provision. Right, sir. So the exemptions provided by the Department of the Post, right? So exempted services, postcard services, inland letter, book post, ordinary post, where the weight of the envelope is less than 10 grams. Less than 10 grams. Okay, sir. If the weight of the envelope is greater than or equal to 10 grams, it's always taxable service. Every one of you. Right, sir. Next. Next one. Tour operator services. Right, sir. So far, what is the provision we have studied? If a tour operator providing the services in relation to a tour conducted outside the India, and these services are provided to a foreign tourist, they are fully exempted from tax. Right, sir. Tour operator providing the services to a foreign tourist, and that is to in relation to the tour conducted outside the India, it is fully exempted from tax. Then I got a doubt. Suppose that if a foreign tourist come to India, right, sir, 3 days he stayed in India and visited the tourist places, and his next tour is in Sri Lanka, and he is visiting Sri Lanka for 2 days. So the totally his tour period is 5 days a month. Tour period is 5 days. 3 days in India and 2 days Sri Lanka. Total tour period 5 days. Now this entire tour, the services are provided by the same tour operator. Let us assume that Southern India Travels, the tour operator providing the services to a foreign tourist. Now in this case, how the exemption will be provided? Because it is the tour partly conducted in India and partly conducted outside the India. Partly in India and partly outside the India. Then how the exemption benefit will be calculated here? Because to the extent of the tour conducted outside the India, it is an exempted service. To the extent of the tour conducted within India, it is a taxable service. Right, sir? Let us assume that the total consideration charged for this tour, let us say 5 lakhs rupees. Now the question is whether the entire 5 lakhs is taxable. No. Whether the entire 5 lakhs is exempted. No again. Right, sir? So how much is exempted? The exemption portion is the consideration in relation to foreign tour, or 50% of the entire consideration, whichever is less. Consideration with respect to the foreign tour. Then how to calculate this? See, for the total tour, that is for 5 days, the tour operator charging 5 lakhs. Now, in relation to the foreign tour, in relation to the foreign tour, that is 2 days, how much it will be. So for 5 days, it is 5 lakhs. For 2 days, it is how much? So proportionate calculation, sir. 5 lakhs is a total consideration for all the 5 days into 2 divided by 5. You can get it 2 lakhs. 2 lakhs, every one of you. Following, sir, 2 lakhs. So the consideration with respect to foreign tour 2 lakhs, or this is point number A. Point number B, 50% of entire consideration, 50% of total consideration. What is your total consideration? 5 lakhs into 50 percentage, which comes to be 2,50,000. Now A or B, whichever is lower, is exempted from tax. So A point 2 lakhs, B point 2,50,000. Therefore, exemption is equal to 2 lakhs. Exemption is equal to 2 lakhs. So out of the total consideration charged 5 lakhs, 2 lakhs is exempted from tax. The remaining 3 lakhs is taxable, as simple as that. This is how you need to calculate. Sir, in case if the information is provided in hours, suppose that in Sri Lanka, the tour conducted is 2 days, 13 hours. So then it should be counted as 3 days tour in Sri Lanka. Are you following, sir? Right? So if the duration of the time you have stayed in the foreign country is exceeding 12 hours, it should be considered as full day. It should be considered as a full day, a full stay in that foreign country. Suppose that if the time duration that I've stayed in Sri Lanka 2 days, 10 hours, then it should be considered as 2 days only. It should be considered as 2 days only. So if the time duration exceeding 12 hours, 1 full day you have to consider. Less than or equal to 12 hours, then you just ignore that. Okay, Nama, every one of you, right? So look at here, tour operator service, which performed partly in India and partly outside the India, supplied by tour operator to a foreign tourist to the extent of the value of the tour operator service, which is performed outside the India, is exempted. Is exempted. Okay, ma. However, the value of the tour operator service performed outside the India shall be such proportion of the total consideration charged for the entire tour, which is equal to the proportion which the number of days for which the tour is performed outside the India has to the total number of days comprising the tour, or 50% of total consideration charged for the entire tour, whichever is less. So the consideration with respect to the foreign tour, or 50% of the entire consideration, whichever is lower, will be exempted from tax. Further, in making of the above calculations, any duration of time equal to or exceeding 12 hours. Sorry, in my explanation just now, I said less than or equal to 12 hours shall be taken as ignorance or half day. It's not correct. Sir, if the time duration is greater than or equal to 12 hours, then you have to consider it as full day. Less than 12 hours, then you have to consider it as half day. I think just now I said it as ignored. No, half day you have to consider. So if the time duration is greater than or equal to 12 hours, it shall be considered as one full day. And any duration of time less than 12 hours shall be considered as half day. Clear, sir? Now, explanation. Foreign tourist means a person not normally resident in India and who entered India for a stay of not more than 6 months. So even though he's coming to India on a visit, the time of the visit should be less than 6 months. It should not exceed 6 months. And we also provided with one illustration here. You can see a tour operator provides a tour operator services to a foreign tourist as follows: 3 days in India and 2 days in Nepal. Consideration charged for the entire tour is 1 lakh. Now the exemption will be 40,000 rupees. How did you get this? The tour, the consideration with respect to Nepal tour. Consideration with respect to Nepal tour. It will be 1 lakh into 2 divided by 5. So it will be how much you will get, Amma? 40,000 rupees or 50% of entire consideration. How did you get this? The entire consideration is 1 lakh into 50 percentage. It will be 50,000 rupees. Now, among these two, whichever is lower is exempted. The lower value is 40,000 rupees. Right, sir? So exemption is equal to 40,000 rupees. Very simple provision. Next. Taxable value 60,000. The remaining amount is a taxable value, sir. Now, second example, 2 days in India and 3 nights in Nepal. Now, point number A, consideration with respect to Nepal tour. Total consideration 1 lakh into the number of days you have stayed in Nepal 3 divided by total tour period 5. So it will be 60,000 or 50% of entire consideration. So 1 lakh into 50 percentage, 50,000 rupees, whichever is lower, exempted from tax. So the exemption is, you can see, 50,000 rupees. Are you following, sir? So 50,000 rupees will be exempted, sir. Exemption is equal to 50,000 and the taxable value 50,000. Clear, sir? Next. 200 days in India and 3 days in Nepal. So again, same thing. Consideration with respect to the tour conducted outside the India. Proportionate consideration we have to calculate now. Total consideration 1 lakh into the number of days you have stayed in Nepal 3 days divided by total tour period 500 days. 2.5 plus 3, 500 days. So if you calculate how much you are getting, Amma? 1 lakh into 3 divided by 5.5. So 54,545. 54,545 or 50% of entire consideration, 50% of total consideration. So 1 lakh into 50 percentage, 50,000, whichever is lower, exempted from tax. And what is the lower amount, sir? The lower amount is 50,000 rupees. So 50,000 exempted. The exemption is 50,000 and taxable value 50,000. So this is how you need to calculate. Yet another very important amendment, of course, very easy amendment. So we can expect one MCQ from this amendment, sir. Clear? Next. And next amendment we have already discussed, and next amendment we have already discussed, if you remember, services by way of granting national permits to a goods carriage to operate throughout the India or contiguous states. So the services provided in the form of national permit, granting the national permit to goods carriages, trucks, lorries, those which are carrying goods, fully exempted from tax. Okay, so these are the new exemptions given, Andy. Now, withdrawal of existing exemptions. There are so many exemptions, right, where the entire exemption benefit have been withdrawn. Let us see what are they. Exemptions from CGST available to the following services has been withdrawn. What are they? Services by a hotel, inn, guest house, club, campsite, by whatever name called, for residential or lodging purposes having a value of supply of a unit of accommodation below or equal to 1,000 per day or equivalent. So earlier, whenever you booked a room in a hotel, if the tariff charges are more than 1,000 rupees, it is taxable. Less than or equal to 1,000, it is exempted. What was the earlier provision? If the tariff rate is less than or equal to 1,000, it is a fully exempted service. If greater than 1,000, it is a fully taxable service. But now hotel services, right? Short-term accommodation services are fully taxable irrespective of the tariff rate. Even if you book a hotel where the tariff rate is just 500 per day, fully taxable. 200 per day, fully taxable. This exemption has been withdrawn. Earlier, at least you have a benefit of, if the tariff rate is less than or equal to 1,000, it is exempted. But now that tariff rate exemption benefit is also withdrawn. Even if you book a room in a lodge for short period of 6 hours or even for 2 hours and you are paying 200 rupees, it will be taxable. Okay, next. Services by RBI. Earlier, if you remember, we have studied that services by RBI exempt from tax. Services provided to RBI taxable. Yes or no? Earlier we have studied like this. Even now, the services provided by the RBI brought under taxable category. Now, services provided to RBI taxable, by RBI taxable. Okay, next. Services provided by some statutory bodies. If you remember, we have studied that services provided by IRDA, services provided by SEBI, services provided by GSTN, right? Some statutory bodies. All these services are exempted from GST earlier. I can say up to 17th of July 2022, they are exempted. But however, with effective from 18th of July 2022, the services provided by the statutory bodies are now brought under taxable category. So, services provided by IRDA, taxable. Services provided by SEBI, taxable. Services provided by IRFC, Indian Railways Finance Corporation, to the Indian Railways, taxable. Services provided by FSI, Food Safety Standards Authority of India, Food Safety and Standards Authority of India, taxable. Services provided by GSTN, Goods and Services Tax Network, taxable. Right, sir? So these services now brought under taxable category. Earlier, these are under exempted category. Now these have been brought under taxable category. Okay, now some statutory bodies they have left out. They continue to be exempted, like services provided by the CMPF, Coal Mines Provident Funds Organization, continue to be exempted. EPFO, Employee Provident Fund Organization, continue to be exempted. Are you following now? Every one of you. Next. Services by way of fumigation. This point we have already discussed in the last class itself. Yes or no? Agricultural related services. Fumigation services have now been removed and services provided by way of fumigation in a warehousing of the agricultural produce, taxable. Slaughtering of animals, taxable. Services provided by the cord blood banks by way of preservation of stem cells. If you remember, this point we have studied in healthcare related services. Cord blood banks, which will provide you the services of preservation of stem cells. Now it is brought under fully taxable category. Services provided by the operators of the common biomedical waste treatment facility. See, there is tons of medical waste, medi waste generated in the corporate hospitals every day on daily basis, especially in the corporate hospitals. Tons of medi waste will get generated, and that medi waste should be taken off out of the city and it should be disposed of in the out of the city, right, where no man is living. Yes or no? Otherwise, if you dump that entire medi waste in mid of the city, then through that, by burning that medi waste, some poisonous gases will be released. Those who inhale that particular poisonous air, they will get sick. So that's why very carefully the entire medi waste should be taken off to the out of the city, and there it should be dumped and there it should be processed. And for providing these services, there will be some people who called as operators of the common biomedical waste treatment facility, and they will provide these services to the hospitals. Earlier, their services are used to be exempted. Now, with effect from the 18th of July 2022, they brought under taxable category. Next. So these are the some existing exemptions has been withdrawn by the government. You can just go through it once. Complete, sir. Now moving on. After that, we have some clarifications, right, sir, with respect to some supply of services. There are so many ambiguous provisions where there is no clear picture whether it is covered under exemptions or not. Now, in order to remove that entire ambiguity, right, sir, GST Council has given some clarifications. GST department have given some clarifications. Let us see one by one. Clarification regarding the applicability of the GST on supply of the food in Anganwadis and schools. So generally, we have studied in the exemptions chapter that serving of the food in schools under midday meals scheme is exempted from tax. Of course, the condition is that such supplies must have been funded either by the government grants or by the corporate donations. That's the provision we have studied in entry number 66B. Services provided to an educational institution by way of serving of the food under midday meals scheme. It is exempted from tax. The condition is that that particular scheme have been sponsored by the government grants or by the corporates. Yes or no? Now the question is, sir, here you said the services are provided to the educational institutions. Now, whether the Anganwadi schools covered under this definition of educational institution, if covered, the supply of the food to the Anganwadi schools also covered under exemption benefit. If the Anganwadi schools are not covered under the definition of educational institution, then the supply of food to the Anganwadi schools is a taxable supply. Yes or no? Sir, generally in the Anganwadi schools, up to which class the services will be provided? So generally Anganwadi schools, I can say that only the preschool education will be carried on by the Anganwadi schools. And if you remember, you have studied the definition of educational institution, and educational institution covers preschool education. Yes or no? It is an institution which providing the educational services, including the preschool education and up to secondary school education. Yes or no? Every one of you. Since Anganwadi schools providing the services up to preschool education, it will be covered under the definition of educational institution. Hence, any services provided in relation to the serving of the food to the Anganwadi schools also covered under the exemption category. That's the clarification provided. And so look at here. The issue which arose for consideration was as to whether serving of the food in schools under midday meal scheme would be exempt if such supplies are funded by government and or corporate donations. Entry number 66B, exempt services provided to an educational institution by way of catering, including midday meal scheme sponsored by the CJSGUT. This entry applies to preschools and schools. Accordingly, as per the said entry 66, any catering service provided to an educational institution is exempted, and it includes the midday meals services also. So the scope of this entry is thus wide enough to cover any serving of food to a school, including preschool. And an Anganwadi provides preschool non-formal education. Hence, Anganwadi is covered by the definition of educational institution, right, as preschool. Further, it is clarified that the services provided to an educational institution by way of serving of the food, including midday meal scheme, is exempted from levy of GST, irrespective of its funding from the government grants or corporate donations. Are you following, sir? Hence, serving of the food to Anganwadi shall also be covered by the said exemption, whether sponsored by the government or through donation. Okay, now, so the clarification is given that serving of the food to the Anganwadi schools is also covered under exemption category. Okay, ma, every one of you. Next. Completed, sir. Now let's moving on. Next clarification. Clarification regarding applicability of the GST on the activity of construction of the road where considerations are received in a deferred payment annuities. Constructions of the roads. So generally, road construction services are basically large contracts where the consideration involved hundreds of crores rupees. Hundreds of crores rupees. When it comes to the national highways, it will be thousands of crores. Where the consideration is paid, certain part of the consideration paid as an advance upfront, and the remaining consideration paid on annual basis. Deferred payments, annuities, annual basis. Right, sir? Now the question is, if the consideration is received in annual basis, whether it is covered under exemption category or whether it is covered under taxable category. So the clarification is provided here. So circular number 150/06/2021 clarifies the applicability of the GST on annuities paid for the construction of the road, where certain portion of the consideration is received upfront, means as an advance, while the remaining payment is made through deferred payment, that is annuity spread over the years. Right, sir? It is important to note that entry number 23A exempt access to a road or toll bridge on payment of annuity, but it does not cover the construction of the road services. Ma 23A giving the exemption benefit only with respect to the toll taxes you are paying. Are you following, sir? Exempts the access to a road or bridge on payment of annuity, toll taxes, toll charges. See, toll charges can be paid in two ways. Number one, as and when you are accessing to the highway, you can pay. Number two, you can pay on an annual basis. Suppose that you are entered into the logistics industry, right, sir? So you are owning 100 trucks, and that 100 trucks every day their access to the national highways, because every truck carries the goods and it will carrying the goods from origin to the destination. So obviously it will touch as a national highway on a daily basis. So instead of paying the toll tax on daily basis, you are paying the toll tax on annual basis. You can pay like that, absolutely no problem. Are you following, sir? Every one of you. So toll taxes paid on a daily basis or as and when you access to the highways or on an annual basis, it is exempted from tax. That's covered under entry number 23A. However, this entry number 23A doesn't cover the construction of road services. Construction of road services fully taxable irrespective of the fact how you are receiving the payments for that. Right, sir? So it has been clarified that entry number 23A does not exempt GST on the annuity paid for the construction of the roads. It will be fully taxable. Next, clarification number 4. Clarification regarding the GST on supply of various services by central and state boards, especially the services provided by the National Board of Examinations, NBE. Right, sir? So generally, NBE will provide the services in relation to the conducting of the entrance examinations by charging a fees, right, sir? And it will also provide the services of, accreditation of the educational institutions and professionals, right? And, sir, accreditation of educational institutions, what do you mean by that? So for every educational institution, right, there will be a grade will be given by the NAC, right, sir? This NAC will give the grades like grade A, grade B, grade C, like that. In that grade A plus, A plus plus, A, depending upon the grade given by the NAC, the government will release the funds to such educational institution. Depends upon the grade given by the NAC to that educational institution. That educational institution will get the authority to provide some additional courses or professional courses. Are you following, sir? Every one of you, right? So this NBE will also provide such kind of services, right? Now the question is, the services provided by the NBE in relation to the conducting of the entrance examinations for the students, in relation to the accreditation of the educational institutions or professionals, whether these are taxable or not. The clarification is given by circular number 151. Let us see what the clarification is given. So it clarifies the taxability of the various services supplied by CG or SG, such as National Board of Examination. These services include entrance examination and charging a fee for admission to the educational institution, input services for conducting such entrance examinations, accreditation of educational institution or professionals so as to authorize them to provide their respective services. For example, NBE provides, National Board of Examination provides services of conducting entrance examinations for admission to the courses including Diplomat National Board and Fellow of National Board, DNB and FNB. Prescribe the courses and circular curricula for PG medical students. Holds examinations, grant degrees, diplomas, and other academic distinctions. It carries out all functions are normally carried out by a central or state educational boards, and thus it is a central educational board. Central and state educational boards are treated as educational institution for the limited purposes of providing the services by way of conducting the examinations. Therefore, NBE is an educational institution. So far, it provides the services by way of conducting the entrance examinations. So it clarifies that GST is exempt on services provided by NBE, National Board of Examinations, right? By way of conducting the examination for the students, including conducting of the entrance examinations, right? Therefore, GST shall not apply to any fee or any amount charged by such boards for conducting such examinations, including entrance examinations. Next, GST is also exempt on input services relating to admission to or conducting of examinations, such as online testing services, result publication, printing of notification of examination, admit cards, question papers, etc. when provided to such boards under entry number 66B. Sir, even for conducting the entrance examinations, we have to receive some input services. If you remember, you have discussed Tata Ion services. Tata Ion services. See, for various PSUs, right, CBT, computer based test, right? See, my qualification to the Coal India Limited happens like this, right? Coal India Limited has issued a notification in the year 2019 for the post of finance executive. So stage one, we need to write a computer based test, CBT, we call it a CBT, computer based test. So I have written this computer based test in my hometown itself in Hyderabad, right? And the services are provided by whom? Tata Ion Services. It is a online test, online test. So it will provide all the input services, online testing service, results publication, printing of notifications, admit card, question papers, everything. So here the Coal India Limited, the central PSU, taken the services from Tata Ion Services, fully exempted from tax. GST applicable to other services provided by such boards. Other services. So what are the other services? Namely, providing accreditation to the institution or to a professional, right? So accreditation fee or registration fee such as fees for FMGE screening tests so as to authorize them to provide their respective services. Right, sir? Every one of you. So here National Board of Examination providing various services, right? Conducting of the entrance examinations exempted, all input services in relation to conducting the entrance examinations exempted, but accreditation services provided by the National Board of Examinations taxable. Central boards, state boards providing the services of accreditation to the educational institutions or professionals, it will be taxable under GST. Sir, what do you mean by FMGE here? FMGE stands for Foreign Medical Graduate Examination. Foreign Medical Graduate Examination. Okay, ma, every one of you. So this is clarification number 4. Now moving on to clarification number 5. Clarification regarding applicability of GST on services provided by state government to their undertakings or PSUs by way of guaranteeing the loans taken by them. Right, sir. Suppose that Telangana state government giving guarantee with respect to loan taken by Singareni Collieries Company Limited, SCCL. Singareni Collieries Company Limited. It is a state government PSU only. State government PSU, TSPSU, Telangana State Public Undertaking. Okay, na sir. Now, suppose that SCCL taking the loan from State Bank of India. Let us say some 100 crores it is taking the loan. Now, State Bank of India asked for guarantee. Okay, SCCL, I'll give you the loan of 100 crores to you, but I would like to have a guarantee from your state government. Now, TS come forward and given the guarantee. Okay, State Bank of India ji, please give the loan to our PSU, right? I'll give you the guarantee. If in any case in the future, if SCCL not able to repay the loan amount, don't worry, I'll pay you. Now, the question is whether the GST applicable on these guaranteeing services. So state government giving guarantee with respect to the loans taken by their PSUs or their undertakings. Are you following, sir? Right? Now, whether the services provided by the state governments in the form of guaranteeing the loans to their undertakings or PSUs exempted or taxable, it is fully exempted. Entry number 34 is given that exemption benefit only. Look at here. The issues which rose consideration was regarding the applicability of the GST and supply of services by state government to their undertakings or PSUs by way of guaranteeing the loans. Entry number 34A exempts services supplied by the SG, CG, UT to their undertakings or PSUs by way of guaranteeing the loans taken by such undertakings or PSUs from the banking companies and financial institutions. Accordingly, it is reiterated that guaranteeing of the loans by CG, SG, UT for their undertakings or PSU specifically exempted under entry number 34A. The services provided by the state government, central government, UT in relation to their undertakings by way of guaranteeing the loans exempted from tax. Next one. Clarification regarding coaching services supplied by coaching institutions, NGOs under central sector scheme of scholarship for students with disabilities. Right, sir. So entry number 72 gives the exemption benefit to these services. So free coaching services provided by coaching institutions and NGOs under the central scheme of scholarships for the students with disabilities, where the total expenditure, this is very important point, total expenditure is borne by the government to the coaching institutions by way of grant in aid is covered under entry number 72 and hence exempted from GST. Sir, earlier the older provision is that where the entire expenditure is borne by the government, then exemption benefit. Now the new provision is that it's been reduced to 75%. And this was provided here. However, as seen in earlier in this chapter, entry number 72 subsequently has been amended. And now the exemption is available even when 75% or more of the total expenditure borne by the central government, state government, union territory administration. Not required, the 100% of expenditure is borne by the company, not required. Even if it is 75%, it is exempted from tax. Okay, ma. Next. Clarification regarding GST on overloading charges at toll plazas. Just now we have studied entry number 23, access to a toll road or a bridge on payment of the toll charges exempted from GST. Yes or no? Just now we have studied. So whenever you are accessing the toll road or whenever you are accessing a bridge, if you happen to pay a toll tax, whatever the toll tax you are paying, that is fully exempted from tax. Suppose that there is one truck which carrying the heavy goods and it is overloaded. It is overloaded. So generally during the payment of the toll taxes, right, sir? So they will see the, the loading capacity of the vehicle and how much load it is carrying. If they found that it is overloaded, then they will collect some additional charges. Now the question is whether the additional charges collected with respect to the overloading, will this be taxable or exempted? So the additional charges collected for the overload of the vehicle, it will assume the same characteristics of the toll charges and hence exempted from GST. Are you following, sir? Suppose that I'm additionally paying, in addition to the normal toll charges, I'm additionally paying 1 lakh rupee for the overloading. Now this 1 lakh also exempted from tax. Clear now? That's the clarification provided here. With regard to the said entry, the following issues have been clarified. MORTH, Ministry of Road and Highways, Ministry of Road Transport and Highways. MORTH permitted the overloaded vehicles to ply on the national highways after the payment of the higher toll charges. It has been clarified that the overloading charges at the toll plazas, would get the same treatment as given to the toll charges. What is the treatment we are giving to the toll charges? Exemption. Means the same treatment will also give the to the overloading charges as well. Okay, now MORTH has directed to collect the additional amount from the users of the road to the extent of the 2 times of the fees applicable to that category of the vehicle which is not having a valid functional FASTag. Essentially, the additional amount collected from the users of the road not having a functional FASTag is in the nature of the toll charges and should be treated as a additional toll charges. Therefore, it is clarified that the additional fees collected in the form of higher toll charges from the vehicle not having the FASTag, especially payment of toll for allowing the access to roads or bridges to such vehicles, and may be given the same treatment as given to the toll charges. So simply say, even the additional charges you are paying, higher toll charges you are paying, also exempted from GST. Okay, now next clarification regarding renting of vehicles to the state transport undertakings and local authorities. We have already studied that whenever you are hiring a vehicle meant to carry the passengers, and that vehicle capacity is having, it is meant to carry for more than 12 passengers, or whenever you are hiring an electronically operated vehicle which is meant to carry more than 12 passengers, it is an exempted service. It is an exempted service. Now, that giving on hire word also including the renting of vehicles. So whenever you're giving on rental basis, the vehicles to the state transport undertakings or to the local authorities, even that activity is also covered under exemption benefit only. Suppose that I have a minibus with me, which is having a seating capacity of 30 passengers. Now I have rented this minibus to the TSRTC. So I have rented for 1 week and TSRTC agreed to pay me 1 lakh as consideration. Now, whatever the 1 lakh I'm receiving, it is fully exempted from tax. Are you following or not, every one of you? Right. See, generally giving on hire means it is for a period of time, say for 1 year, say for 2 years, or say for 3 years. Giving on rental basis means it is for a short period of time, say for 1 week, say for 10 days. Are you following? Giving on hire means for a longer period. You entered into a contract for 1 year or 2 years or 3 years like that. Right. Giving on rental basis means for a shorter period. So giving on hire or giving on rental basis, both are covered under entry number 22. Both are exempted from tax. Look at here. Entry number 22 exempts services by way of giving on hire to a state transport undertaking or a motor vehicle meant to carry more than 12 passengers, or to a local authority an electronically operated vehicle meant to carry more than 12 passengers. It is clarified that the expression giving on hire also including the renting of vehicles. Accordingly, where the said vehicle are rented on or given on hire to the state transport undertakings or local authorities, the said services are eligible for the above exemption benefit, irrespective of whether such vehicles are run on routes, timings as decided by STU or local authorities, or under the effective control of the STU or local authorities, which determines the rules of operations applying of the vehicles. Clear, sir, every one of you. Next. Clarification regarding the applicability of the GST on application fees charged for entrance or the fee charged for issuance of eligibility certificate for admission or for issuance of migration certificate by the educational institutions. So generally we have studied that the services provided by the educational institution, right, to its students, right, by way of conducting the entrance examinations, right, by taking the consideration in the form of entrance fees, it is an exempted service center. It is an exempted service. Suppose that an educational institution conducting MSET entrance exam. See, if you want to pursue the engineering course, first you have to write the MSET exam. Yes or no? If you want to pursue MBA courses, first you have to write ISET exam. If you want to pursue law courses, you need to write the law set. Yes or no? These are all entrance examinations. Now, for writing these entrance examinations, you have to pay certain entrance fees to such educational institution. Now, whether that entrance fee is exempted or taxable, answer is 100% exempted. So, look at here. The issue which arose for consideration was regarding the applicability of GST and application fee charged for entrance or the fee charged for issuance of eligibility certificate or migration certificates. In this regard, it is stated that educational services supplied by educational institutions to its students are exempted from GST. So relevant portion which reads as under services provided by educational institution to its students, faculty and staff exempted by an educational institution by way of conducting the entrance examinations against consideration in the form of the entrance fees. Therefore, it can be seen that all the services supplied by educational institution to its students exempted from GST. Consideration charged by the educational institution by way of entrance fees for conducting of the entrance examination is also exempted. This exemption is wide enough to cover the amount or fee charged for admission, entrance, or the amount charged as application fee, or the fee charged from the prospective students for issuing eligibility certificate. Right. So rank card will be given to you now after you completed your MSET exams, after you completed your GATE exams, after completed your ISET or LAWSET, PG set, EdSet. You'll get the rank cards based on which you will get the admission into the various educational institutions. Yes or no? All these services are exempted from GST only. So services supplied by an educational institution by way of issuance of migration certificate to the leaving or ex students are also covered by this exemption. Suppose that I'm studying in a particular educational institution where I didn't like the services provided by them. I would like to migrate to the another educational institution. So first, I need to get a migration certificate from my existing educational institution, for which I need to pay certain amount of the fees. And that fees is also exempted from GST. Accordingly, such activities of the educational institutions are also exempted. Okay, ma, every one of you. So up to clarification number 9, we have discussed in this session. We have seen some new exemptions. We have seen some existing exemption withdrawn. That means they brought under taxable category. And we have seen up to clarification number 9 in this session. Okay. So we'll cover the remaining clarifications in the next session, sir. So see you in the next session. Till then, have a good day and good night. A very good evening, students. Welcome to the Straight Start Taxation classes. We are discussing statutory updates applicable for May 2023 examinations with respect to the subject of goods and services tax. So far, we have completed the statutory updates from the chapters Supply under GST, Charge of GST, Exemptions under GST, and we are discussing the statutory amendments from the chapter Input Tax Credit. Right, sir? So far, we have completed up to clarification number 9. Now let us continue with the clarification number 10. Now what is that? Clarification regarding applicability of the GST on transport of minerals from mining pit head to railway siding, beneficiation plant, etc. by the vehicles deployed with a driver for a specific duration of time. Sir, what is the provision here? So generally, whenever there is extraction of the minerals from the mines, from the mine pit head till the railway siding, that means suppose that this is a mining area. This is the mining area from where we are extracting the minerals. Mine pit head, mining pit head. Now from here we will extract the mines, minerals, and will load into the dumpers, load into the dumpers, and these dumpers will carry these minerals to the railway siding, to the railway siding. Then these minerals will be loaded into the railway wagons, right, sir? So the transportation of the minerals from the mining pit head to the railway siding or beneficiation plant, whether this particular service is taxable under GST, that is a clarification here. So look at here. The issue which arose for consideration was whether transportation of minerals within mining area, say from mining pit head to the railway siding or beneficiation plant, etc., by vehicles deployed with a driver for a specific duration of time would be covered under entry number 18, which exempts the transportation of goods by road except by GTA. GTA services are always taxable, that we have already learned. So in entry number 18, we have studied that transportation of the goods by road other than GTA exempted from GST. Now the question is whether this transportation of minerals from the mining area to the railway siding, whether this covered under entry number 18. Answer is no. Not covered under entry number 18, sir. Why? You can see the reasons below. Usually in such cases, the vehicles such as tippers, dumpers, loaders, trucks, etc. are given on hire to the mining lease operators. Expenses of the fuel are generally borne by the recipient of the service. The vehicles with the driver are at the disposal of the mining lease operator for the transport of minerals within the mining area as per his requirement during the period of contract. Suppose that I am having 100 dumpers. Now, these 100 dumpers are given on hire basis to the mining lease operator. Now, how he is going to use that 100 dumpers? How frequently he is going to use it? It is purely at the option of the mining lease operator. Right, sir? See, the fuel expenses will be borne by the mining lease operator only. So such services are nothing but rental services of the transport vehicles with operator. See, I am just giving an hiring of that 100 trucks to the mining lease operator. That's it. I am not involving into the transportation of the minerals from the mining pit head to the railway siding. No, I am not involving into that area. I am the service provider. I am owning 100 dumpers. I'm just giving this 100 dumpers on rental basis to that mining lease operator. That's it. And how he going to be used at particular 100 dumpers, how frequently is going to use on a daily basis, it's his option and it's purely at his requirement. So I'm purely providing the rental services of transport vehicles. That's it. So the person who takes the vehicle on rent defines how and when the vehicles will be operated and determines the schedules, routes, and other operational consideration. So the person who gives the vehicles on rent with operator cannot be said to be supplying the service by way of transportation of the. Am I involving in the transportation of goods? No, I'm just giving on hiring of the dumpers. That's it. Once I handed over the dumpers to that leasing operator, mine leasing operator, right? Now at his option, he will use the dumpers. That's it. Are you following every one of you? So accordingly, it is clarified that such renting of the trucks and other freight vehicles with a driver for a period of time of service of renting of transport vehicles with operator and not the service of transportation of goods by road. Consequently, it is not eligible for exemption under entry number 18. So now whatever the services I am providing, that is renting of 100 dumpers, renting of 100 dumpers. That's a purely taxable supply. My services are not covered by entry number 18. As simple as that, as I am not involving into the transportation of the goods. See, I am not entering into any contract with the SECL, Southeastern Coalfields Limited, the company where I am working right now. Right. See, I am having 100 dumpers, but I am not entering any contract of transportation of the coal mines, coal from the mine pit head to the railway siding. No, my job is to give that 100 dumpers on rental basis. That's it. Okay, next. Clarification number 11. Clarification regarding the GST on payment of honorarium to the guest anchors. Right, sir. So whenever you are inviting the guest anchor for any kind of the speeches or classes, after the completion of that speech or class or lesson, you will pay certain honorarium to him. Now the question is whether the GST applicable on such honorarium or not. Look at here. This circular clarifies the applicability of the honorarium paid to the guest anchors. Examples also given here. Sunset TV and other TV channels invoice the guest anchors to participate in their shows and pay the remuneration to them in the form of honorarium. It is clarified that supply of the all goods and services are taxable unless exempted or declared as neither supply of goods nor a supply of service. Services provided by the guest anchors in lieu of honorarium attracts GST liability. Because the services provided by the guest anchors neither covered under exemption category nor covered as supply of goods or supply of services. Right, sir? So whatever the services provided by the guest anchors here in lieu of the honorarium, it will be attracting the GST liability. But of course, we need to see whether such guest anchors aggregate turnover, right, in the financial year exceeding 20 lakhs or 10 lakhs as the case may be or not. If exceeding 10 lakhs or 20 lakhs as the case may be, then he is liable for the registration and he is liable to pay the GST. Otherwise, he is not liable to take any registration and not liable to pay any GST. Clear, sir? Next. Clarification number 12. Clarification regarding applicability of the GST on services in the form of ART or IVF. What is ART? Assisted reproductive technology procedures such as in vitro fertilization. Now, these kind of services covered under healthcare services. And we have seen that healthcare services are exempted from tax. Right? If it is covered under the recognized systems of medicine. Now, whether this ART and IVF, in vitro fertilization, whether covered under recognized systems of medicines, answer is absolutely yes. And whatever the services in relation to the ART, IVF are exempted from the GST. It's covered under healthcare services category. It is a recognized system of medicine exempted from GST. And so generally, it becomes popular nowadays. Those couples who are not having the childs because of the so many their health issues, they are going for this IVF, ART. So those who are having the infertility problems, they're adopting, the IVF technology, right? Through IVF technology, they are becoming parents. It is a recognized system of medicine covered under healthcare services, exempted from GST. Look at here. The issue which arises for consideration was whether GST is applicable on services by way of ART such as IVF. Now, this is the routine provision, the existing provision we have discussed in the form of healthcare services. Healthcare services provided by clinical establishment, authorized medical practitioner, paramedics exempted from tax. Now, after that, healthcare services definition is explained. It means any service by way of diagnostics, treatment, or care for illness, injury, deformity, abnormality, pregnancy in any recognized system of medicines in India, and also including the services by way of transportation of the patient to and from a clinical establishment. but does not include hair transplant, cosmetic surgery. Then the general definition we have already discussed. Now, since the abnormality, disease, ailment of infertility is treated using ART procedures such as IVF, it is clarified that services by way of IVF are also covered under the definition of healthcare services. Means what? Since it is covered under the definition of healthcare services, the services by way of IVF also exempted from GST. Exempted from GST. Clear, sir? Every one of you. Next. Clarification number 13. Clarification regarding applicability of the GST on sale of land after leveling, laying down of drainage lines, etc. So generally, sale of land is covered under exemption category. If you remember Schedule 3, negative list of supply. In negative list of supply, you have discussed already. Right, sir? Negative list of supplies we have discussed already. Sale of land is neither a supply of good nor a supply of services. Hence, it doesn't attract any GST. Yes or no? So, as per para 5 of Schedule 3, sale of land is neither supply of the goods nor supply of services. Therefore, the sale of land does not attract GST. Land may be sold either as it is or after some development, such as leveling the land. If the land is consisting of some ups and downs, so if the land is like this, so you just leveled it, leveling or laying of drainage lines, water lines, electricity lines, etc. It is clarified that the sale of such developed land, also the sale of land, and it is covered by para 5 of Schedule 3 and accordingly does not attract GST. So whether you are selling the land as it is or whether you are selling the land after some developments, both are covered by Schedule 3. It is neither a supply of good nor a supply of service, hence doesn't attract GST. However, look at the provision. However, any service provided for the development of such land. See, you are the landowner, sir, but you would like to sell the land after some developments in the land. See, if you sell that land as it is, you won't get the good price. So you would like to make some developments. You need to, you would like to level the land. You would like to have some drainage lines, electric lines, water lines. So then whenever you are going for the selling of such land, you can explain to the buyer that, sir, if you buy this particular land, there is no additional expenditure you can incur. You need to incur on this land. Everything will be settled. There is electricity line, there is water connection is also there, drainage line is also there. So whereby you can bargain more money from the buyer. You can demand. So now for these kind of activities, you entered into a contract with Mr. X, who is a land developer. His business activities of providing water connections, providing electricity lines. Now, whatever the services you're receiving from Mr. X, that services are taxable. Right, sir? So the services provided for development of land, like leveling, laying of drainage lines, as the case may be, received by developers, shall attract GST at applicable rates for such services. Okay, ma. See, for leveling the land, for electricity lines connection, water lines connection, you need to take the services now from an outsider. So whatever the services provided by outsider to you in relation to leveling of land, drainaging of lines or electricity lines connection, that services are taxable. Clear, sir? Next. Clarification number 14. Clarification regarding hiring of vehicles by firms for the transportation of their employees to and from work. Simple answer in a single line answer. If these services are provided under a obligation, then it is liable to GST. Otherwise, it will be exempted. Right, sir? So look at here. The issue which arose for consideration was as to whether the engagement of non-air conditioned contract carriages by firms for transportation of their employees to and from work is exempt under section 15B. 15B exempts transportation of passengers. What we have studied in 15B, transportation of passengers with or without accompanied belongings by non-air conditioned contract carriage other than radio taxi. For radio taxi, it is a taxable, right? For transportation of passengers, excluding tourism. For again, tourism conducted to charter hire, these are taxable. The following now, even with respect to the transportation of by non-air conditioned contract carriage also, we have seen some amendments. What is amendment we have seen? Every one of you. The amendment we have studied here is about if the transportation of passengers by non-air conditioned contract carriage, if the services are, booked by e-commerce operators, then it will be a taxable service and the tax is payable by e-commerce operator. Do you remember? Right. So look at here. The said exemption would apply to the passenger transportation services by non-air conditioned contract carriages where the transportation takes place over a predetermined route on a predetermined schedule. The exemption shall not be applicable where contract carriage is hired for a period of time during such contract which the contract carriage is at the disposal of the service recipient, and the recipient thus free to decide the manner of usage, route, and schedule subject to the conditions of the agreement entered into with the service provider. So that means that here the hiring of the vehicles by the firm for the transportation of their employees to and from the work is a taxable supply. GST applicable. Right, sir? Next. Clarification regarding the applicability of GST on tickets of private ferry used for passenger transportation. Right, sir? See, we have seen in entry number 17, transportation of passengers by public transport. Right, that services are exempted. But of course, it should not be predominantly for the tourism purposes. If it is for tourism purposes, it will be a taxable supply. So transportation of passengers by a public transport in a vessel between the places located within the India, that is an exempted. Sir, here what do you mean by public transport? See, public transport means it should be a vessel, right, which used for the public transportation, right? So it will be used for the transportation of passengers from one place to another place within the India. Right. Now that public transport, that vessel could be owned by the government entity, could be owned by the private entity. Absolutely no problem. Even if it is a private vessel, but it is being used for the transportation of passengers from one place to another place within the India. Now it is also an exempted service. Public transport doesn't mean that it should be a government vehicle. No, there is no provision like that. So even if the transportation of passengers in a private ferry, it is also an exempted service, exempted from GST. Are you following, sir? Every one of you. So the circular clarifies the applicability of GST on private ferry tickets. For instance, private ferries are used as means of transportation from one island to another island in Andaman and Nicobar Islands. Entry number 17D, transportation of passengers by public transport other than predominantly used for tourism purpose. If used for tourism purpose, it will be a taxable supply. In a vessel between places located in India is exempted. So it's clarified that this exemption would apply to tickets purchased for transportation from one point to another, irrespective of whether the ferry is owned or operated by a private sector or by a PSU or a government. This is very important point. Irrespective of whether that ferry is owned or operated by a private sector or by a PSU or government. So it's further clarified that the expression public transport used in the exemption notification only means that the transport should be open to public. It can be privately or publicly owned. So that vessel, that ferry can be a privately owned ferry or publicly owned ferry and a government ferry. So the only exclusion is on transportation, which is predominantly for tourism. I've already mentioned you that, right? If the vessel is used for tourism purposes, then it will be a taxable supply, sir. Right, sir? Such as services which may combine with the transportation, sightseeing, food and beverages, music, accommodation, such as in shikara, cruise, etc. Shikara means it's kind of houseboats. Especially you can see these kind of houseboats in Kashmir. Whenever you're going for tourism in Kashmir, and if you would like to see the lakes in Kashmir, then it's better to book a shikara for you, houseboat, which contain all kinds of services in that boat. Right, sir? Next. So with that, we have completed the amendments, clarifications from the chapter exemptions, right? I think to the best of my knowledge at the beginning of this session, I might have told you that we are in the discussion of input tax credit amendments. No, a correction. We are just now completed the exemptions amendments, statutory updates from the chapter exemptions. Clear, sir? So just go through it once. Now, time for the amendments from the chapter input tax credit. Now, let us see one by one. ITC can be availed by the recipients only if the supplier have uploaded the relevant invoices or debit notes in their form number GSTR1 or invoice furnishing facility, and such details have been communicated to the recipients in form number GSTR2B. The details of ITC in respect of the said supply communicated under section 38 has not been restricted. Right, sir? What is section number 38? Section 38 deals with the provisions in relation to the furnishing of the details and of inward supplies. See, once the supplier filed GSTR1, an auto-populated document will be generated in the recipient's dashboard, that is GSTR2B. Now the recipients have to check the GSTR2B, right? And if all his supplies details are entered by the supplier, well and good. Otherwise, he has to provide the details in the GSTR2B. So that's what we have discussed in section number 38. So this provision came into effect from 1st of January 2022. Right? This provision, if you remember, we have already discussed in supplementary study material discussion. If you see, this is the supplementary study material discussion. So where in the input tax credit chapter, yeah, here itself, the very first amendment is the same. ITC can be availed by the recipients, right? Only if the suppliers have uploaded the relevant invoices or debit notes in GSTR1 or IFF, and such details have been communicated to the recipients in GSTR2B. We have already discussed this amendment in supplementary study material discussion, right, sir? So I am skipping here, right? So it's very simple, sir. Earlier, if you remember, I think did I given the notes for this? Let me check. Statutory updates, input tax credit. Yeah, here it is. The same provision. The same provision. Mr. X supplier, 100 invoices, right? Supplied to Mr. Y, gross value 10 crores, GST 50 lakhs. So GST year 1 uploaded, and X disclosed all the 100 invoices. Then he can avail the entire input tax credit. Mr. Y can avail entire input tax credit since all the details of that inward supplies have been uploaded by the GSTR, uploaded by the supplier in his GSTR 1. For supplier, it is an outward supply. He disclosed all the outward supplies in his GSTR 1. So the 100% of input tax credit can be availed by the recipient here. Case 2. Suppose Mr. X disclosed only 80 invoices in his GSTR 1. Right? So 80 invoices, gross value 88 crores, and ITC attributable 40 lakhs. Right, sir. Now, before the amendment, what is the case? With respect to the invoices uploaded, 100% of credit you can avail. With respect to the invoices not uploaded, 5% of the eligible credit you can avail. So total put together, 42 lakhs input tax credit can be availed by the recipient. But however, after the amendment, with respect to the invoices not uploaded by the supplier, the credit available is 0. Earlier, at least 5% of eligible credit you are able to claim as input tax credit. But now even that 5% have been removed. And department now simply said, dear recipient, you are entitled to avail the input tax credit only when your supplier have uploaded all the details of his outward supplies in his GSTR 1 and paid the tax to the department. That's it. If your supplier have not uploaded all the invoices or some of the invoices, accordingly, you're not entitled for input tax credit. So it is your responsibility. You have to make sure that your supplier going to disclose all his outward supplies in his GSTR 1. That's what we have already learned. The same provision reiterated here. Okay, now next. Now, one more amendment from this chapter, from this provision. Now, this is came into effective from 1st of October 2022. So that means this is not covered by supplementary study material. In supplementary study material, it covered amendments only up to 30th April 22. Now look at here. Subsequently, with effect from 1st of October 2022, a new clause BA has been added in section number 16.2 by Finance Act 2022 to stipulated another new condition for availment of input tax credit. See, there are many conditions we have seen for the availment of input tax credit. Right, sir? The supplier should file the GSTR 1. He should disclose all his outward supplies into that particular GSTR 1. Then the tax should have been paid to the government. The recipient should have the documentary evidence, right? So like this, we have seen some conditions for the availment of input tax credit. Now, one more new condition have been added. What is the new condition? It provides that input tax credit in respect of any supply of the goods or services or both is available to a registered person only if the details of input tax credit in respect of the said supply communicated to such a registered person under section 38 has not been restricted. So a communication should be given to the registered recipient. Dear registered recipient, right? I am being the supplier. I have uploaded all your supplies in my GSTR 1, right, with due respect. So now you can avail the entire input tax credit and there is no restriction applicable under section 38. Such communication should be given to the registered recipient. Okay, ma, every one of you. Next. Second amendment from this chapter. Time limit for the availment of input tax credit by a registered person in respect of any invoice or debit note pertaining to a financial year extended up to 30th November of the following financial year. Section 16.4 amended. What is section 16.4? 16.4 explains about the time limit for the availment of the input tax credit. Sir, no. Right? Now, what is the time limit for the availment of input tax credit? See, let me explain you this with the help of the notes for the better understanding. Chapter number 6, input tax credit. Input tax credit. Section 16(4). Time limit. For the availment of input tax credit. Before the amendment, it will be due date for the filing of GSTR 3B for the month of for the September month of the next financial year, or date of filing of annual return, whichever is earlier. So this is used to be the time limit, right, till this particular amendment. The due date for the filing of GSTR 3B for the month of the September of the next financial year, or the date of filing of the annual return, whichever is earlier. Now, after the amendment, what is the provision? After the amendment, it will be November 30th of next financial year, or date of filing of annual return, whichever is earlier. Date of filing of annual return, whichever is earlier. This is the amendment. So the time limit for the availment of input tax credit have been extended. Earlier, the due date for the filing of September month return of the next financial year, it will be, 20th of October, or the date of filing of annual return. Generally, the due date for the filing of annual return, December 31st. So October 20 or December 31st of next financial year. Whichever is earlier, mostly October 20 will be the last date for the availment of the input tax credit. But now it's been November 30 or December 31st, whichever is earlier. General cases I'm talking about. See, if you file the annual return before November 30, suppose that you file annual return on November 20th itself. So November 20 will be the last date for the availment of input tax credit for the financial year 2022-23. Are you following now, every one of you? Right? So earlier max we can see, now we are in the financial year 2022-23, right? So we are in the last month of the financial year 22-23. Now with respect to financial year 22-23, up to which date maximum we can avail input tax credit of financial year 22-23? Before the amendment, max up to we can avail October 20, 2023. If the annual return filed prior to October 20, then the date of filing of annual return. Suppose if you file the annual return on October 1st itself, so the maximum time limit up to which you can avail input tax credit is 1st October 2023. But this is before the amendment. Now after the amendment, it's been increased to November 30. So November 30, 2023, or date of filing of annual return, whichever is earlier, is the maximum time up to which you can avail input tax credit of the financial year 2022-23. Clear, everyone? That's the amendment. So earlier, section 16.4 reads as follows. A registered person shall not be entitled to take input tax credit in respect of any invoice, debit note, supply of goods or service both after the due date for the furnishing of return under section 39 for the month of September of the following, the end of the financial year to which such invoice or debit note pertains to, or furnishing of the relevant annual return whichever is earlier. Now, with effective from 1st of October 2022. From when this amendment take effect, Amma? 1st of October 2022. Section 64 has been amended. Now, what is the amended provision? This is the amended provision, Amma. Amended provision. Now, what is the amended provision? Amended provision saying that a registered person shall not be entitled to take input tax credit in respect of invoice or debit note for such supply of goods or services or both after the 30th day of the November following the end of the financial year to which such invoice or debit note pertains, or furnishing of the relevant annual return whichever is earlier. That is what I have mentioned in my running notes. Okay, ma. November 30th of the next financial year or the date of filing of annual return whichever is earlier. Now, this is a time limit you have to remember. You just ignore this time limit. Clear? Next. Clarification number 3. Amendment number 3, sorry. Date of issuance of debit note to determine the relevant financial year for the purpose of section 16.4. Right? What is section 16.4? Just now we have discussed the time limit for the availment of the input tax credit. So whenever the debit note is being issued, right, sir? Now, depending upon the date on which you have issued debit note, it will be decides the relevant financial year. Suppose that if I have issued the debit note, sir, I have issued the invoice on 1st of March 2023. Now, due to some issues, I happen to issue a debit note which I have issued on 10th of April 2023. If you see here, the invoice belonging to financial year 2022-23, whereas my debit note belonging to financial year 2023-24. Right, sir? Now, when I am looking into the input tax credit, so up to which date maximum I can avail input tax credit? With respect to the invoice, you have to consider the financial year 22-23. So the maximum time limit up to which you can avail credit will be 30th November of 2023 or the date of filing of annual return, whichever is earlier. When it comes to debit note, since the debit note belonging to financial year 23-24, the maximum time limit up to which you can avail input tax credit with respect to debit note issue is 30th November of 2024 or the date of filing of the annual return, whichever is earlier. See, when it comes to the debit note, how to decide to which financial year it is pertaining to? Is it depending upon the date of issuance of the debit note, or is it depending upon the date of issuance of underlying invoice? No. It's purely depending upon the date of issuance of debit note only. Right, sir? So look at here. Section 16.4 was earlier amended by Finance Act 20 so as to delink the date of issuance of debit note from the date of issuance of the underlying invoice for the purposes of ITC. So a doubt arises as to which the following dates are relevant to determine a financial year. So date of issuance of debit note, date of issuance of the underlying invoice. Now, in this case, a circular has been issued. It is clarified that in the case of debit notes, very important point, in the case of debit notes, the date of issuance, in the case of debit notes, the date of issuance of the debit note, not the date of issuance of the underlying invoice, shall determine the relevant financial year. See, you need to consider both of them separately. Invoice separate, debit note separate. With respect to invoice, you have to consider the date of issuance of invoice. That will decide the relevant financial year of that invoice. With respect to debit note, the date of debit note you have to consider. The date of issuance of the debit note decides the financial year for which the debit note pertains to. Okay, sir, every one of you. So example also provided here. A debit note dated 7th of July 2021 issued in respect of the original invoice dated 16th of March 21. Right, sir? So ఇక్కడ మీరు అబ్జర్వ్ చేయండి, the date of issuance of invoice, 16th of March 2021, which means it is belonging to the financial year 2020-21, whereas the date of issuance of the debit note 7th of July 2021, where it is belonging to financial year 2021-22. Are you following, sir? So as the invoice pertain to financial year 2021, the relevant financial year for availment of input tax credit in respect of the said invoice shall be financial year 2021. However, the debit note has been issued in financial year 21-22. The relevant financial year for availment of input tax credit in respect of the said debit note shall be financial year 21-22. Clear, sir? So we need to look into the invoice separately, debit note separately. Next. Amendment number 4. Availment of ITC not blocked in the case of leasing other than leasing of motor vehicles, vessels, and aircrafts. See, leasing of motor vehicles, vessels, and aircrafts, it's covered under blocked credits under blocked credits. Hence, no ITC is allowed. But the most important point you have to understand here is that only the leasing of motor vehicles, vessels, and aircrafts covered under blocked credits. Leasing of other assets not covered here. So the input tax credit with respect to the leasing of other assets like leasing of plant and machinery, leasing of a building, leasing of a furniture, these are not covered under this blocked entry. Hence, the input tax credit with respect to leasing of all other assets other than motor vehicles, vessels, and aircrafts can be availed and can be claimed by the service recipients. Are you following, sir? So that's why ITC not blocked in the case of leasing other than leasing of motor vehicles, vessels, and aircrafts. Clear, sir? So it was clearly mentioned. So let me take you directly to the, so leasing referred herein refers to leasing of motor vehicles, vessels, and aircrafts only, and not leasing of any other assets. So accordingly, availment of ITC is not barred in case of leasing other than leasing of motor vehicles, vessels, and aircrafts. Only this blocked credit, right? Section 17(5)(b), blocked credits we have seen, right? Only the leasing of that motor vehicles, aircrafts, and vessels blocked under. Let me show you in my material also. Restricted credits, section 17(5), you can see, and the very first one itself. The following items are covered in the restricted items: motor vehicles and conveyances, right? And vessels and aircrafts. Of course, we do have some exceptions. If such motor vehicle used for further supply of such motor vehicle, transportation of passengers, imparting training on driving, so then you can avail input tax credit. But purely leasing of these particular motor vehicles and conveyances, the credit will be blocked under. Clear, every one of you? Okay, next. Proviso after section 17(5)(b) clause 3 applies to the entire section 17(5)(b). Section 17(5) blocked credits, just now we are discussing. 17(5)(b), see here also we have studied the 17(5)(b) only. 17(5)(b). food and beverages, outdoor catering, beauty treatment, healthcare services, cosmetic and plastic surgery, leasing, renting, hiring of motor vehicles, vessels, aircrafts. It is a blocked credit. Clear, sir? It's a blocked credit, right? Now, here, what is this provision of the proviso given in section 17(5)(b) clause 3? This is mentioned clearly here. Provided the input tax credit in respect of such goods or services or both shall be available where it is obligatory for an employer to provide the same to its employees under any law for the time being in force. This point we have already discussed, right? See, if these services of membership of a club, health and fitness center, traveling benefits, right? If these services provided by the employer to their employee under an obligation, then we can avail input tax credit on such services. The input tax credit is not blocked, right? So that's the provision mentioning here, right, sir? Next. Removal of reference to form number GST2 from rules 36 to 42 and 43. Removal of reference to form number GST2. Now, what is this all amendment about? You can see. First one to the amendment made in section 38, which will be, we are going to be discussed in chapter number 13, returns. Of course, in our material, it is chapter number 10. It is chapter number 10. What is section 38 is actually about furnishing of the details of inward supplies in GST2B, which is an auto-populated document. In section number 38, we got amendments. Okay, let's see that in chapter number 10, returns. So with regard to the removal of form number GST2 and doing away with two-way communication process. Now, with effect from the 1st of October 2022, Rule 36(2) has been amended to remove the reference to the form number GST2 therefrom. Further, it has been provided that the details of invoices or debit notes for ITC availments shall be communicated in form number GST2B. Right, sir? See, now there is no need of making any references in GST2. It is enough that the details have been communicated to the recipient in the form number GST2B. Are you following, sir? Every one of you. Right? So what is actually the extract of the amendment in the rule number 36(2)? See, 36(2), the original provision is this. Now, in that, this particular portion have been removed, and this particular portion have been removed. Input tax credit shall be available by the registered person only if all the applicable particulars as specified in the provisions of this chapter 6 are contained in the said document. That's it. And the relevant information as contained in the said document, if furnished in the form of GST2 by such person, not required. So no more furnishing of the details in GST2 by the recipient. That provision has been done away with, removed with effect from the 1st of October 2022. So clearly mentioned here to removal of form number GST2 and doing away with two-way communication process. See, when supplier declaring these are all my outward supplies in GST1, the same becomes inward supplies to recipient. So there is no need that recipient again communicate the same thing in GST2. So that's why this two-way communication process done away with. Right, sir? Every one of you. Next. What is the provisions of chapter 6? It's clearly mentioned here. It relating to tax invoice, credit notes, and debit notes only. Now, amendment number 7. In the case of non-payment of the value of supplies plus tax in respect of an inward supply within 180 days, ITC so avail need to be paid along with the interest under section 50 while filing the GST at 3B. Right, sure. See, whenever the supplies have been made The consideration with respect to such supplies, including the tax element, should be paid to the supplier within a period of 180 days. Within a period of 180 days from the date of issuance of invoice. If paid within 180 days, whatever the credit availed by the recipient earlier, that will be well and good. Suppose that, see, the credit availment is not in relation to the payment of consideration to the supplier. As and when the goods are received into your premises, you can avail input tax credit. Yes or no? What is the criteria for the availment of input tax credit? Receipt of the goods by the recipient into his premises. Yes or no? Right? Suppose that in my electronic credit ledger, immediately after receiving the goods into my premises, I have availed input tax credit. I have availed input tax credit. If I paid the consideration to the supplier, including the tax element, within 180 days, the department won't touch my credit. However, if I have failed to do so, that means if I failed in the payment of that value of supply and tax element to the supplier within 180 days from the date of issuance of invoice, whatever the credit so far, whatever the credit I've already availed with respect to such supply, that will be reversed. That means that will be debited to my electronic credit ledger account along with interest element. Along with interest element. Right, sir? See, after 180 days, if you repay, then at the time of actual payment, again you can recredit. You can take this as recredit. Okay. See, further timing, forget about the recredit and only discuss up to what is the consequences if I have not paid the consideration and tax element within 180 days. So, rule number 37 provides the reversal of ITC in the case of non-payment of consideration. Subrule 1 and 2 have been substituted and Subrule 3 has been omitted with effect from 1st of October 2022. Consequently, the amended position of law is as follows. Now, what is the amended position of law? The registered person must pay to the supplier the value of the goods and or services along with the tax within 180 days from the date of issuance of invoice. That's the old provision. Old provision. Okay. Now, however, where the registered person who has availed ITC on any inward supplies fails to pay to the supplier thereof the amount towards the value of supply along with the tax payable thereon within the time limit specified, that is 180 days from the date of issuance of invoice, shall pay an amount equal to the ITC availed in respect of such supply along with the interest payable thereon under section 50 while furnishing in the form number Gst.3 for the tax period immediately following the period of 180 days from the date of issuance of the invoice. Suppose that if 180 days time limit completed in the month of October, then October month return when you are going to be filed in the month of November 20. So November 20, I'm going to file the Gst.3 of October. So in that particular return itself, right, sir, I need to pay out whatever the input tax credit I've already availed along with the interest. Of course, we have some exceptions this 180 days period. The exceptions are where the supplies on which the tax is payable under reverse charge, demote supplies without consideration, and additions made to the value of supply and account of the supplier's liability. Right. Next. 50% of inadmissible input tax credit to be reversed in Gst.3 by a banking company or a financial institution. Rule number 38 amended. What is rule number 38? So rule number 38 discussed about the availment of the input tax credit by the banking companies or financial institutions. That is what we have learned now. Claim of input tax credit by the banking companies or financial institutions. Right, sir. So here, look at, with effect from the 1st of October 2022, rule number 38, providing for claim of credit by a banking company or a financial institution has been amended to remove the reference to form number GST2 therefrom. Right, sir. See, form number GSTR2, I've already discussed. There is no need by the recipient to disclose all his inward supplies in GSTR2 because he already confirmed in the GSTR2B. The confirmation is given by the supplier directly in the form of GSTR2B. In GSTR1, well, when he uploaded all his invoices in GSTR1, that will be auto-populated in the recipient's dashboard in the form of GSTR2B. Right, sir. Now look at the provisions. Amended rule number 38 reads as follows. A banking company, financial institution, including NBFCs, engaged in the supply of services by way of accepting deposits, extending loans, or advances, chooses not to comply with the provisions of subsection 2 of section 17. Now, what is section 17 subsection 2? Section 17 subsection 2 deals with, see, whenever you are utilizing your inward services partly for making taxable supplies, partly for making exempted supplies, how the input tax credit will be availed explained in section 17.2. Yes or no? Section 17 deals with what? Apportionment of input tax credit. Yes or no? Apportionment of input tax credit. Section 17 deals with. And also including blocked credits. 17.2 deals with where the supplies are utilized partly for making taxable supplies and partly for making inward exempted supplies. How the input tax credit will be apportioned will be explained by 17.2. Of course, here the banking company not opting the 17.2 provisions because banking company also having another option, that is choosing 50% of the eligible input tax credit on a monthly basis. Do you remember? From the total eligible input tax credit, it can avail 50% straight away. The remaining 50% will be lapsed. Yes or no? It is also having that option only. In accordance with the option permitted under subsection 4 of that subsection, of that section. What is subsection 4? Just now we have discussed 50% of the eligible credit. So that's why it is not opting 17.2, rather it is opting for 17.4, 50% of eligible credit. It is purely at the option of the banking company. Either it can choose for 17.2 or it can choose for 17.4. Right? So shall follow the following procedures, namely, the said company or institution shall not avail the credit of tax paid on inputs and input services that are used for non-use business purposes. See, one of the condition is that in order to avail the input tax credit, whatever the inward supplies you have received must have been utilized for your business purposes only. If you have utilized for non-business purposes, credit not allowed. So that's why clearly mentioned shall not avail. And the credit attributable to the supplies specified in subsection 5 of section 17. Subsection 5 what? Blocked credits. Ineligible credits. That's clause A. Clause B. The said company or institution shall avail the credit of tax paid on inputs and input services specified in second proviso to subsection 4 of section 17 and not covered under clause A. 50% of the remaining output amount of input tax credit. That's what I've said now. 50% of the remaining amount of input tax credit shall be the input tax credit admissible to the company or institution, and the balance amount of input tax credit shall be reversed. I've already mentioned you, only 50% you can avail, the remaining 50% will be lapsed. And coming to the clause D, it has been removed and you just ignore. That's removed and next. That's it. So with this, we have completed the amendments from the input tax credit chapter also. So just go through it and ask the doubts if any. So I'm stopping the session here. In the next session, we are going to discuss amendments from the chapter registration. Okay, ma. So see you in the next session. Till then, have a good day and good night, sir. A very good morning, students. Welcome to the straight start taxation classes. We are discussing statutory updates for May 2023 examinations for the subject of goods and services tax. So in the last session, we have completed up to the statutory updates till the chapter input tax credit. Right, sir? Now time for the statutory updates from the chapter registration. The very first amendment is enhanced limit of 40 lakhs for registration available to the persons exclusively engaged in making taxable supplies of the goods, not applicable to the suppliers of the fly ash bricks, blocks, building bricks, bricks of fossil mills, earthen, roofing tiles, etc. See, this amendment we have already discussed in the supplementary study paper, which contains the amendments up to 30th April 2022. So there itself we have discussed this amendment only. But don't worry, I'll discuss once again. Even this amendment we have seen in the chapter charge under GST under the topic composition scheme. So the persons, the suppliers of the fly ash bricks, blocks, building bricks, bricks of fossil mills, earthen or roofing tiles, etc. These people are not entitled to adopt composition scheme, and as well as for these people, the enhanced threshold limit of 40 lakhs for registration not applicable. So generally, in order to get this benefit of enhanced threshold limit of 40 lakhs, there are two conditions to be satisfied. Number one, he must be exclusively engaged in the supply of the goods. And number two, that supply should be happen within the state. So he must be engaged in the intrastate supply of the goods. He must be engaged in the intrastate supply of the goods. When both of these conditions are satisfied, then the threshold limit for the registration 40 lakhs rupees. 40 lakhs rupees. Now this benefit of 40 lakhs not applicable for the suppliers of flash bricks, blocks, building bricks. Okay now, right? So earlier this benefit is not available only for the manufacturers of the ice cream, other edible ice, whether or not containing cocoa, pan masala, and all the goods relating to tobacco and manufactured tobacco substitute. However, with effective on the 1st of April 2022, some more goods have been added into this particular list. What are the goods added, Amma? The goods added: flash bricks, flash aggregates, flash blocks, bricks of fossil mills, similar siliceous earths, building bricks, earthen or roofing tiles. Clear? So even these people also not eligible for the enhanced threshold limit of 40 lakhs. Clear? That's the first amendment. Now, second amendment, registration liable to be cancelled where a composition taxpayer fails to furnish a return for a period of financial year beyond 3 months from the due date, fails to furnish a return for a financial year beyond 3 months from the due date, and a person other than composition taxpayer fails to furnish the returns for such continuous tax period as may be prescribed. Now, this amendment came effect from 1st of October 2022. See, there we have seen some grounds for the cancellation of the registration. Right, sir? Right. If you see in our regular material from the chapter registration, so this is our regular material. So registration 173. Who's liable for registration? Then persons liable for compulsory registration, not liable for registration, procedure for registration, changes in registration. Yes, here comes the cancellation of registration and revocation of cancellation. Now, cases where the registration is liable to be cancelled. In that, registration can be cancelled either by the proper officer on his own or on allocation by the application by the registered person. So these are all the grounds where your registration is subject to be cancelled by the proper officer or obligation from the registered person. And these are all the ground where the proper officer have every right to cancel the registration of a registered person on suo motu. So here you can see the heading, registration can be cancelled by the proper officer on his own suo motu. Right, and in this you can see here we have seen the grounds like the registered person does not conducting any business from the declared business, registered persons issue the invoice or bill without supply of any goods or services in the violation of the provisions, right? And you can see here anti-profiteering measures. And now comes a registered person has not filed a return for a continuous period of 6 months. 3 consecutive periods in the case of persons who opted for composition levy. Now, here we got, see, this particular provision, in this particular provision, we got amendment now. Of course, the old provision continued to be in existence. Here also you can see monthly filer, right? It was mentioned like monthly filer. Registration can be cancelled. Yeah, here it is. Right. So being a registered person to file the return under section 39(1). Section 39(1). What is section 39(1), Amma? Section 39(1) is a GSTR 3B. GSTR 3B. For each month a part thereof, that is monthly return filer, has not furnished the return for a continuous period of 6 months. So existing provision is already there. Excuse me. Existing provision is already there. Here it is. A registered person has not filed returns. Observe the difference. Here in the amendment, they clearly said section 39(1). And in the existing provision, it was mentioned has not filed returns. So return could be GSTR 1. Return could be GSTR 3B. So the 6 months condition, right? Even after the amendment also the 6 months condition is there. But that 6 months continuous period condition is now applicable only for GSTR 3B. So if a monthly return filer fails to furnish the GSTR 3B for a continuous period of 6 months, then his registration is subject to the cancellation. Are you following, sir? Are you understanding, sir? Every one of you. Whereas if a person adopted for QRMP scheme, see, this is the first point is with respect to monthly return filer. Second point is with respect to QRMP. Quarterly return, monthly payment. Instead of filing the returns on every month, you can opt for the quarterly return filings by paying the tax on monthly basis. That is what QRMP scheme. You have to pay the taxes on monthly basis only, but you got the option of filing the returns on a quarterly basis. Are you following or not, Amma, every one of you? So when you opted for the QRMP scheme, then if you fails to furnish a return under section 39(1), then and if you are unable to furnish the return for a continuous period of 2 tax periods. What do you mean by the 2 tax periods here? 2 tax periods means to be 2 quarters. 2 quarters. Suppose that if you fails to furnish for Q1 and Q2 returns, then the proper officer has every right to cancel your registration on suo motu basis. on suo motu basis. Are you following or not, every one of you? Right? So you can see here under the existing provision, they simply mentioned as returns, right? Now this provision has changed, like a registered person who has not filed the GSTR 3B, if he is happened to be a monthly filer, if he fails to furnish the GSTR 3B for a continuous period of 6 months, then his registration is subject to cancellation. At the same time, if a registered person adopted QRMP scheme and fails to furnish the returns for a continuous 2 tax periods, that's the change on it. Now, sir, what about the first change actually? What is this amendment about? See here, a composition taxpayer. It is about a composition taxpayer who fails to furnish a return. What kind of the return a composition taxpayer is going to file? Annual return. GSTR 4. What is the due date for the filing of GSTR 4? April 30 of next financial year. April 30 of next financial year. So a composition taxpayer fails to furnish a return, that is GSTR 4 for a financial year beyond 3 months. For a financial year, that is why I said annual return, GSTR 4 only once filed in a year, right? If he fails to furnish that return for a financial year beyond 3 months from the due date, what is the due date? April 30. From April 30, 3 months means May, June, July. If the composition taxpayer fails to furnish the GSTR 4 on or before July 31st, then from August 1st onwards, the proper officer has every right to cancel the registration of that composition taxpayer. See, the composition taxpayer supposed to file the GSTR 4 on or before April 30. That's the original due date. Still, the department given you additional 3 months time period for the filing of GSTR 4. Of course, with the fines, penalty, late fees, everything. Even after providing the 3 months additional time period for the filing of your GSTR 4, if you still not filed, then your registration is subject to cancellation. Okay, next, second point. A person other than composition taxpayer fails to furnish returns. See, here they mentioned the returns. Means it could be GSTR 1, it could be GSTR 3B. Fails to furnish the returns for such continuous tax period as may be prescribed. See, this is an open criteria. If the proper officer deems fit and thinks fit that, okay, this person is not filing the returns for a continuous period of 3 months, okay, let us cancel his registration. Because here they mention such continuous tax period. Now it is purely at the option of the proper officer to decide how many months of returns to be not filed by the supplier in order to make his registration cancelled. It is a kind of a weapon that can be used by the proper officer to cancel your registration. Even if he thinks 2 months is enough, okay, Babu, you are not filed tax returns for a continuous period of 2 months, I am canceling your registration. Sir, what 2 months? Yes, such continuous tax period. It's my right to decide what is the what do you mean by the continuous tax period here? As may be prescribed. A powerful weapon is given to the proper officer here. So the 6 months time limit, what we have seen here is this is only for GSTR 3B. Only for GSTR 3B. And this is containing any return. GSTR 1 or GSTR 3B. Are you following or not, Amma? That's the amendment here. For composition taxpayer, if he fails to furnish beyond 3 months from the due date, his registration subject to cancellation. Other than composition taxpayer, if he fails to furnish any of the returns, either GSTR 1 or GSTR 3B or both, for such continuous tax period as may be prescribed by the proper officer. Clear, everyone? That's the amendment given, Amma. So you can see the existing tax provisions and amended provisions. The proper officer may cancel the registration of a person from such date, including any retrospective date as he may deem fit, where he a person paying the tax under section 10. What is section 10? Composition scheme. What is section 10? Composition scheme. Has not furnished returns for a 3 consecutive tax periods. Now, in the place of that, a person paying tax has not furnished the return for a financial year beyond 3 months. This is a new provision brought under. Now, in this provision, this existing provision, you forgot earlier what is the provision, Amma? If any person opted to composition scheme and fails to furnish the tax return for a continuous 3 tax periods, his registration is subject to cancellation. But now it's clearly mentioned he's going to file anyhow only one return, that is GSTR 4 annually once. If he fails to furnish that return within 3 months from the due date, his registration is subject to cancellation. Okay. Next, other than composition scheme, they said a continuous period of 6 months. But now they said what, Amma? For such continuous tax period. Such continuous tax period, this will be decided by whom, Amma? Proper officer. Okay. Next. Deemed revocation of suspended GST registration upon furnishing of all the pending returns by the taxpayer. Right, sir? Just now we have seen when it comes to composition taxpayer, if he fails to furnish, right, his GSTR 4 within 3 months from the due date, then his registration is subject to cancellation. And in case of other taxpayers, if he fails to furnish the returns for such continuous tax period as may be prescribed, then his registration is subject to cancellation. Suppose that I'm a composition taxpayer. Now, I haven't filed my GSTR 4 on or before July 31st. April 30 is the original due date. But of course, even after the due date also, I get a time period of 3 months, May, June, July. So on or before July 31st, I should file my GSTR 4. Even after the July 31st also, even if I fail to do so, then my registration is subject to cancellation. So cancellation proceedings have been started by the proper officer. But immediately when I came to know about the cancellation proceedings being started by the proper officer, on August 10th, I have filed my GSTR 4. Now, whenever I filed the GSTR 4, by the time the cancellation has not been done by the proper officer, then whatever the cancellation proceedings commenced deemed to be cancelled. Deemed revocation of suspended GST registration. See, whenever the cancellation proceedings started, then my GST registration under suspension. Not cancelled, Amma. Cancel avala. Not yet cancelled. It is under suspension. Right, sir? Okay. But whenever I have filed my GSTR 4, then that suspension will be cancelled. See, during the period of suspension, I cannot do any GST transactions. But when my suspension got lifted, then I can enter into any kind of GST transactions. Yes or no? But the main condition is that by that time, the cancellation has not been completed. It is still under process. Then only the deemed revocation of suspension will be applied. So, Chundama, as seen above, the proper officer may cancel the registration of a composition taxpayer who has not furnished the return for a financial year beyond 3 months, or any registered person other than composition taxpayer has not furnished the returns for such continuous tax period. Now, Rule 21A contains the provisions relating to suspension of registration, and its sub-rule 4 provides for deemed revocation of suspension. The said rule has been amended to provide that there will be deemed revocation of suspension upon furnishing of the pending returns, where GST registration was suspended due to non-filing of GST return for a financial year beyond 3 months, right? Or returns for such continuous tax period. This is very, very important point, subject to the condition that the registration has not been cancelled by the proper officer. This is very important point. See, the demote revocation applicable only when your registration has not been cancelled by that time. The cancellation proceedings is still under process, but not yet completed. Then the demote revocation provisions applicable only. Okay, now next. Amended Rule 21A4 provides as follows. The same provision mentioned here, and right? Next. The same provision. The registration has not already been cancelled by the proper officer, then the suspension of registration shall be deemed to be revoked. Revoked means cancellation, right? Revoked upon furnishing of all the pending returns. So whatever the pending returns are there, first clear all the pending returns, file all the pending returns, then you can say to your proper officer, sir, my all the returns are updated. I have filed all my pending returns. Please lift out my proceedings of cancellation of registration. So you can request, sir, no. So accordingly, the cancellation proceedings will be lifted out. The suspension will be lifted out. Clear, Amma? Next. Registration liable to be cancelled if monthly return filer. Just now I have discussed all this. When it comes to monthly return filer, the department wait up to 6 consecutive tax period, 6 months. If you fails to furnish for a consecutive period of 6 months, your GST at 3B, then your registration is subject to cancellation. And when it comes to QRMP scheme provider, right, 2 consecutive tax period. If he fails to furnish the GST at 3B for the 2 consecutive tax periods, then his registration is subject to cancellation. Clear? So these are all the amendments from the chapter registration. Okay, sir. Now let's moving on. The chapter number 8, tax invoice, credit notes, and debit notes, e-way bill. Tax invoice, credit note, debit notes, and e-way bill. Chapter number 8. Let us see the amendments from this chapter. First one, e-invoicing is mandatory for all the registered businesses with aggregate turnover in any preceding financial year from 1718 onwards greater than 10 crores. See, when the concept of e-invoicing introduced for the first time from 1st of October 2020, the aggregate turnover limit is greater than 500 crores. You believe it or not? When this concept for the first time introduced, right, by the Finance Act 2020, the aggregate turnover limit is 500 crores. Right? But that aggregate turnover limit got reduced substantially. Now it is 10 crores only. So from the financial year 2017-18, because our GST was introduced on 1st of July 2017. So that's why from the financial year 17-18, 18-19, 19-20, 20-21, 21-22, 2021-22, right, sir? Now, in any of these preceding financial years, our current financial year is 2022-23. Okay, ma'am. Current financial year. In any of these preceding financial year, if aggregate turnover exceeded 10 crores, then in the current financial year, e-invoicing is mandatory. E-invoicing is mandatory. See, it's not required to that aggregate turnover should exceed 10 crores in all the financial years. No. Even if in one financial year, suppose that in financial year 1920, your aggregate turnover exceeded 10 crores. then in the current financial year, e-invoicing is mandatory for you. Are you following or not, Amma? Right? So this amendment is containing the reduction in the aggregate turnover, sir. So look at here. With effect from the financial year 1st of October 2020, invoicing was made mandatory for all the registered businesses with an aggregate turnover in any preceding financial year from 1718 onwards greater than 500 crores for issue of all B2B invoices. Since then, the threshold limit of aggregate turnover for issuing the invoices is being progressively reduced. So with effect from 1st of October 2022, such limit has been reduced to 10 crores. Thus, e-invoicing is mandatory for all the registered business entities with an aggregate turnover in any of the preceding financial year from 1718 onwards greater than 10 crores. Okay, ma. Right? In any one preceding financial year, containing the aggregate turnover more than 10 crores, then in the current financial year, e-invoicing is mandatory. Okay, ma. Next, second amendment. Government departments and local authorities exempted from the issuing of e-invoices. Right, sir? See, e-invoicing is not applicable for certain entities only. We have some exceptions we have already discussed. If you see in our material, tax invoice, debit notes and credit notes, tax invoice, debit notes, credit notes, invoicing, HSN code, tax invoice, e-way bill, e-invoicing. Look at here, ma. E-invoicing. Okay. Now you can see here the reduction of the aggregate turnover, initially 500 crores, then 100 crores, then 50 crores, and after that it reduced it to 20 crores, then again reduce it to 10 crores. Okay, now, and you can directly see here non-applicability e-invoicing. Yeah, the persons exempted from issuing e-invoice. Who are they, Amma? Special economic zone units, SEZ units, insurance companies, banking companies, including NBFCs, GTAs supplying the transportation of goods in a goods carriage, supplier of passenger transportation services, and supplier by way of exhibiting the movies in a cinematography films in the multiplex screens. So at present, only these people are exempted from issuing the e-invoice. Now in this list, two more people were added, Amma. Who are they? Government departments and local authorities. These people also now exempted from e-invoicing. So earlier only these people got exempted. Now with effect from 1st of June 2021, government departments and local authorities exempted from issuing the e-invoice. Okay, now everyone. Next. So they have to make, the taxpayers have to provide a declaration. Such taxpayers are now required to provide a declaration on the tax invoice stating that though their aggregate turnover exceeds the notified aggregate turnover for invoicing, they are not required to prepare an e-invoice. See, all these people, SEZ units, insurance companies, banking companies, NBFCs, these people have to give a declaration. See, even though our aggregate turnover exceeded 10 crores, still we are not required to issue the e-invoices. Right, that declaration have to be given by them. Right, next. That is what given here, a declaration. And this is the format of the declaration. I or we hereby declare that though our aggregate turnover in any preceding financial year is more than aggregate turnover, we are not required to prepare an invoice. This declaration they have to give, Amma. Okay, now who have to give? SEZ units, banking companies, insurance companies, NBFCs, GTA, who is providing the transportation of the goods by goods carriage, passenger transportation service providers, right? Government departments and local authorities. These people have to give this declaration. Next. Clarification in respect to the applicability of the dynamic QR code. So for dynamic QR code, the limit continues to be 500 crores. There is no change, right, sir? It is also introduced from 1st of December 2020 for all the B2C invoices issued by a registered person whose aggregate turnover in any of the preceding financial year exceeding 500 crores. So they are mandatorily have to issue a dynamic QR code. Compulsory they have to issue. So dynamic QR code to be provided on invoice issued to a person having a UIN, unique identification number. To whom this UIN will be allotted? Specified international organizations. For them, this unique identification will be allotted. Unique identification code will be allotted. Yes or no? So whenever you are issuing an invoice to the UIN holder, right, sir? So dynamic QR code shall be there on the invoice. An invoice issued to the UIN holder is to be considered as an invoice issuing to the B2C in the form of a B2C supply. So you have to comply with the dynamic QR code requirements. Any person who obtained a UIN is not a registered person as per the definition of registered person. Therefore, any invoice issued to such person having UIN shall be considered as an invoice issued for a B2C supply and shall be required to comply with the dynamic QR code provisions. In some instances of the retail sales over the counter, the payment from the customer is received on the payment counter by displaying a dynamic QR code on a digital display. Whereas the invoice along with the invoice number generated on the processing system being used by the supplier or merchant after receiving the payment. So a dynamic QR code will be displayed on a digital board. Then we have to scan that QR code. Automatically the invoice generated, which contains the invoice number and everything. In such cases, it may not be possible for the merchant or supplier to provide the details of the invoice number on the dynamic QR code. However, each transaction, that is receipt of payment from a customer, having a unique order ID or sales reference number, which is linked with the invoice for the said transaction. So this is just a theoretical, right? It's not so important from the examination point of view. It is just a theoretical part. See, whenever you are going to a retail sales shop, you purchase something, some provisions, then you ask for QR code. That supplier has given you a QR code. Then you scanned it, automatically the amount will get generated. Then you paid that amount on it. So in that, it's not that possible to provide the dynamic QR code on invoice. But that particular transaction contains a unique order ID, a sales reference number, which is linked to that invoice only. So the question arises for consideration whether in such cases the order ID or reference number for such transaction can be provided in the dynamic QR code displayed digitally instead of invoice number. It has been clarified that in such cases, the unique order ID or unique sales reference number, which is uniquely linked to the invoice issued for the said transaction, may be provided in dynamic QR code. Right, sir? Every one of you. Next. The purpose of dynamic QR code is to enable the recipient or customer to scan and pay the amount to be paid to that merchant or supplier in respect of the said supply. Why? Yes, absolutely. See, whenever there is a dynamic QR code is displaying, what is the main purpose? For the ease of doing the business, the customer will simply scan that QR code and automatically the amount to be paid will be generated. Then the amount will be paid by the customer. So when part payment for any supply has already been received from the customer or the recipient, either in the form of advance or by adjustments, like by using the vouchers or discount coupons. Suppose that I purchased goods worth 2000 rupees, but I have a voucher with me, which containing 500 rupees off. Then after adjusting that 500, I'll pay only 1500. Yes or no? So before the dynamic code, QR code is generated, the dynamic QR code may provide only the remaining amount payable by the customer against the invoice value. Yes or no? See, if I scan the dynamic QR code, it will generate an invoice for 2000, but I am not supposed to pay 2000 now. I'm supposed to pay only 1500 rupees because I have a discount coupon with me, 500 rupees. So before generating the dynamic QR code, what the supplier has to do? He has to generate the dynamic QR code only for the amount payable, 1500 rupees. Clear? The details of the total invoice value along with the details are cross-reference of that part payment advance or adjustment done, and the remaining amount to be paid should be provided on the invoice. All the details should be there on the invoice only. Okay, now next, excuse me. Time limit for the issuance of credit notes in respect of any supply made in a financial year extended up to 30th November of the following financial year. This adjustment or amendment is similar to the time limit for the availment of the input tax credit. In the last session, we have discussed. Now, what is the time limit for the availment of the input tax credit? It is 30th November of the next financial year or the date of filing of annual return, whichever is earlier. Now, the same time limit applicable for the issuance of the credit notes. What is the old provision? The old provision is that credit notes can be issued not later than the September month following the end of the financial year in which such supply was made, or the date of furnishing of the relevant annual return, whichever is earlier. That's the old provision. That's the old provision. What is the new provision? Such credit notes has been issued but not later than 30th day of the November following the end of the financial year in which such supply was made, or the date of furnishing of the relevant annual return, whichever is whichever is earlier. Right, sir. This is the same time limit we have studied for time limit for the availment of the input tax credit. Clear, sir. Next. In case of issuance of e-invoice, no requirement to carry the physical copy of tax invoice. See, when you have the e-invoice with you, what is the need of carrying the physical copy of the tax invoice? Not required. The department also clarified, right? So it's clarified that there is no requirement to carry the physical copy of the tax invoice in cases where e-invoice has been generated by the supplier. Where e-invoice has been generated, production of the QR code having embedded in the IRN electronically for the verification by the proper officer, and that would suffice. Okay, ma, every one of you. Right. So with that, we have also completed the amendments from the chapter tax invoice, debit notes, credit notes, and e-waybill. Clear, sir, every one of you. So with this, we have completed amendments from the 8 chapters. Only 2 chapters amendments are pending, Amma. That is payment of tax and returns. That we will see in the next session. Clear, sir? Right. So see you in the next session. Till then, have a good day and good night. A very good morning, students. Welcome to the Ch.2 taxation classes. We are discussing statutory updates applicable for May 2023 examinations in the subject of goods and services tax. In the last class, we have completed all the statutory updates up to the chapter tax invoice, debit notes, credit notes, and e-waybill. Now, time for the statutory updates from the chapter payment of tax. So, very few amendments we got very important, and from this particular chapter, let us see. Transfer of amount available in electronic cash ledger under CGST Act of a registered person to the electronic cash ledger under the CGST Act or IGST Act of a distinct person allowed. Section 49 amended. Now, Section 49 deals with what amount? Right? So it's all about input tax credit. Right, sir? Now, see, let us see here. It is discussing about transfer of the credit balances available in electronic cash ledger. Let me explain you this with the help of the example. Chapter number 9, Payment of Tax. Now, let us see an example. Let's see an example. Suppose that Mr. X having its registered premises, his business entity in Hyderabad, or else take this example like this. Infosys Company Limited. Infosys Company having its headquarters at Hyderabad, and it's having its branches across the India and even in the outside the India also. Now let us take the example between Infosys Company Hyderabad headquarters and Infosys Company Bangalore branch. Right, sir. Now here both are belonging to the same undertaking, Infosys Company only. Right. Now here we need to treat them as distinct persons for the limited purposes of the GST. Even though they are belonging to the same establishment, since they are falling in the different states, we have already discussed that GST is a state-wise registration. GST is a state-wise registration. If you have 10 branches in 10 different states, you need to take the 10 different registrations. Centralized registration concept is applicable only when all the 10 branches situated in the same state and all the 10 of them into the similar line of business. Then only with respect to all the 10 registrations, you can take a single registration. With respect to all the 10 branches, you can take a single registration. Otherwise, if the 10 branches falling in the 10 different states, you need to take the 10 different registrations. Of course, you can take this 10 registrations with the same PAN number. There is no problem at all, because PAN number is issued by the income tax department. Right, sir? State to state, the PAN number won't change, will not be changed. It is issued by central government, income tax department. Are you following or not, every one of you? So, Infosys Hyderabad headquarters, Infosys Bangalore branch, both are belonging to the same establishment only, same management only. Since they are falling in the different states, they will be treated as a distinct persons. Now let us assume that in Infosys Company Hyderabad headquarters, in its electronic cash ledger, it is having some excess cash balance amount. Let us say some 10 lakhs balance is showing. Are you following, sir? Every one of you. Right, sir. Now, it would like to transfer this 10 lakhs balance to electronic cash ledger of its subsidiary company. Now, Can he do so? Answer is absolutely yes. Yes. But there is a condition. If there is any unpaid liability, condition is there. What is the condition? If there is any unpaid liability, it should be cleared first. It should be cleared first. Then only the remaining balance can be transferred to the another distinct person. Absolutely no problem. So electronic cash ledger of one entity can be transferable to the another entity under the same establishment, right? However, you have to make sure that there is no unpaid liability with respect to you. So Infosys Hyderabad, before transferring the electronic cash ledger, first of all, it has to make sure that there is no unpaid liability against to its name. If there is any unpaid liability, first it should be cleared off. Then only the remaining balance can be transferable to Infosys Bengaluru. Are you following or not, every one of you? So look at here. Following amendments have been made by the Finance Act 2022 and came into effect from 1st of October 2022. By this time, you might have observed that there are many amendments made by the Finance Act 2022 came into effect from 1st of October 2022. A very few amendments came into effect from 5th of July 2022. If you remember this, I have explained in the very first class of these amendments. Yeah. Here you can see. Here you can see. Only 2 amendments made effective from 5th of July 2022 and remaining all the amendments from 1st of October 2022. Yes or no, sir? Every one of you. Now come back. So look at the existing provision. The input tax credit as self-assessed in the return of a registered person shall be credited to his electronic credit ledger in accordance with section 41 or 43A. Now these wordings of 43A has been removed. You can check it out here. The words of section 43A has been removed. 43A discussed about what, Amma? It explains about provisions relating to the availment of input tax credit. It explains about the, not availment of input tax credit. 43A explains about the procedures for the furnishing of the returns and availment of IDC. Furnishing of returns and availment of IDC. Right. So to be maintained in such manner as may be prescribed. So in the second point, what is the change, Amma? Section 43A has been removed. Now, look at the fourth one. The amount available in the electronic credit ledger may be used for making any payment towards output tax under this act or under the IGST Act in such manner and conditions as may be prescribed. Now, here in this particular provision, the amount available in the electronic credit ledger may be used for making any payment towards output tax under this act or under the IGST Act in such manner and subject to such conditions and restrictions. Now, the proper officer got the power to put some restrictions on utilization of electronic credit ledger balance. So that's one more a small amendment. Now look at the point number 10, where we got the amendment done regarding that electronic cash ledger balance transfer. Right. A registered person may on the common portal transfer any amount of tax, interest, penalty, or any other amount available in electronic cash ledger under this act to the electronic cash ledger of integrated tax, central tax, state tax, union territory says in such form and manner, subject to such conditions and restrictions as may be prescribed, and such transfer shall be deemed to be a refund from the electronic cash ledger under this act. That's the old provision. But now, what is the new provision? A registered person may on the common portal transfer. These are all the same points, and where you got the amendment is here. It is this one, point number B. Point number B is amendment. integrated tax or central tax of a distinct person as specified in subsection 4 or as the case may be subsection 5 of section 20Y in such form and manner and restriction conditions as may be prescribed and shall be deemed to be a refund from the electronic cash ledger. Provided, see, whenever a word is started with the a paragraph started with the word provided means it is a condition. It is a condition. What is the condition? The condition is that no such transfer under clause B shall be allowed if the said registered person has any unpaid liability in his electronic liability register. So that's what I've said now. If you have any unpaid liability against your name, first it should be cleared off. Then only whatever the balance available in the electronic cash ledger, that can be transferred to your distinct person. Okay, ma'am. Next. Notwithstanding anything contained in the act, the government may, on the recommendations of the council, right? So the government may, on the recommendations of the council, to such conditions, subject to conditions and restrictions, specify such maximum proportion of output tax liability under the act or under the IGST Act, which may be discharged through the electronic credit ledger of by a registered person. See, here government has every right to put some conditions and restrictions on utilization of electronic credit ledger balance. So how much amount maximum you can pay it, right? How much amount of the output tax liability that you can pay it by using your electronic credit ledger, that will be decided by the government on the recommendations of the council. So the government reserved its right on it. Okay. Now, second point, deposit in electronic cash ledger. Sir, for making deposits into the electronic cash ledger, we have various methods on it. Various methods. Now, with respect to the various methods or modes, we have two more modes added on it. See, we have actually mainly two modes on it: online mode, offline mode. Online mode, offline mode. In the online mode, you have the options like RTGS, right? You can make the online transfers. Yes or no? Now, with respect to the same, we got two more added on it. That is UPI system and IMPS system. Are you following now? So now you can make the deposit into your electronic cash ledger through UPI also, Unified Payments Interface. Right, sir. And IMPS also, immediate payment services. Through these modes also, you can now deposit into your electronic cash ledger. Clear, sir. So facility provided on the GST portal to transfer any amount available in the electronic cash ledger to the electronic cash ledger for central tax, integrated tax of a distinct person. So the list, section 87.3, sorry, rule number 87.3 list the modes of making deposit of amounts towards tax, interest, penalty, fee or any other amount. Now the said rule has been amended to include two additional methods of making the deposits. Now the amount may also be deposited through UPI or IMPS from any bank on the GST portal. Okay, ma, that's the latest amendment on it. So you can see earlier we used to have, we can make the deposit by using internet banking, credit card, debit card, right? Then NEFT, RTGS, and then OTC, over the counter. These are the old modes. And now these two new modes were added under UPI and IMPS. Okay, next. So this 87.5 is about adding this IMPS service only, right? Then, so this is all as it is contained. No change in this. And this new rule is about the same thing we have discussed already, right? Registered person may on the common portal transfer any amount of tax, interest, penalty or any other amount available in the electronic cash ledger, right? To the electronic cash ledger of a distinct person. But however, we have a condition. However, no such transfer shall be allowed if the said registered person has unpaid liability. This I have already explained in the table itself. Okay, now every one of you. Next, third amendment. Levy of interest provided on ITC wrongly availed and utilized. ITC wrongly availed and utilized. So this is very, very important point. New amendment, and from which we can expect a question Definitely. Right, sir. See, so far we have studied section 51, section 52, like, these two sections discussed about the levy of interest on delayed payment of tax. Section 50 itself contains the provisions for the delayed payment of the tax. So for what we have studied, there are two rates of interest as 18% and 24%. If there is any delay in payment of the tax, normally we used to pay the rate of interest at the rate of 18%. Right, sir? If there is any erroneous refund or undue or excess claim of refund or reduction in the your output tax liability, fraudulent cases, under fraudulent cases, your rate of interest is 24%. See, there is a normal genuine reason because of which you made a delay in payment of tax. 18% is the rate of interest. That is continued to be there. That is continued to be there, and no change in that. The change we got in section 50 subsection 3 and section 50 subsection 3. Are you following now? Right? See, undue or excess claim of input tax credit or reduction in output tax liability where the rate of interest leviable 24% per annum, that is also there. That is also there. Additionally, this new point added ITC wrongly availed and utilized. Wrongly availed and utilized. See, if you wrongly availed the ITC, later on you identify your mistake and you reversed it immediately, then there is no interest on you only. See, only on wrongly availment, there is no interest for your kind information. The interest will comes into the picture only when you utilize such wrong availment. Suppose that I am not entitled for input tax credit of 2 lakhs, but I have availed it mistakenly. Whatever the services provided by me covered under blocked credits, section 17(5). But I don't know that fact. I thought my services are eligible for input tax credit. So I have availed the input tax credit. I have availed the input tax credit. See, when I availed the input tax credit, there is no interest on me, though it is a wrongly availment. But when I utilize this input tax credit for the payment of any output tax, yes, now you are subject to interest. So that's why they used the word wrongly availed and utilized. Wrongly availed and utilized. Right. So whatever the input tax credit you have wrongly availed, you are supposed to pay the interest only upon its utilization. Clear, sir, every one of you. Right? See, it will happen, and because see, every day there will be some new amendments from the GST. No person in this world is not expert in GST, including me also. See, by the time I'm taking classes, there will be a new amendment. I might not aware of that amendment. I will come to know about that amendment when I will refer the amendment. See, right now I'm taking the class since half an hour. Within this half an hour, there might be an amendment comes into picture. I'm not aware. So I'm not expert. Are you following or not? See, whenever there is a GST council meeting happening, there will be amendments. Are you following or not? Every one of you. Mostly in every month, mostly in once in every 2 months, there will be a GST council meeting. And whenever there is a GST council meeting, all the chartered accountants, all the cost accountants, all the CSS will be alert. What's happening? What's going on? Yes or no? So because of the provision, my services are covered under section 17(5). It is a blocked credit, but I don't know that fact. I availed it. Okay, you have availed. At least later on, you have to identify your mistake. You have to reverse whatever the ITs you have availed mistakenly. If you reverse, no interest on you for your kind information. But if you utilize it, then you are subject to interest. Right, sir? So look at here. Section 50 provides for the interest on delayed payment of tax. That I know. Subsection 3 of the said section has been substituted retrospectively. For your content information, this amendment effective from the first day of the GST, 1st of July 2017. Right, sir? Every one of you. So existing provision, a taxable person who makes an undue excess claim of input tax credit under subsection 10 of section 42 or undue or excess reduction of output tax liability under subsection 10 of 43 shall pay interest. This we have already discussed at the rate of 24%, not exceeding 24%. Section 53, now the latest provision where the input tax credit has been wrongly availed and utilized. The registered person shall pay interest on such input tax credit wrongly availed and utilized at such rate not exceeding 24% as may be notified by the government on the recommendations of the council. So not exceeding 24%. Now it is being reduced to 18% only. You can check it out here. You can identify the star marks here. 2 star marks. 2 star marks. Rate of interest under section 53 is notified. Right. Earlier, the rate of interest notified under the said section was 24% per annum. Now, notification number 13/2017 has been amended by the Finance Act 2022, now retrospectively with effect from 1st of July 2017 to reduce the rate of interest from 24% to 18% per annum. So now what is the rate of interest, Amma? 18% you need to apply. Under section 50, subsection 3. 18% per annum. Clear every one of you? Okay. Now, sir, how to calculate this interest amount? That is why clearly mentioned here. The interest shall be calculated in such manner as may be prescribed. And for this purpose, rule number 88B has been brought under 88B. Now, where is rule number 88B? Here it is. A new rule, manner of calculating the interest on delayed payment of tax, rule number 88B. A new rule has been introduced. Now let us see how to calculate. In view of the power given by 53 to prescribe the manner and computing the interest on delayed payment, a new rule 88B has been inserted retrospectively from the 1st of July 2017 to provide the manner of calculating the interest on delayed payment of the tax. How? Now, rule number 88B provides as follows, where the supplies made during a tax period are declared by the registered person in the return in his GSTR1 for the said period, and the said return is furnished after the due date. The return is furnished after the due date in accordance with the provisions of section 39. Section 39 what GSTR 3B. Section 39 what GSTR 3B. Okay. Where such return is furnished after the commencement of any proceedings under section 73-74. Right, section 73-74 is regarding demand provisions or any penalty. 73-74 you are going to discuss at CA final level, amma. CA final level, every one of you. In respect of the said period, the interest on tax payable shall be in respect of such supplies shall be calculated on the portion of tax which is paid by debiting the electronic cash ledger for the period of delay in filing the said return beyond the period due date at such rate as may be notified by section 51. Every one of you, right? Now, what is this section 51? This section 51, there is no change under the old provision itself. It is just reiterating. The old provision itself is reiterating. Let me explain you with the help of the notes. Section 51. Interest on delayed payment of tax, interest on delayed payment of tax. So there are two possibilities we are having, means there are two different types of return filers. Number one, monthly return filers. So those who file the returns on monthly basis. And number two, QRMP, quarterly return monthly payment scheme filers. So they are going to file their returns on quarterly basis. On quarterly basis. Okay, sir. Now let us see the monthly return filers. So who are going to file their returns on monthly basis? Right, sir. Here, what is the due date for the payment of tax? Due date for the payment of tax. So generally, the due date for the payment of tax is nothing specified in the act only, but they said a return cannot be filed before the payment of tax. A return cannot be filed before the payment of tax. Right, sir. So whenever you are going to be filed GST at 3B, first you have to discharge your tax liability. Then only you are allowed to file your GST at 3B. Yes or no? Yes or no? Without discharging your tax liability, you cannot file your GST at 3B. That's the provisions mentioned. So now the due dates for the payment of tax, I can say the due dates for the filing of return. Due date of filing your GST at 3B. Because before filing return, you have to pay the tax. So only after the payment of tax, you are allowed to file the return. Right, sir? Every one of you. So generally, what is the due date for the filing of GST at 3B? 20th of the next month. 20th of the next month. Okay, ma. Every month. Now, when it comes to the QRMP scheme, what is the due date? The due dates are, when it comes to the first month in the quarter, the due date will be 25th of the next month. 25th of the next month. And when it comes to second month, same 25th of the next month. And when it comes to the third month, the last month of the quarter, then it will be due date of filing of the return. Due date of filing of return. That is 22 or 24 of next month. 22 or 24 of the next month. These are the due dates and generally due dates. Okay. When it comes to monthly returns and QRMP scheme. Now here, suppose that with respect to both the cases, if the tax is paid after the due date, the tax is paid after the due date, just a second, sir. If the tax is paid after the due date, excuse me, the tax is paid after the due date because of late filing of return, late filing of return, that is GSTR 3B, that is GSTR 3B. But before proceedings, under sections 73 or 74. Now here in this case, see, you paid the tax, but after the due date, right? And what is the due date for the payment of tax? The due date of the filing of the return. Suppose that for the month of April, you are supposed to file your return by 20th May. Suppose that you file on 31st May. So there is a delay of 11 days. Since you filed your return belatedly, definitely you happen to pay the tax belatedly. Yes or no? Right? Now here, sir, what is the interest payable in this case? Interest payable is equal to interest payable as follows. First point, the rate of interest applicable for you is 18% per annum. 18% per annum. Second point, the amount on which the interest is payable. Amount on which interest is payable. Amount on which interest is payable is equal to the amount payable by debiting electronic cash ledger. By debiting electronic cash ledger. Are you following, sir? So that means whatever the amount of tax liability you are paying by using your electronic cash ledger, only on that amount you are supposed to pay the interest on it. So that is net tax liability. Net tax liability. Now the period for which the interest is payable. Third point, period for which interest is payable. Period for which interest is payable. So it is starting from the day after immediately the due date until the date of actual payment. Right. In our example, the delay period starts from 21st of May till 31st of May. The day immediately after the due date till the date of actual payment. So next day, starting from the day immediately after the due date, till the date of payment of tax. Till the date of payment of tax. Till the date of payment of tax. So this is how you are going to pay the interest. In this case, what is the case? The tax is paid after the due date, but before the completion of the proceedings under section 73, 74. Okay, ma. So the rate of interest applicable 18% per annum, and the amount on which interest is payable only on net tax liability, and the delay period starting from the day immediately after the due date, but ends with the date of payment of the tax. This is the first case. Now look at the second case. Look at the second case. The second case is if the tax is paid, after the due date, because of late filing of returns, late filing of return, that is Gst 3B, that is Gst 3B, and after proceedings under section 73, 74. So here you have paid the tax belatedly since you filed the return belatedly. And unfortunately, against you, even the 73, 74 proceedings also commenced. A note is already issued against you. A demand is already raised against you as per the provisions of section 73, 74. Now, in that case, how the interest is payable? Now, interest payable is as follows. Interest payable as follows. Now, first, sir, what is the rate of interest? It remains to be same as it is. Rate of interest is equal to 18% per annum. No. So the amount on which interest payable is equal to amount on which interest payable. Amount on which interest payable is equal to. It is the gross liability. For your kind information, you are going to pay the tax on gross liability. On gross liability means the tax liability you are going to be discharged by using your electronic credit ledger and as well as by using your electronic cash ledger. On the entire tax liability, you have to pay the interest on it. Now, number 3, the period for which interest is payable. Period for which interest is payable. Period for which interest is payable. Same and same. Starting from the day immediately after the due date. Starting from the day immediately after due date. Immediately after the due date until the date of payment of tax. Till the date of payment of tax. Okay, ma. So this is section 51. 51, interest on delayed payment of tax. Okay, ma. Right? 2 cases where the tax is paid after the due date, but before the proceedings under section 73, 74. Second case, if the tax is paid after the due date, but after the commencement of the proceedings under section 73, 74. Okay, ma, every one of you. Right? Now, I'm stopping the session here. In the next session, we will discuss section 53, the manner of payment of, the manner of calculation of interest. Section 53. 50 subsection 3. That is the latest amendment. Okay, that will be covered in the next session only. Clear? So see you in the next session. Till then, have a good day and good night, sir. A very good morning, students. Welcome to the stress test taxation classes. We are discussing statutory updates for May 2023 exams in the subject of goods and services tax. And in the last session, we have completed up to statutory updates from the chapter tax invoice, debit notes, credit notes, and e-waybill. And also we have started discussion from statutory updates from the chapter payment of tax. Now we are in the middle of the discussion of manner of calculating the interest on delayed payment of tax. So section 50, subsection 1, subsection 2, and subsection 3 discussed about this interest on delayed payment of tax read with rule number 88B. There is a new rule has been prescribed. And with respect to that, section 51, we have already discussed in the last session, which discussed about interest on delayed payment of tax. when it comes to the monthly return filers, the due date for the payment of tax is equal to due date of filing of the return. Because without payment of the tax, you cannot file your return. So for the filing of the return, payment of tax is mandatory. So that's why due date for the payment of tax is equal to due date of the filing of return. And for QRMP scheme, the due date for the filing of the return is equal to, generally they will be filing on quarterly basis and they will pay the tax on monthly basis. So first and second month, the due date for the payment of tax is equal to 25th of the next month. And when it comes to the last month of the quarter, the due date for the filing of the return. Now, so generally the interest will be leviable only if you are not paid the tax well within the due date, right, sir? So you are paying the tax after the due date. So there are two situations possible. Number one, you are paying the tax after the due date, but before the proceedings under section 73-74, right, sir? So notice, demand, everything. So before the department issuing a notice or demand against the non-payment of the tax, you have already paid the tax, but after the due date, then in that case, the interest is payable at the rate of 18% per annum. The amount on which interest is payable, the amount of the interest which you have paid by debiting your e-cash ledger, only the net tax liability, on net tax liability you are supposed to pay interest, and the period for which the interest is payable, starting from the day immediately after the due date till the date of the payment of the tax. Okay, sir. Next, coming to, if the tax is paid after the due date and at the same time after the notice or demand issued by the department, then interest is payable at the rate of 18% per annum. Amount on which the interest is payable, gross liability. On your entire tax liability, you have to pay your interest, and then the period for which the interest is payable, starting from the day immediately after the due date till the actual date of payment of the tax. So that's section 51. Now what about section 53? Section 53. Everyone put the heading, Amma. Section 53. Interest on ITC wrongly availed and utilized. Interest on ITC wrongly availed and utilized. Now, here, suppose that, let us take an example. In your electronic credit ledger, you have availed ITC, let us say 10 lakhs rupees, 10 lakhs rupees, for which you are not supposed to take as input tax credit. The amount of the input tax credit, you are not supposed to take it as credit under, right? Suppose that it is covered under blocked credits, but you don't know that provision. You thought it is eligible for credit and you have availed it as credit. So ITC wrongly availed. ITC wrongly availed. But after that, after a few days, your tax consultant said, sir, this is not the item eligible for credit. This is blocked under section 17.5. It is a blocked credit. You have wrongly availed it. So then what happened? Immediately you reverse the same. Immediately you have reversed the same. This is a situation one. Situation one. Situation one. If the payment or reversal is done before utilization. So before utilizing that amount of input tax credit, you have reversed. Later on, you got to know that there's a blocked credit. So I'm not supposed to take this as credit, but I've taken. So I'm reversing it now. So before utilizing the same, you have reversed. Now in that case, interest is not leviable. Interest is not leviable. This is situation one. Right, sir. Now look at the situation number two. Situation number two. Example, same example, let us continue. Electronic credit ledger. Electronic credit ledger. Suppose that by ITC availment, you have wrongly availed 10 lakhs input tax credit. You have wrongly availed 10 lakhs input tax credit. At the same time, you also started utilizing it. You also started utilizing it for the payment of the output tax. So, to output tax paid 5 lakhs rupees. So I have all wrongly availed the input tax credit, and at the same time I have wrongly utilized it. So here the interest is started levying. So the situation is that ITC wrongly availed, ITC wrongly availed and utilized. See, only on wrongly availment of input tax credit, there is no interest is leviable. But when you started utilizing the same, the interest is started levied. Interest is started levied. Suppose that I have wrongly availed the input tax credit, but I have utilized the same after 2 months. So for this 2 months period, there is no interest is leviable. There is no interest is leviable. But after 2 months, when I started utilizing that wrongly availed input tax credit, then interest is started levying to me. From the date on which I have started wrongly utilized, from the date on which I have started wrongly utilized, then from that particular date, the interest is leviable. Every one of you following or not, Amma? Right. So here on this ITC wrongly availed and utilized, how much I wrongly utilized? 5 lakhs rupees. Only on that 5 lakhs rupees, the interest is leviable. Only on that 5 lakhs rupees, the interest is not on the entire 10 lakhs. Not on the entire 10 lakhs, because the words used the ITC amount wrongly availed and utilized. How much availed and utilized? 5 lakhs rupees. Only on that 5 lakhs, the interest is leviable. At what rate, Amma? 18%. And for what period? The day on which I started utilized, not availed, Amma. The day on which I started utilized that wrongly availed ITC, then from that particular day onwards, the interest is leviable on me. Clear? So now look at the material. So this first paragraph we have completed. 51 we have completed, Amma. Now we directly come to the 53. This is 53, where interest is payable on the amount of the ITC wrongly availed and utilized. The interest is payable on the amount of the ITC wrongly availed and utilized. In accordance with section 53, the interest shall be calculated on the amount of the input tax credit wrongly availed and utilized for the period starting from the date of utilization. Clearly observe, starting from the date of utilization, of such wrongly availed ITC till the date of actual reversal or payment. So once you got to know that, suppose that you have wrongly utilized 5 lakhs rupees. After that, you got to know that this amount is I have wrongly availed and utilized. Then you have reversed it to the same amount, or you have repaid to the department. So from the date of utilization till the date of actual payment or till the date of reversal, the interest is calculated. Okay, ma'am. Next. The explanation to the rule lays down that. So the same bunch, whatever we have discussed there is reiterated here. You can see input tax credit wrongly availed shall be construed to have been utilized when the balance in the electronic credit ledger falls below the amount in the input tax credit wrongly availed, and to the extent of such utilization of input tax credit shall be the amount by which the balance in the electronic credit ledger falls below the amount of input tax credit wrongly availed. See, that means that, see, look at here. Initially, you have wrongly availed 10 lakhs rupees, right? Out of which 5 lakh you have already utilized, right? Let us assume that this is all happened in the month of June 2022. Now for July 2022, the next tax period, immediately next tax period, in your electronic credit ledger, so the balance shows only 5 lakhs rupees. See, you have availed 10 lakhs, out of which 5 lakhs utilized. So the balance you are having only 5 lakhs rupees. So the ITC wrongly availed falls below the balance available in the electronic credit ledger falls below the ITC wrongly availed. So that means you have started utilizing it. Earlier, you used to have 10 lakhs balance in your electronic credit ledger account. Now your electronic credit ledger showing a balance of 5 lakhs only. So your electronic credit ledger balance less than the amount of the ITC availed means the amount of the ITC you have wrongly availed already started utilizing. Yes or no? Every one of you, right? So then the interest is started levying on you. The date of utilization of such credit shall be taken to be the date on which the return is due to be furnished or the actual date of filing of the said return, whichever is earlier. Sir, what is the date of utilization here? So generally, when are you going to utilize your electronic credit ledger balance? Simple answer, whenever you are going to payment of the tax, whenever you are going to pay the taxes. When you are going to pay the taxes? Simple answer, when you are going to file your return. Because without payment of the taxes, you cannot file your return. So before filing of the return, you have to pay the taxes. For the payment of the taxes, you will utilize your electronic credit ledger balance. So that's why the date of utilization is equal to the date on which the return is due to be furnished or the date on which the return is actually filed, whichever is earlier. Suppose the due date is 20th. You actually filed on 25th. So the due date for the filing of return 20th, actual date of filing of return 25th, whichever is earlier. So the date of utilization is 20th. Everyone following, Amma? Next. Or the date of debit in the electronic credit ledger. That means when you actually utilized it. When the balance in the electronic credit ledger falls below the amount of the input tax credit wrongly availed. In all other cases. Next. Clarifications regarding utilizations in the amount available in the electronic credit ledger and the electronic cash ledger for the payment of tax and other liabilities. See, these are all the existing provisions only. There are new provisions. Just a clarification has been given. So here the first issue, whether the amount available in the electronic credit ledger can be used for the making of payment of any tax under the GST laws. Answer is absolutely yes. Whatever the electronic credit ledger balance you are having, that electronic credit ledger balance you can be utilized for the payment of output tax liability, output tax of the CGST, SGST, IGST or UTGST. Absolutely no problem. Yes or no? So look at here, in terms of section 49.4, the amount available in the electronic credit ledger may be used for the making of the payment of any payment towards output tax. Right, sir. Subject to the provisions to the order of utilization of ITC. Rule 86.2 provides that for debiting the electronic credit ledger to the extent of the discharge of the any liability in accordance with the provisions of section 49, 49A, 49B. So the same provisions, there are no changes here at all, right? So output tax in relation to a taxable person, this is a definition of the output tax, right? So it is a tax chargeable on tax taxable supply of the goods or services are both, but excludes the tax payable on reverse charge mechanism. See, under the output tax definition, there is one exclusion, and that exclusion is that excludes the tax payable on reverse charge mechanism. Right, sir. So accordingly, it is clarified that any payment towards output tax, whether self-assessed in the return or payable as a consequence of any proceeding instituted, can be made by utilization of the amount available in the electronic credit ledger. Next, it is further reiterated that again it is saying that output tax does not include tax payable under RCM. So that means electronic credit ledger balance cannot be used for the making of payment of any tax payable under RCM. Next, whether the amount available in the electronic credit ledger can be used for making payment of any liability other than tax. Answer is no. Electronic credit ledger balance can be utilized for the making of payment of output tax only. It cannot be used for making the payment of any interest, penalty, fees, or any other amount payable under the said act. Right, sir. And similarly, electronic credit ledger balance cannot be used for the making of the payment of erroneous refund sanction to the taxpayer. Electronic credit ledger balance can be utilized only for the payment of output tax. That's it. Whether the amount available in the electronic credit cash ledger can be utilized for the making of the payment of any liability. Answer is yes. Electronic credit ledger balance you can be utilized for the making of the payment of tax, interest, penalty, fees, or any other sum. Electronic cash ledger balance you can utilize, absolutely no problem, for the payment of your output tax, interest, late fees, penalties, or any other amount payable under the act. Next, Rule 85 amended owing to the omissions of section 42 and 43. See, this two-way communication process in the return filing that has been omitted under sections 42 and 43. Rule 85 discussed about the provisions relating to the electronic liability register. Rule 85 contains the provisions relating to electronic liability register. Since sections 42, 43, 43A have been omitted as to do away with the two-way communication process in the return filing, consequential amendments have been come. So, with the effect from the 1st of October 2022, Clause C of this Rule 85 has been omitted. What is Clause C? This one. The amount of tax interest payable as a result of mismatch under sections 42, 43, and 50. These have been omitted under, right? So the Clause C have been removed from the rule number 85. So the remaining rule number 85 intact. Only this Clause C have been omitted. Next. That's it. So that's the amendments from the chapter Payment of Tax. That is our chapter number 9. We have left with only the amendments from the chapter Returns. Chapter number 10, the last chapter, Returns. And if you see in this particular chapter also, we have many amendments, but that amendments, not came into the effective fully. Not came into effective fully. They partially came into effect. How, sir? You're going to witness within 5 minutes. Let us see. Registered person debarred from furnishing of the details of the outward supplies in form number GSTR1 or IFF invoice furnishing facility. So this is a very important amendment, sir. Very important amendment, right? Now, what is this amendment all about? Very simple, sir. Very simple. Suppose that now we are in the month of March 2023. Sir, if you have not filed your February 23 GSTR1, then you're not allowed to file March 23 GSTR1. So the current tax period GSTR1 can be filed only when previous tax period GSTR1 is filed by the taxpayer. Suppose that I missed filing Feb 2023 GSTR1. I have not filed. Now, without filing Feb 23 GSTR1, can I file March 23 GSTR1? Answer is no. First, the department said, clear off all your pending returns. Then only you are allowed to file your current tax return. Right, sir? Are you following now? So look at here. Rule number 59.6 stipulates that the cases where a registered person debarred from filing of GSTR 1 has been amended with effect from the 1st of Jan 2022. A registered person shall not be allowed to furnish the details of GSTR 1 if he has not furnished the return in form number GSTR 3B for the preceding month. I think I mentioned it as GSTR 1, make it as GSTR 3B. If I have not filed GSTR 3B of Feb 23, then I'm not allowed to file GSTR 1 of March 23. A registered person shall not be allowed to furnish the details of outward supplies in form number GSTR 1 if he has not furnished the return in form number GSTR 3B for the preceding month. So file your Feb 23 GSTR 3B first, then only you are allowed to file the GSTR 1 of the March. Next, a registered person opting for QRMP scheme shall not be allowed to furnish the details of GSTR 1 if he has not furnished the return in form number GSTR 3B for the preceding tax period. Again, the same thing. So point number 1 is with respect to monthly return filers. Monthly return filers. And point number 2 is with respect to QRMP scheme. QRMP scheme. Quarterly return filers. Right, sir? So in the preceding tax period, if such person have not filed the GSTR 3B, now for the current tax period is not allowed to file the GSTR 1. So that means in order to file the GSTR 1, you have to file your previous tax period's GSTR 3Bs. Right, sir? Next. And then point number 3 has been completely omitted. That is, a registered person who is restricted from using of the amount available in the electronic credit ledger. Do you remember only the 99% of the tax liability can be paid through the electronic credit ledger, 1% compulsorily paid through the electronic cash ledger. Now that provision has been omitted. That provision has been omitted. Okay, now next. After that, GSTR 2B, it is an auto-generated statement. Auto-generated statement. Earlier, the wordings are like auto-drafted statement. Now the wordings changed from auto-drafted statement to auto-generated statement. That's it, Amma. So rule number 60 interiorly provides the form and manner of ascertaining the details of inward supplies from GST number 2A and form number GST number 2B. First 1267 provides that the form number GST 2B is an auto-drafted statement containing the details of ITC. However, with effect from the 1st of October 2022, section rule number 60 sub rule 7 has been amended to consider form number GST 2B is an auto-generated statement. Earlier it is called as auto-drafted. Now it is called as auto-generated. Okay, everyone. Next. The omissions of the rule number 69 to 77. These rules have been omitted, right? Because now the department has done away with this two-way communication process. There is no relevance of these particular rules. So all these rules have been omitted from the GST and CGST rules. Okay, now 69 to 77. And there is no need to by heart anything here. Just have a single reading of all these rules. That's it. Because all these rules are important from CA final level, not at CA inter level. Are you following or not? All these rules 69, 60, 70, 71, 72, all these are important and all these are covered in CA final syllabus only. Next. GST practitioner permitted only to furnish the details of outward supplies on behalf of a registered person. So earlier, GST practitioner, GST practitioner allowed to furnish the details of GSTR 1 and as well as GSTR 2, outward supplies and as well as inward supplies. But now amendment said now the GST tax practitioner allowed to furnish the details of GSTR 1 only. GSTR 2, you're not allowed. Right. Anyhow, it is, auto-generated statement only, GSTR 2B, right? And, even the GSTR 2 provisions have been now omitted, right? Which never came into effect since the inception of GST. Are you following, Amma? Right? So, Section 48 contains the relating to GST tax practitioners has been amended to remove the references to Section 38. What is Section 38? Communication of the details of inward supplies and input tax credit. Right, sir? You can see here, with effective from the 1st of October 2022, rule number 83 subrule 8 clause A has been amended. Now a GST practitioner is only allowed to furnish the details of outward supplies and not inward supplies. Okay. Now omission of forms GSTR 1A, 2 and 3. Just now I said no, GSTR 2 has been omitted. Look at here, which never came into effect since the inception of GST. Right? In the place of GSTR 1A, we are filing 1. In the place of GSTR 3, we are filing GSTR 3B. In the place of GSTR 2, auto drafted statements GSTR 2A and 2B is generated. So GSTR 1A, 2 and 3B never came into effect. So that's why they are permanently omitted. With effective from the 1st of October 2022, form number GSTR 1A, 2 and 3, which never came into effect and whose applicability was persistently being deferred, have been omitted, completely omitted. And next, amendments carried out by the Finance Act 2022 in section numbers 37, 38, 39. So from all these sections, we got amendments and all these amendments, the provisions are mentioned like as may be prescribed in the prescribed form and manner, like these wordings are utilized right? So the GST Council has the power to put some restrictions and conditions subject to the restrictions conditions by the central government. Only these kind of provisions are used. That means they are not fully coming to effect. Okay, let us see. We'll get to know. With effective from the 1st of October 2022, with effective from 1st of October 2022, sections 37, 38, 39, 41, 42, 43, 43A, 47, 48, and 52 have been amended. Let us see. First one, section 37. Section 37. What is the existing provision? Every registered person other than ISD, every registered person other than ISD, NRTP, non-resident taxable person. Just a second, sir. So every registered person other than input service distributor, a non-resident taxable person, and a person paying the tax under the provisions of section 10 composition scheme, section 51 or 52 TDS and TCS provisions under GST shall furnish electronically in such form and manner as may be prescribed the details of outward supplies of the goods. So section 37 deals with the bottom this GSTR 1 provisions. And in that, what is the latest amendment? The amendment is highlighted here, subject to such conditions and restrictions. This particular provision. See, the amendments are highlighted in a bold letters. Subject to such conditions and restrictions. So now the GST Council had the power to put some restrictions and conditions while filing the GSTR 1. What is the condition that I've made? So before filing of the GSTR 3B, you cannot file GSTR 1. So first clear all the previous tax periods GSTR 3B, and then only current tax period GSTR 1 is allowed to be filed. So that's the amendment from the section 37. Sir. Right. So section 37 is to be amended so as to provide prescribing the conditions and restrictions. Prescribing the conditions and the restrictions. This point. For furnishing the details of outward supply and for communication of the details of such outward supplies to the concerned recipients, and to do away with the two-way communication process, and providing for an extended time up to 13th day of November of the following financial year for rectifications of errors. Okay, now, and provides for the tax period wise sequential filing of details of GSTR 1, right? So subject to such conditions and restrictions which in such time and in such manner as may be prescribed be communicated to the recipient of the said supplies. Okay, sir. Now, the old provision that once the due date has been lapsed, that is the 10th of the next month, then the supplier not allowed to file the GSTR 1 in between 11th day to 15th month of the succeeding tax period. That provision has been removed now. From 11th day to 15th day, you cannot file GSTR 1. That is the old provision. That provision has been removed now. Are you following or not? It is striked off, right? So that means now you are allowed to file the GSTR 1 even in between 11th to 15th day of the month succeeding the tax period. Okay, now. And next. And every registered person who has been communicated the details under subsection 3 of section 38, section 38 GSTR 2A, 2B, the details of the invoice applies. See, this provision is also been removed under it. That recipient either accept or reject the details on or before 17th day, but not before 15th day. That provision has been also removed. See, once the GSTR 1 is being filed by the supplier, an auto-generated statement in the form of GSTR 2B generated in the recipient's dashboard. So now the recipient either have to accept the details or have to reject the details in that particular auto-generated statement on or before 17th day. But now that provision has been removed. And next. So that section 40 to 43 has also been removed and omitted. So that is mismatched, unmatched. So that provision is also striked out here. Now this 30th day of November, what is this amendment? Earlier we used to, if any details are omitted, right? Or any wrong details entered in any returns, such rectifications we can be made up to the due date for the filing of the September month return of the next financial year or the date of the filing of annual return, whichever is earlier. Now that date has been extended till 30th November. Do you remember the time limit for the availment of input tax credit extended up to 30th day of the November? The same provision applied here also, right? So if you would like to make any rectifications in your GSTR 1, right, in any particular tax period return, that rectification you can be done, right? So up to 30th November of the next financial year. Okay, now. Or the date of filing of the annual return, whichever is earlier. Next. And this point number 4, just now we have discussed, a registered person shall not be allowed to furnish the details of outward supplies. If the details of outward supplies of any of the previous tax periods has not been furnished by him. That I've already told you now, right? Suppose that a February month GSTR 1 not filed by me. Now March month GSTR 1 I cannot be filed under. Right? A registered person shall not be allowed to furnish the details of outward supplies for a tax period if the details of outward supplies for any of the tax period has not been furnished. The details of outward supplies for any of the previous tax periods. So without filing Feb 2023 GSTR 1, you cannot file March 2023 GSTR 1. That is a point number 400. Right? And provided that the government may, on the recommendation of the council, subject to such conditions and restrictions as may be specified therein. What are the conditions? What are the restrictions have not been notified yet. So that's why it is a partially right implemented provision under. But the government reserved its right to put some conditions and restrictions on following on the registered persons or a class of registered persons to furnish the details of GSTR 1. Okay, now next. Section 38, it is about, inward supplies, auto generated statement, right? About the GSTR 2B, right? Now, what is the old provision? You can see the section 38 is to be substituted as follows. The details of the outward supplies furnished by registered person, right? And of such other supplies as may be prescribed an auto-generated statement containing the details of input tax credit shall be made available electronically to the recipients in such form and manner within such time and subject to such conditions and restrictions. See, whenever the supplier filed GSTR1, an auto-generated statement will be there electronically available to the recipient, which containing all the details and the input tax credit, everything. Okay, now the auto-generated statement consisting of the details of inward supplies, in respect of which the credit of input tax may be available, and the details of the supplies on which the credit cannot be availed. Point number A explains about the details of the inward supplies on which you can avail input tax credit. And point number B explains about the details of inward supplies you cannot avail input tax credit. Are you following, Amma? You cannot avail input tax credit. Okay, next. So these are the cases where the details of input tax credit not available. Point number 1, right? So by a registered person within such period of taking registration. Point number 2, by any registered person who has defaulted in the payment of tax and where such a default continuing. Okay, right? So like this, you will be having defaulted cases on which you are not eligible to avail the input tax credit. You are not eligible to avail the input tax credit. Point number 5, you can see any registered person who has defaulted in discharging his tax liability. Okay. Next, section 39. So in section number 39 also you can see, provided that every registered person furnishing returns. Section 39 GST 3B and GST 3B. Okay. So here you can see that registered person before filing of the return, he has to pay the taxes to the government. He has to pay, shall pay to the government in such form and manner within such time as may be prescribed. How much amount of the tax he has to pay and the output tax liability. Before he is paying to the output tax liability, whatever the input tax credit is having, that input tax credit he can avail, and remaining amount should be discharged through the electronic cash ledger. An amount equal to the tax due taking into the account of inward supplies and outward supplies, input tax credit available and tax payable and other such particulars during a month. In lieu of the amount referred to A in clause A, an amount determined in such manner and subject to such conditions and restrictions. See, everywhere you can see such manner and subject to such conditions and restrictions as may be prescribed. Till date, such manner, such restrictions, conditions have not been prescribed. Right, sir? Next. So you can see these are all the existing provisions only. This 30th day of November, right? We have already discussed any rectifications in any of the returns, right? So no such a rectification of any omission or incorrect particulars shall be allowed after the 30th day of the November following the end of the financial year to which such details pertains, or the actual date of filing of the annual return, whichever is earlier. See, if you have any rectifications, any errors or any omissions, such errors or omissions or rectifications you are eligible to rectified, but on or before 30th day of the November of the next financial year, or the date of the filing of annual return, whichever is earlier. Right, sir? Next. So this provision we've already discussed. A registered person shall not be allowed to furnish a return for a tax period if the return for any of the previous tax periods or the details of outward supplies, right, for the said tax period has not been furnished by him. See, for the filing of GST 3B, the things to be complied with: number 1, previous tax periods, all the GST 3Bs have been filed. Number 2, previous tax periods GSTR1 have been filed. So all GSTR1s of the previous tax periods must have been filed. All the previous tax periods GSTR 3Bs must have been filed. Then only in the current tax period you are allowed to file the GSTR 3B. Then only in the current tax period you are allowed to file the GSTR 3B. It's a simple answer, ma. What the department wants to say? The department wants to convey a message that If your all previous tax period returns are filed, then only you are allowed to file current tax periods. Then only you are allowed to file the current tax period returns. That's it. Simple answer. Okay, now. Provided that the government may, on the recommendations of the council, by notification subject to such restrictions and conditions, again same thing, as may be prescribed, allows a registered person or class of registered person to furnish the return even if he has not furnished the returns for the one or more previous tax periods. So the department got its right that, right, the government reserved its right to allow certain classes of persons to file the GST at 3B even if they are not filed their previous year, previous tax periods GST at 3B. The government reserved its right, but of course on the recommendations of the council only. Next, section 41. Section, every registered person shall, subject to such condition restrictions as may be prescribed, entitled to avail the input tax credit as self-assessed in his return, and such amount shall be credited to his electronic credit ledger. Section 41 discussed about the availment of the input tax credit under, right? So whatever the credit available as per the self-assessment, right, in his return, so that amount of the available input tax credit, he can be take the credit to the electronic credit ledger under. The input tax credit available by a registered person in respect of such supplies of the goods or services or both, the tax payable whereon has not been paid by the supplier shall be reversed. See, there is a precondition for the availment and utilization of input tax credit. What is that? The tax in that particular supply must have been paid by the supplier to the department. See, when your supplier paid the tax liable to the department, then only you are allowed to take the credit under. Suppose that you are in the assumption that you are in the belief that, okay, your supplier will pay the tax to the department. You have availed the input tax credit. But later on, what happens? You have supplier, your supplier has not paid the tax to the department. Now, what will happen? Whatever the credit availed by you, that credit will be reversed. You have to reverse. No option. Because the department said, so dear Mr. X, you are taking input tax credit, very good. For you, it is an input tax credit. For your supplier, it is an output tax. Your supplier should pay the same amount to us, but your supplier not paid. So we are sorry. Whatever the credit you availed, please reverse it. Are you following or not, Amma? Every one of you. Right? Next. Provided where the said supplier makes the payment of tax payable in respect of the aforesaid supplies, the said registered person may re-avail the amount of the credit reversed by him in such manner as may be prescribed. Right. So I have reversed the input tax credit as per the instructions from the department. Then immediately I went to the Mr. Supplier. What did you do, Mr. Supplier? What you have done? I have paid the output tax to you, but you have not remitted the same to the department. I thought you will remit to the department. So I have taken the credit, but department said, please reverse it because your supplier not paid. So I have reversed it accordingly. So please pay the output tax to the department immediately. So then the supplier paid the amount of the output tax to the department. So now whatever the credit you have already reversed, you can re-avail it. You can re-avail it. As and when your supplier paid the output tax to the department, you become entitled to avail the credit under. Okay. See, these are all the old provisions only. We are nothing new we are learning here. Next. Section 47. Any registered person who fails to furnish the details of outward supplies or inward supplies. The word of inward supplies have been removed under. Are the returns required to under section 39 of 45 or 52? 52 we will learn in the CF final level under, at CF final level, right? TCS returns, TDS TCS returns that we will learn in the final level under. By the due date shall pay a late fee of 100 rupee per every day, during which such failure continues, subject to a maximum of 5,000 rupees. So now this late fees is applicable only with respect to the GSTR1, GSTR3B, return under section 45 and 52. Only for these returns, the late fee of 100 rupees per day or subject to a maximum of 5,000 is applicable. Clear, every one of you. Next. Section 48. A registered person may authorize an approved GST practitioner. This provision we've already discussed. Now the GST practitioner is allowed to furnish the details of GSTR 1 only on behalf of a registered person. Earlier, he allowed to furnish the details of inward supplies also, but now that authorization is removed. Now the GST practitioner can be allowed only to furnish the details of GSTR 1. That's it. And of course, that 39, 44, 45 that are there, and only he is unauthorized. He got the removal of the authorization for the furnishing of the inward supplies. That's it. Clear? So with this, we have completed all the statutory updates from all the 10 chapters with respect to the GST subject under. Very careful students. This time, without updating of the material, what the institute have done, and institute issued 2 supplementary study materials. So this is number 1. You can see, right? Supplementary study paper 2022, right? And this containing the amendments up to what, Amma? This containing amendments up to 30th April 2022. This is the first supplementary study paper issued, and students should also prepare this. This also we have already done the recordings and uploaded in the YouTube. You can go there and watch. You can see in our Ram Harsha channel, CA Ram Harsha sir channel. You can see, okay. And this is the second material they have issued for May 2023 exams. Statutory updates. The first one, supplementary study paper containing the amendments up to 30th April 2022. Now this one, statutory updates, which contains amendments up to 31st of October 2022. Are you following, sir? Every one of you. Right? So both have to be prepared by the students, those who are going to write May 2023 exams and November 2023 exams. Okay, now, every one of you. So that's it, sir. So see you in the next sessions for the RTP's discussion. May 2023 RTP discussion. Clear, sir? So till then, happy reading. Have a good day and good night, sir. A very good evening, students. Welcome to the Straight Start Taxation classes. So hope everyone doing great. In the last session, we have completed discussion regarding the latest amendments from income tax. That is the amendments applicable for May 2023 examinations from income tax portion. Now this session is with respect to GST. We are going to discuss about the amendments that are applicable for May 2023 examination. Okay, ma'am. As you all know that for May 2023 and November 2023, ICAI has not released updated study material yet. Not released. Whatever the study material available in ICAI website, it's not updated. Right, sir? You can see in our ICAI website. So this is our ICAI website, as you all know, ICAI.org, student section. Then we need to go for Invoice knowledge portal, Board of Studies. Then, so here select study material, then intermediate, and here you can see the taxation, paper number 4, taxation, study material relevant for May 2023 examination. So you can see when it comes to indirect taxes, if you click on study material, you will get the module 1 and module 2. Module 1 covering of 5 chapters, module 2 covering of remaining 5 chapters. And you can see the initial pages of the study material, these initial pages, and you can see relevant for May 2022 and November 2022 exams. So whatever the study material available in our ICAI website, that ICAI material was only for May 2022 and November 2022 examination. You can see the edition August 2021. Right, sir. So that is why what ICA has done is, for indirect taxes, they have come up with supplementary study material, supplementary study paper. Okay, ma, you can see this is a supplementary study paper which I've already downloaded. Okay, ma, every one of you, right? Next. So the downloaded version is I've already kept here, right? Supplementary study paper, and that is for only indirect taxes. Right, sir. For income tax, the material got updated. For income tax, you have updated study material available in the ICA website. But when it comes to indirect taxes, GST, no updated study material available in the ICA website. That is why ICA website come up with supplementary study paper. And for your kind information, that is also not updated. See, you can see here relevant for students appearing in May 2023 and November 2023 examinations. Sir, it's clearly mentioned that this supplementary study paper is relevant for May 23 and November 23 examinations, but you are saying which is not updated. What does it mean? See, for every examination attempt, whatever the amendments made effective prior to the 6 months from the date of examination, all those amendments made effective prior to the 6 months from the starting of the date of examination. See, generally for May 2023 examination attempt, for May 2023 examination attempt, the cutoff date for amendments is, so you have to go for 6 months backwards: April, March, February, January, December, November. So that means up to the amendments made effective up to 31st October 2022. 31st October 2022. Whatever the amendments made effective, whatever the amendments made effective up to 31st October 2022, applicable for May 2023 examinations. Right, sir? Every one of you. Let me see and explain you with the help of the notes. So thereby you'll get some clarity on it. GST amendments for May 2023. Okay, sir. So our paper is paper number 4, taxation, which is for 100 marks, which contains part A, income tax, 60 marks. Okay, ma. So with respect to which we have already provided the latest materials, and we've also uploaded all the latest amendments applicable for May 2023 exams in our app. So for income tax, 60 marks portion, everything completed, regular classes, amendments classes, right? Now coming to part B, GST, goods and services tax, 40 marks portion. Regular classes completed, amendments classes. Now the recording started. Within few days will be completed and will be uploaded. See, the reason behind I have waited till today is that you'll get to know within 10 minutes why I have waited so much time for doing this amendments class, right? Even till today also, I don't have, the intention to do these recordings amendments, right? I should have wait for some more days, but being the continuous calls from the students, right? So I happen to do these recordings. Why I'm saying like this, you'll get to know within few minutes. So generally, as I already said, so you all people going to appear for May 2023 examinations, right, sir? So for May 2023 examinations, you need to prepare all the amendments made effective all the amendments made effective up to 31st October 2022, right, sir? And these amendments through means it is amendments through notifications, these including amendments through notifications and as well as amendments through circulars. Amendments through circulars, right, sir? So you can see in our ICS supplementary study paper, what they have mentioned, this material is supplementary study paper is clearly SEMA relevant for students appearing for November 23 and May 23 examinations. Let us discuss only about May 23. As I already mentioned you, for May 23 exams, the cutoff date for amendments is 31st October 22. That means you have to prepare the amendments which made effective through notifications, through circulars, right, up to 31st October 2022 for your May 23 examinations. But what this study material contains is, this study material contains only the amendments made by the Finance Act 2022 and of course the amendments made by Finance Act 2021 and other important notifications and circulars between May 21 to April 22. So whatever the amendments made effective from 1st May 2021 to 30th April 2022, right, sir? So the supplementary study material contains supplementary study paper issued by ICAI contains only the amendments made effective only the amendments made effective till 30th April 2022. But sir, you said that we need to prepare for all the amendments made effective 31st October 2022. But the ICS study material contains only the study paper, supplementary study paper contains only the amendments made effective up to 30th April 2022. So what about all the amendments made between? What about all the amendments made between 1st May 2022 till 31st October 2022? What about this? The supplementary study paper doesn't contain all these amendments between May 22 to 31st October 22. How would we prepare May 2023 exams? So do we need to skip all these amendments? No, you should not. You should not. Are you following, sir, every one of you? See, by the time the ICI released this supplementary study paper, some of these amendments were not made effective. See, it was prepared. You can see here, ICI clearly mentioned in its, before we begin, right? So they clearly mentioned that. Yeah, here it is. The Finance Act 2022 came into force from 30th April, March 2022, right? So Finance Act 2022 became effective till date of printing supplementary study paper. Only a very few amendments. I can say only 2 amendments. Section 49 and Section 50. After receiving the assent of President of India, however, only the amendments made in Section 49 and 50 White Finance Act 2022 became effective till the date of printing of the supplementary study paper. See, generally, sir, when it comes to the effectiveness of the GST amendments, generally, if I talk about the GST amendments by Finance Act 2020, effective from all the, or I can say, major amendments from GST, right? Effective from 1st of January 2021. 1st of January 2021. And all the amendments made by the GST amendments, I'm talking about only GST amendment. So the major important GST amendments of Finance Act 2021 made effective from 1st of January 2022. 1st of January 2022. So that means if you see here, the GST amendments generally made effective from the 1st January of the next calendar year. 1st January of the next calendar year. That is why Finance Act 2020 amendments not applied for May 21 exams. For May 21 exams, Finance Act 2020 amendments not applicable because the time gap is less than 6 months. May 21 is exams. 1st January 21, the amendments made effective. So the time gap between the amendments made effective and examination attempt is less than 6 months. So that is why the Finance Act 2020 amendments not applicable for May 21 exams. Similarly, the Finance Act 2021 amendments made effective from 1st of January 2022. 1st of January 2022, hence not applied for May 2020 exams. Because the time gap between Jan 22 May 22 is less than 6 months. Not applied. What is the cutoff date for amendments for May exams? 31st October. 31st October. Clear now? But whereas when it comes to Finance Act 2022, Section 49 and Section 50, these 2 amendments made effective on 5th of July 2022, and remaining all amendments made effective from 1st of October 2022. See, if you see the trend of the last 2 years, the Finance Act 2022 amendments should have come into effective from 1st of January 2023. Then in that case, these amendments wouldn't have been applied for May 23 exams. May not be applicable for May 23 exams. But unfortunately, what happens this time, central government has issued notification and made effective all these amendments immediately. Are you following, sir? This time what happens, ma'am? This time All the amendments. See, the government has not waited till 1st of January 2023. Right? 2 amendments made effective immediately 5th of July 2022. And the remaining all amendments 1st of October 2022. So the cutoff date for amendments, I've already mentioned you, 31st of October 2022. So by 31st of October 2022, you can observe all the GST amendments made effective. That is why all the GST amendments are now applied for May 23 exams. May 23 exams. And I can say the same amendments even applicable for November 2023 exams also. November 2023 exams also. See, I can say confidently that for November 23 exams, Finance Act 2023, which is not yet come into place, even not even the finance bill not been, of course, that's recently been introduced. Okay. Finance Act 2023 not yet came into effect. The finance bill should be discussed in both the houses of the parliament. Then it should get the approval from both the houses of the parliament. Then it should be sent for the president approval. Then it will be noted in the official gazette. Then it will become Finance Act. Finance bill turned into Finance Act. Okay now. So the Finance Act 2023 provisions, I can say confidently that that is not applicable for November 23. So for May 23 and November 23, for both the attempts, Finance Act 2022 amendments only applicable. Finance Act 2022 amendments only applicable. Okay now. Okay, for the time being, forget about the November 23 exams. May 23 exams. The cutoff date I've already mentioned for amendments is 31st October 2022. By the time all the amendments got effective, made effective. So that's the specialty of this May 23 exams. Are you following, sir? Every one of you. And ICI itself clearly mentioned in its study material in the initial wordings, when we prepared this study material, when we print this study material, only 2 amendments, section 14 and section 50 made effective. The remaining amendments, see, we got the amendments from section 16, section 29, section 34, 37, 38, 41, 47, 48. The amendments from these sections, what are, Amma? I can say section 16, section 29, 34, 37, 38, 41, 47, section 48. These all section amendments are not covered in this supplementary study paper. Of course, they covered them. They covered, but what they have mentioned, I'll show you. Yeah, look at here. Amendments made by Finance Act 2022. Right? You can see here, it is important to note that the below mentioned amendments have not been effective till the time when supplementary study material was released for printing. So as I said now, section 16, we got some amendments from section 16. But at the time of printing of this supplementary study paper, this amendment not made effective. This amendment made effective from 1st of October 2022. But before that itself, the supplementary study paper was printed. Then you will get a dot here, sir. Basically, since the study material was not updated by the ICA, that is why ICA come up with supplementary study paper, which containing amendments. But you saying that even the supplementary study material is also not updated, then what material should I prepare? Right. See, that's why ICI will come up with another supplementary study paper, which contains the amendments up to 31st of October 2022. So the ICI will definitely come up with another supplementary study paper. Within few days, it will come up with another supplementary study paper, which contains these amendments. The amendments made effective between 1st May 22 to 31st October 2022. Every one of you following now. See, that is the reason being I have not recorded GST amendments classes till date. I'm waiting for the latest supplementary study paper. I'm waiting for the latest supplementary study paper. I've conveyed this message to many students, but I can understand the situation of the students. The exams are approaching. It's hardly 2.5 months. So they are in the, process of completing the syllabus revision. So they asked me for the amendments, whatever now made available, right? Do that recording set. Then after that, when ICI releases the another supplementary study paper, then we'll see that. So that's why I waited till date. Are you following, sir? Every one of you. Okay. Okay. Now we are going to discuss about the amendments made up to 30th April 2022. Once the ICI releases, right, the another supplementary study paper, that will also I will do the recordings. Every one of you following now. So this particular session will give you a clarity about the ICI study material and supplementary study paper. Right, sir. So definitely they will come up with another supplementary study paper. You don't worry, right? Because that's why they clearly mentioned that only 2 amendments got effective at the time of printing of this material. So they clearly mentioned remaining amendments made in GST laws by Finance Act 2022 have not yet become effective. That means at the time of preparing this supplementary study paper. Clear now, every one of you. Right? Next. You can see here, once the announcement for the applicability of such amendments for examination is made by the ICI, students should read the amended provisions. Right? Clear, sir. Next. Yeah. So whatever the amendments we are going to discuss now is the amendments made effective up to 30th April 2022. Clear now? Right. So let's go with first chapter. In the first chapter, actually, what is the first chapter, Rama? GST in India and introduction. In our study material, even in our Ch.2 material also, the first chapter is GST in India and introduction. In that chapter, of course, we have studied only fundamentals. Only fundamentals? Yes or no? Right? And in that fundamentals, there are no amendments. Hardly we got only one amendment a month, that is about the GST compensation cess, which is not relevant for your May examination, for your CA inter examinations. Okay, GST compensation cess. When GST was introduced from 1st of July 2017, right? Because of the GST, what happens, earlier, value added tax is exclusive revenue for the state governments, and central sales tax is a exclusive revenue for the state governments, right? But now in the value added tax, in the central sales tax, the revenue sharing is done with central government. Earlier, VAT and CST is an exclusive revenue. In that, there is no need to pay any share to the central government. But now, the central government is also asking for share of revenue. So that's why majority of the states losing its revenues. That's why the department come up with concept called GST compensation cess. Don't worry, whatever the loss of revenue share you are going to face, that we will get compensated with GST compensation cess. But that's not for lifetime. Initially, they come up with only for 5 years time period. From 1st of July 2022 till 30th of June 2022. Right, sir? From 1st July 2017 to 30th June 2022. 5 years. Only 5 years. GST compensation is effective. But of course, we got now amendment. This is now changed to 31st March 2026. Another 4 years time period has been increased. GST compensation says now will be levied up to 31st of March 2026. Are you following, sir? Every one of you. That is the amendment we got. Of course, this amendment not relevant for your CA inter-level examinations. This is relevant for at CA final level. That's the only amendment we got from introduction chapter. And then after that, we got amendment from second chapter. What is our second chapter, Ma? Supply under GST. We have learned the concept of supply. Do you remember section 7, 8, 9 we have studied? Section 7, meaning and scope of supply, the main section we have studied. Section 7 read with schedule 1, schedule 2, schedule 3. Schedule 1 activities, to be treated as supply even without consideration. Right, schedule 2, right, transactions to be treated as supply of services or supply of goods. Schedule 3 we have studied negative list. Okay, every one of you. Now in this, where we have got amendment. The amendment is with respect to section 7 read with schedule 2. Activities or transactions between a person other than individual and its members constituents for consideration included in the scope of supply. So now what is the earlier provision and what is the new provision? What is the amendment we got? So this is the earlier provision, old provision. This is the old provision. Okay. And what it says earlier, supply of goods by any unincorporated association, body of persons to a member thereof for cash or deferred payment or other valuable consideration was treated as supply of goods. Do you remember we have discussed about RWA example, Residents Welfare Association. There was an apartment containing some 50 flats. For every apartment, there will be an association. In the normal language, we will call flat owners association, or the association name with the name of the apartment, right? Legend Apartment Owners Association, right, sir? So technically we call Resident Welfare Association. Clear? See, whenever you are a owner of a flat and an apartment, you should be the member of that association. You should be. No option available. You have to become a member of that association. And for that association, every month you have to make a contribution, right? Which will be collected from the tenants in the form of maintenance. See, you might have already observed, if you are renting in a flat, in an apartment, apart from the rent you are paying, you also have to pay the maintenance charges. Suppose that you're paying a rent of 10,000 per month. You have to pay additionally 1,000 per month for maintenance. So the owner will collect you from you 11,000, out of which 10,000 he keep, and the 1,000 he will pay to the association. So like that, the association will collect the amount from all the flat owners, and which will be spent for the maintenance of that apartment in the form of gardening, in the form of lift maintenance, in the form of common lighting, in the form of maintenance of the parking area, right? And that amount will be spent for conducting some functions, organizing some events like New Year celebrations, Holi celebrations, Ganesh Chaturthi celebrations, Christmas celebrations. Yes or no? So earlier what we have discussed, the supply of the goods by an association, unincorporated association, or a body of a person for cash or deferred payment to its members. They are not providing to outsiders. The association providing services to its members only. Providing services to its members only, right? That amounts to supply. Earlier, these services provided by only an unincorporated association or body of persons to be treated as supply only. But now, this is made applicable to all the categories of persons, excluding individual, other than individual. See, person definition is very wide. You might have learned the definition of person in Income Tax Act, Section 2, Clause 31. Person includes individual, HUF, AOP, BOI, AJP, partnership firms, LLPs, companies, cooperative societies, local authorities. So excluding individual. See, earlier you can see the services supply of the goods by unincorporated association or just body of person to its member is a supply. But now it is made applicable to all the kinds of persons. All the kinds of persons except individual. Except individual. Right, sir? So that means the scope of these provision widened. Earlier restricted to only unincorporated association and body of persons, but now the supply of the goods by an HUF to its members for valuable consideration amounts to supply. Right? Are you following? The supply of the goods by a partnership firm to its partners, to its members for a valuable consideration amounts to supply. They should be treated as two distinct persons. They should be treated as two distinct persons. So doctrine of mutuality you should not apply here. Doctrine of mutuality you should not apply here. So firm and partners both are one and same. There is no separate legal entity. The separate legal entity concept is applicable only for companies. Firm and partners both are same. If a firm providing goods to its partner, that means it providing goods to himself, itself. So providing the goods to himself, itself is not a supply. No, you should not apply that rule. Doctrine of mutuality you should not apply here. ICI clearly mentioned, sorry, the department clearly mentioned. Right. You can see here, the main reason behind introducing this concept is doctrine of mutuality. So you can see this explanation prevents the use of doctrine of mutuality by such persons to avoid a GST liability. So the firm said, I am providing goods to my partners. Me and my partners are same only, one entity only. So then how come the GST liability applied? So in order to levy the GST applied, there should be two persons, supplier and recipient. I am the supplier, I am the recipient. How can GST is liable? Are you following or not, every one of you? So here they clearly mention, for the purpose of this clause, the person and its members shall be deemed to be two separate persons. Shall be deemed to be two separate persons. That's why it amounts to supply. Clear, ma? In our material, if you look at page number 36. Page number 36. This in this page number, we are discussing about the schedule number 2 only. Yeah. Activities to be treated as supply of the goods or supply of services. Section 7.1 here read with schedule 2. Okay. See, whether it amounts to supply or not will be decided by section 7. Whether it amounts to this particular transaction amounts to supply or not will be decided by section 7. We have studied meaning and scope of supply. There we have studied 5 parameters. There should be supply of the goods or services. It should be for a valuable consideration. It should be made by a taxable person. It should be made in the taxable territory. You remember, like that we have studied 5 parameters. At the beginning of this chapter, we have studied 5 parameters. Section 7. Yeah, here it is. Supply should be for goods or services. Supply should be made for a consideration. It should be made in the course or in furtherance of business. Should be made by the taxable person. It should be a taxable supply. 5 parameters. So whether a particular transaction amounts to supply or not will be decided by whom, Amma? Section 7. After deciding it is a supply, we decided it is a supply. Now, whether it is a supply of good or supply of services will be decided by Schedule 2. What is the role of Schedule 2 here? The role of Schedule 2 here is to decide whether it is a supply of good or supply of services. Clear, everyone? Okay. So in this topic, we have discussed, come to the last point, I guess we have discussed. Yes, point number 7. Supply of goods by an unincorporated association. The example, as I have already mentioned you, the Resident Welfare Association. Okay. Now in this provision, we got amendment, and this amendment made effective from 1st of July 2017. Retrospective amendment. From the back date, the amendment made effective. Clear, everyone? You can see here. Yeah. Retrospectively effective from 1st July 2017. Clear, everyone, Amma? That's the only amendment we got from supply under GST, that is chapter 2. That's it. Clear, everyone? Okay. That's the only amendment. In this particular, we got amendment. Instead of writing supply of goods by any unincorporated person or body of persons, in this place you have to write what, Amma? Supply of goods by any person other than individual. That's it. That's it. That's what the amendment. You can see. Activities are transaction between a person other than individual. Clear? So you just write what, Amma? Supply of goods by any person other than individual to its members, either for cash, deferred payment, or other valuable consideration amounts to supply of goods. Clear? That's it. That's the amendment from chapter 2. One completed. In the chapter 1 only there is one amendment, GST compensation cess, which is earlier made effective only up to 30th June 2022, now extended up to 31st of March 2026. Of course, not relevant for CA inter exams. Chapter number 2 only we got one amendment, that is in schedule number 2 discussed. Now chapter 3, charge of GST. Right, sir? In chapter 3, again we got only one amendment. Again, we got only one amendment, and that is in reverse charge mechanism. Sorry, Amma. Sorry. Composition scheme. We got amendment in composition scheme. Do you remember composition scheme? Every one of you. In chapter number 3, we have discussed few important concepts, especially three main important concepts. Three main important concepts. Number 1, reverse charge mechanism. Number 2, composition scheme applicable for small scale dealers. Number 3, optional rate scheme for the small scale supplier of services. These three are the very, very important topics from chapter number 3 we have discussed. Okay. In that, from the composition scheme, we got amendment. Section 10. Right, sir? See, you can see here. Basically, in the composition scheme we have discussed, there are certain classes of persons, suppliers, who are not eligible to opt for composition scheme. Right? The suppliers or the manufacturers of the following goods cannot opt for composition scheme. Earlier, we used to have only hardly 3 or 4 exclusions. Now 3 more added. That's the only amendment. So the list increased. The list increased. What is it? Earlier, if you see, the manufacturers of the following goods cannot opt for composition scheme. Who are they? The manufacturers of ice cream and edible oils, pan masala, tobacco and manufactured tobacco substitutes, aerated waters. Aerated water means the water we are drinking, which is filled in a water bottle. Are you following, sir? Every one of you, right? See, you can see only these four were earlier, right? Only these four were earlier. Uh, just give me a second, sir. Yeah. Sorry, I got a call. As I already told you, now I'm getting calls for this. Right? Come back. So only the manufacturers of these four goods only not eligible to adopt the composition scheme. But now in this list, we got three more items added, right? And that's the amendment for this chapter. What are they, Amma? Fly ash bricks or fly ash aggregate with 90% or more fly ash content. Fly ash bricks, you know, the cement bricks, simple to say, I can say cement bricks, right? You can see here the cement bricks in this shape you might have observed. So the manufacturers of these flash bricks are not entitled to adopt the composition scheme. And bricks of fossil meals are similar siliceous earths, building bricks, earthen or roofing tiles. Even the manufacturers of these bricks, the manufacturers of these earth and roofing tiles also not eligible for adopting composition scheme. So thus the above said manufacturers, right? The manufacturers of the above mentioned goods have become ineligible to adopt the composition scheme. So that's the only amendment we got from the third chapter. Earlier, we used to have only four types of manufacturers not eligible for composition scheme. Now, four more added. That's it. Every one of you. Clear, sir? Right? So in our material, you can see where we have given third chapter, levy and collection of GST, section 47, page number 47. So in that, you directly go for the composition scheme. This is the reverse charge mechanism. Composition scheme. Okay, ma. And then here, who are not eligible for composition scheme. Clear. In that, the first point we discussed is here. The manufacturers of ice cream, pan masala, tobacco, and aerated waters. Not applicable for composition scheme. Now this list increased. Here you need to write the three more. Flash bricks, right? Earthen or roofing tiles, right? Even building bricks. These are also covered here. They are also not eligible for composition scheme. That's it. That's the amendment from third chapter. Okay, now. So I'm stopping the session here. In this, we have discussed the introduction part, right? About the supplementary study paper and its applicability and what it was containing. And we have discussed the amendments from first three chapters. Okay, now. So in the next session, I'll start with the amendments from exemptions from GST, fourth chapter itself. From the fourth chapter onwards. Okay, now. So that's it for this session, Amma. And we'll see you in the next session. Till then, have a great day. Good night. A very good morning, students. Welcome to the Ch.2 taxation classes. We are discussing GST Supplementary Study Material 2022, which contained the amendments with effect from 1st May 2021 till 30th April 2022. As in my last session, I've already discussed, we also have one more supplementary study paper, which was issued in between February 2nd week of 2023. So once I complete this, I'll discuss the latest of supplementary study material, which contains the amendments from 1st May 2022 till 31st of October 2022. Okay, first let us complete the first one. So in this, we have already covered the amendments from the first three chapters. Now moving on to the chapter number 4, exemptions. from GST. We have a very few exemptions from this chapter. Some exemptions have been removed, omitted. That means now they brought under taxable category, and some exemptions, some new exemptions added. Okay, sir. Now let us see what are the amendments from the chapter exemptions. So amendments in the services exempted from GST. The amendments in the list of exempted services have been highlighted in bold or in strike through form here under. Okay, sir. The first one, amendments in the existing exemptions. The following exemptions have been amended. The first one, pure services, excluding the works contract service or other composite supplies involving the supply of any goods provided to the central government. Provided to the central government. Now, here, central government is the recipient of supplies. Central government is the recipient of the supplies. So central government or state government, union territory, local authority. Here, not only central government, we can add the list to the central government, state government, union territory, local authorities, or a governmental authority or a government entity. Now, these have been removed from the exemption list. So whenever the pure services are provided to the governmental entity, governmental authority, now they brought under taxable category. They brought under taxable category with effective from the 1st of January 2022. Earlier, the pure services provided to governmental authority or governmental entity, they are exempted from tax. But now they comes under taxable category. Suppose that, let us take an example of TSRTC, Telangana State Road Transport Corporation. It's a government entity. It is a government entity, right, sir? And with respect to all the old buses, right, if a company provided repairing and maintenance services, it comes under the pure services category, repairs and maintenance. Now, a supplier of repairs and maintenance, providing services to TSRTC, which is Telangana State Government Entity, providing the services of repairs and maintenance with respect to the buses run by TSRTC. Earlier, that means up to 31st of December 2021, these services are exempted from GST. Now, with effective from 1st of January 2022, now these brought under taxable category. Of course, here the services are in relation to, right, by way of any activity in relation to any function entrusted to a panchayat. This is very important. Panchayat under Article 243G of the Constitution, or in relation to any function entrusted to a municipality. Right, sir. So these services are exempted from GST. Right, instead of supplier of repairs and maintenance, right, I can give the supplier of repairs and maintenance of street lights. Repairs and maintenance of street lights, and here make it as a GHMC. Or make it as TSPSDCL, Telangana State Power Supply Distribution Corporation Limited, TSPSDCL. Right, sir. So now the maintenance of the street lights and the provision of the supply of the power is the duty of the PSDCL. Suppose that if that particular work is outsourced to a private party, so the supplier of the repairs and maintenance of street lights, so he has to maintain that particular street lights, and if any defunct lights are there, the defunct lights should be replaced or should be repaired. Only repairs, not replaced. Replace, then it will becomes under supply of goods category. Only repairs. Okay, now. So maintenance of that electric poles, maintenance of that particular street lights. So TSPSDCL is a governmental entity. This is a government and Telangana state government entity. Okay, now everyone. So up to 31st of December 21, it is exempted. With effect from 1st of January 2022, it becomes under taxable category. Clear, sir. So because now the services, pure services provided to governmental authority or government entity, taxable, brought under taxable category. Next. Same thing, composite supply of goods and services, right? So in which the value of supply of goods constitute not more than 25% of the value of the said composite supply provided to the central government, state government, union authority, local authority. Same thing, Amma. The only thing is that in the first case, it covered only the pure services, excluding works contract service and composite supply of goods and services. That will be covered under this serial number 3A. Pure services covered in the serial number 3, and other than pure services covered in the serial number 3A. Composite supply of the goods and services where the value of the supply of the goods is not more than 25%. So means 75% should be services part and 25% should be the goods part. Okay, now. So if these services are provided to central government, state government, union territories, local authorities, governmental authorities, government entities, exempted from GST. However, with effect from the 1st of January 2022, if these services are provided to governmental authorities and governmental entity, it brought under taxable category. Okay, ma. Next, serial number 15. Transport of passengers with or without accompanied belongings. Means with or without luggage. So if the transportation of passengers by air, especially air transportation services with respect to certain airports, we got exemption. See, if I travel between Hyderabad to Delhi, I have to pay the GST. Such air transport service is liable to GST. If I transport between Hyderabad to Chennai, liable to GST. Whereas if I transported from Hyderabad to Manipur, exempted. If I've received the air transportation services between Meghalaya to Chennai, exempted. So certain states got the exemption with respect to the air transportation services that we've already discussed. What are they? So by air, embarking from that means your origin state or terminating in an airport means your destination state. Either origin or destination falls any of these states, then you will get exemption benefit. Located in the state of Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, and in West Bengal, only one airport. See, if you take the air transportation services from Kolkata, it is taxable. Right? The exemption is not given to the entire state of West Bengal, only for one particular airport, that is Bagdogra. Okay, now. So if you are taking the air transportation services from these states, fully exempted from GST. Next, non-air conditioned contract carriage. Non-air conditioned, non-AC contract carriage other than radio taxi. So that means radio taxi for transportation of passengers excluding tourism. Excluding tourism, conducted tour, charter, hire. See, these are taxable amount. These are taxable. Non-air conditioned contract carriages are generally exempted from GST. Non-AC contract carriages generally exempted from GST. However, if you are using the non-AC carriages, non-AC vehicles for your tourism purposes, it will be taxable. If you hide a non-AC contract carriage, non-AC vehicle, if you hide a non-AC vehicle, it is taxable. Radio taxi, taxable. Okay, now next, stage carriage other than AC stage carriage. Stage carriage means local buses. Local buses. So if you would you like to go from Dilshuk Nagar to Amirpet in Hyderabad, I'm talking about so because I'm from Hyderabad, I'm talking about Hyderabad. If you want to go from Dilshuk Nagar to Amirpet, so you catch a local bus, bus number 218D. You catch a local bus, right? So if it is non-AC bus, exempted. If it is a non-AC bus, exempted. However, if it is a AC bus, it will be taxable. It will be taxable. Okay, now stage carriages, which will stop from stage to stage. Stop from stage to stage. Right. Next. So stage to stage stop. The services provided by that particular bus. So if that bus is started from Dalshinagar, Nagar, then it will be stopped in the next step, next stage. Right, sir. It's been almost 1.5 years I've left Hyderabad, so I forgot that stages names. In between, you'll be having Koti, you will be having Lagdi Kapul, you will be having Khairatabad, son Panjagutta, then Amirpet, right, sir? So stage to stage, the bus will be stopped. Passengers will, they will get on from the bus at their respective destinations. New passengers will embark. So the local bus, in a general language, it is a local bus, city bus. Okay, now, if it is non-AC, exempted. If it is AC, taxable. Now the amendment part. This is amendment. From here, you will get the amendment. However, nothing contained in items B and C. What is B and C? This one and this one. Non-AC contract carriage, stage carriage. Nothing contained in items B and C above shall apply to the services supplied through an e-commerce operator and notified under section 9(5) of the CGST Act 2017. Now, what do you mean by this? So, what is section 9(5)? We have seen section number 9, right? Section number 9 series. Section number 9(1), we have seen section number 9(1) is a forward charge mechanism, regular scheme, where the supplier of the services or supply of the goods liable to pay the GST. 9(1), forward charge mechanism. After that, we have seen section 9(2). 5 petroleum products, especially 5 petroleum products, right? They are not brought under taxable category. They are not brought under taxable category. Not taxable. High speed diesel oil, right? Petroleum oils, motor spirit, diesel. Do you remember in the very first chapter we have discussed, right? So that were notified under section 9(2). And section 9(3) we have discussed reverse charge mechanism. Reverse charge mechanism where the recipient will pay the GST. Recipient of the supplies will pay the GST. And after that, we have discussed section 9(4), section 9(4), where supplier is an unregistered person. Supplier is an unregistered person and recipient, excuse me, recipient is a registered person. Supplier is unregistered and recipient is a registered person. And with respect to notified goods and services, the recipient, the registered recipient will pay the GST. Will pay the GST. This we have discussed in section 9.4. Do you remember, sir? Whereas the supplier is unregistered. However, recipient is a registered recipient. So with respect to notified goods and services, the registered recipient will pay the GST. See, this provision not applicable for all the goods and services. Only certain goods have been notified under section 9.4, goods and services. Okay, sir. And next comes 9.5, right? So this section 9.5. What is section 9.5? Here, both supplier and as well as recipient, both supplier and as well as recipient, both are unregistered. Supplier unregistered, recipient unregistered. However, these services are supplied through, a mediator. These services are supplied through a mediator, namely e-commerce operator. E-commerce operator. And this e-commerce operator is a registered person. Registered person. Now, since the services have been provided through e-commerce operator and that e-commerce operator is a registered person, he will pay the GST on this transaction. He will pay the GST on this transaction. Suppose that, look at this, non-air conditioned contract carriage, point number B. Suppose that I have hired a non-AC bus. I hired a non-AC bus through Ola. Ola is an e-commerce operator. Are you following, sir? Right? If I see, if you look at the state transport corporations, they are giving their buses on hire basis for the various activities. Suppose that there is a marriage, so you can hire a TSRTC bus, right? If you remember, there was a very small bus introduced with the TSRTC with the name Vajra, which is having a seating capacity of approximately 30 persons. Approximately 30 persons, Vajra buses. So you can hire these Vajra buses for any kind of functions. Suppose that there was a meeting happening of a political party. Now that political party hired 20 buses from TSRTC. And this hiring, assuming that happening through an e-commerce operator. Now that services are taxable. So if any person availing BRC services through an e-commerce operator, that services are purely taxable. Okay, ma. So that's what mentioned here. In other words, in a case where services of transport of passengers, by non-air conditioned contract carriage, right, or by an air conditioned stage carriage, are supplied through e-commerce operator, such services are not exempted from GST. They are taxable. Who will pay the tax? E-commerce operator. Being the supplier and recipient both are unregistered. Further, tax on such services will be paid by e-commerce operator. Every one of you following now? Section 9.5, where both the supplier and recipients are unregistered. So either neither supplier will pay GST nor recipient will pay the GST. But who will pay the GST? E-commerce operator. Of course, the e-commerce operator will not pay the GST out of his own pocket. He will collect it from the recipient and the same will be paid to the department. Clear, everyone? Next, moving on. 17, serial number. Same amendment, services of transportation of passengers with or without accompanied belongings by railways. By railways. Sir, with respect to railways, we know that general class exempted, second sitting exempted, sleeper class exempted. These three are exempted, and above of all these, like chair car, air conditioned coaches, first AC, second AC, third AC, all this will be brought under taxable category. Of course, it's a earlier provision only, not an amendment. It's an earlier provision only. That is why it was mentioned here, like other than first class or air conditioned coach. Means first class and air conditioned coach, railway services taxable. Metro, monorail, tramway, inland waterways, public transport other than predominantly used for tourism purpose. See, if you are using for tourism purposes, it will be taxable. In a vessel between the places located in India, unmetered cabs, auto rickshaws, including e-rickshaws. However, this is amendment. Now, this is amendment. However, nothing contained in item E, this one, metered cabs, auto rickshaws, including e-rickshaws, shall supply services to supplied through an e-commerce operator. So means if you are hiring a metered cab through e-commerce operator, then that services are taxable. If you are hiring a e-rickshaw through e-commerce operator, that will be taxable. Sir, I booked an auto in Uber Auto, taxable under GST, right? Auto rickshaws. Earlier, these are used to be exempted from GST. Now, these brought under taxable if you are hiring through an e-commerce operator. Okay, now. Services notified by under section 9.5 or services are the services by way of transportation of passengers by radio taxi, motor cab, maxi cab, motorcycle, omnibus, or any other motor vehicle supplied through e-commerce operator. In such a case, the tax on such supply services shall be paid by the e-commerce operator. Same amendment, but here it will be, metered cabs, auto rickshaws, including e-rickshaws. You can see here. In other words, in case where the services of transportation of passengers by metered cabs or auto rickshaws, including e-rickshaws, are supplied through e-commerce operator, then they are not exempted from GST. What do you mean by not exempted from GST? They are taxable. Who will pay the tax on it? The tax on services shall be paid by the e-commerce operator. Clear, sir? Every one of you. Next, serial number 72. Services provided to the central government, state government, union territory administration under any training program for which 75% or more of the total expenditure is borne by CGSG Union Territory Administration. See here, earlier it used to be, 100%. This is 100%, where 100% or more of the total expenditure is borne by central government. Then it is exempted. Now, this 100% reduced to 75%. Even if the central government, state government, union territory borne 75% minimum of the total expenditure, then it will be an exempted service. Earlier it used to be 100%, now it is 75%. And if you want, we can look it out this in our material also. Come to the page number 96. And here, point number E, you can check it out. Services provided to central government, state government, union administration under any training program for which total expenditure is borne by the central government, state government, union territory administration. So earlier it used to be total expenditure, that means 100% of expenditure. Now it's been reduced to 75% or more. This is the amendment. Okay, next. New exemptions introduced. Don't expect many exemptions. Only one exemptions have been introduced today. Only one exemptions, right? And that too by taking out one other exemption. One in, one out. What are they? In. Following new services have been exempted from GST. Services by way of granting national permit to a goods carriage to operate throughout the India are contiguous states. Contiguous means next to each other, right? So with effect from 1st of October 2021, this brought under exempted category. Services by way of granting national permits, route permits. So earlier, if you want to take a route permit, you are subjected to GST. But for taking the national permits now, only with respect to goods carriages, not for all the vehicles, only for those vehicles which are carrying the goods, lorries, trucks, only for them, national permit is now exempted from GST. Okay, next. Withdrawal of existing exemption. One exemption, earlier it used to be exempted, now it is withdrawn. That means it will be taxable now. What are they? Services of leasing of assets, rolling stock assets, including wagons, coaches, locos, by Indian Railways Financial Corporation to Indian Railways. Two different entities only. RFC, IRFC, Indian Railway Finance Corporation, right? Which use or which lending its assets in the form of wagons, coaches, locos. IRFC is the supplier and Indian Railways is the recipient. So these services are used to be exempted. Now it will be taxable. Okay, ma'am. Completed, sir. So one new exemption is given, one the existing exemption withdrawn. So these are the amendments from the chapter exemption. Clear, sir? Right. See, the entry numbers are given here only for your knowledge purposes, not for memorize, and no need to produce in the main exams. Are you following, sir? Every one of you. The same was mentioned here also. The entry numbers mentioned herein correspond to entry numbers in notification number 12 bar 2017. However, these entry numbers have been given only for reference and not for examination purposes, only for your reference. So no need to memorize these entry numbers. This one, 43, 37, we have discussed now. Right. So exemptions chapter amendments we have completed. Okay, now. So in the next session, we will discuss the amendments from the chapter input tax credit. Clear, sir? Every one of you. So see you in the next session, sir. A very good evening, students. Welcome to the Ch.2 taxation classes. We are discussing supplementary study material of the GST, part 1. As I've already discussed in my earlier classes, we have two supplementary study materials for May 2023. The first one, supplementary study material 1, which contains amendments from 1st of May 2021 to 30th April 2022. Right, sir? And the other one, that is supplementary study material 2, which was issued very recently, which contains the amendments from 1st May 2022 till 31st of October 2022, which is the cutoff date for the amendments with respect to May 2023. So presently, we are discussing the first supplementary study material. After completion of this, we'll go for the second supplementary study material. Clear, sir? And in the first supplementary study material, we have completed the amendments from the first 4 chapters. In the basic introduction, then after that, we have seen the supply under GST amendments, then charge of GST amendments, and then exemption amendments. Now time for the chapter input tax credit. So let us try to understand what are the amendments from the chapter input tax credit. Okay, sir. Now, so one very important amendment taken place from the chapter input tax credit, and that is, so with respect to the rule number 36(4) and section 16 subsection 2. Section 16 subsection 2 deals with conditions for claiming the input tax credit. Right, sir? So among that conditions, one of the very important condition is that If the registered recipient wants to claim the input tax credit, first of all, he has to make sure that his supplier have filed the GSTR1 within the time, and whatever the supplies made to him, all such supplies should have been disclosed in the GSTR1 of the supplier. Are you following, sir? So only those invoices or only those debit notes which are disclosed by the supplier in his GSTR1 or IAF, invoice furnishing facility, only the input tax credit attributable to such invoices or debit notes is available to the recipient. Right, sir? Now let me explain you this provision with the help of the notes. Input tax credit. Let me explain you this concept with the help of an example. Suppose that during the month of February 2023, there is a supplier, Mr. X, who supplied the goods to Mr. Y, recipient. Mr. X is a supplier and Y is a recipient. Okay, sir. Now, look at here. Now, during the month of February 2023, the goods supplied to Mr. Y and Mr. X issued, let us say, 100 invoices. 100 invoices with respect to the goods supplied to Mr. Y. Now, the total gross value of the goods supplied, let us assume that 10 crores. And GST attributable to this supply of the goods, let us assume that 50 lakhs. 10 crores into 5%, 50 lakhs rupees. Okay, now the recipient is entitled to claim this GST paid to Mr. X as input tax credit only when Mr. X filed the GSTR1 and disclosed all these 100 invoices in his GSTR1. Are you following, sir? Every one of you. Now, on or before March 11th, the supplier has to file GSTR1, which is outward supplies return. Outward supplies return. Now, while filing this GSTR1, X has to disclose all these 100 invoices because all these 100 invoices is an outward supply to X here. Suppose that, assuming case 1, Mr. X disclosed all the 100 invoices in his GSTR1. Now, in this case, in this case, Mr. Y entitled to claim full amount of GST paid, that is rupees 50 lakhs. That is rupees 50 lakhs. The entire 50 lakhs, Mr. Y can claim input tax credit. Entitled to claim full amount of GST paid. Entitled to claim as input tax credit. Entitled to claim as input tax credit. Full amount of GST paid, that is rupees 50 lakhs as input tax credit. Now look at the case 2. Case 2. Suppose Mr. X disclosed only 80 invoices. Only 80 invoices in his GSTR 1. Only 80 invoices in his GSTR 1. So 80 invoices already disclosed in GSTR 1. Right, sir. The gross value of these 80 invoices, let us say 8 crores, and ITC attributable 40 lakhs. 8 crores into 5%, 40 lakhs. Now, in this case, you can observe to the extent of the invoices, furnished by the supplier in his GSTR 1, recipient can avail 100% of input tax credit. So, before the amendment, with respect to invoices uploaded by the supplier in his GSTR 1. So 40 lakhs amount, he can avail input tax credit. The input tax credit attributable with respect to the invoices uploaded, 40 lakhs, he can avail input tax credit. And with respect to invoices not uploaded by the supplier, then the provision used to be 5% of the eligible input tax credit you can avail amount. So what is eligible input tax credit? 40 lakhs. So 40 lakhs into 5%, which comes to 2 lakhs. So the total input tax credit can be availed by recipient is equal to 42 lakhs. With respect to the invoices uploaded, 40 lakhs. With respect to the invoices not uploaded, still you can avail a part of the input tax credit, which is equal to 5% of eligible input tax credit, This is before the amendment provision. Now we got a latest amendment in this particular provision set. New amendment. After the amendment, with respect to point number 1, invoices uploaded with respect to invoices uploaded by the supplier, 40 lakhs credit, 100% of the input tax credit attributable to the with respect to the invoices uploaded we can avail and 100% no problem, right? Now with respect to invoices not uploaded by the supplier, how many invoices not uploaded, Amma? 20 invoices. So the input tax credit attributable to this 20 invoices 10 lakhs under, right? Now how much amount of input tax credit I can avail? Answer is 0, nil. So total input tax credit can be availed by recipient is equal to availed by recipient is equal to 40 lakhs only. So what is the amendment, Amma? The amendment is this one. Before the amendment, even though you have not your supplier not uploaded certain invoices, at least a part of the amount of input tax credit attributable to such invoices we can avail 5% of eligible input tax credit. But now that 5% removed. Now the department clearly said, dear recipient, if you want to avail input tax credit, make sure that your supplier shown all such invoices in his GSTR1 or IIFF, invoice furnishing facility. If your supplier uploaded your invoices in his GSTR1, avail 100% of input tax credit, then get lost. Not even 5% of eligible input tax credit. No, that has removed. So that's the first amendment from the chapter input tax credit. Okay, ma'am, every one of you. So look at input tax credit can be availed by the recipients only if the supplier have uploaded the relevant invoices or debit notes in their GSTR1 or IFF, invoice furnishing facility, and such details have been communicated to the recipients in form number GSTR2B. See, whenever the supplier filed the GSTR1, it will be auto-populated in the recipient's GST portal in the form of GSTR2B, which is in a read-only mode. You cannot edit GSTR2B, read-only mode, which is auto-populated in your home page. So whenever the recipients log in by using his credentials in the GST portal, then the GSTR2B will be shown there. So it means your supplier had filed GSTR1. Now you have to cross-check in the GSTR2B, you have to cross-check whether that supplier had uploaded all my invoices or not. If uploaded 100% of your invoices, 100% of your credit you can avail. Otherwise, just forget about your input tax credit. Okay, now, so look at here. This amendment taken place and effective from 1st of January 22. So from the 1st of January 2022, a new clause has been added to the section 16.2 by the Finance Act 2021 to stipulate a new condition. I've already told you section 16 subsection 2 explains the conditions for the availment of input tax credit. Now by adding the new clause AA, a new condition has been added to this section for the availment of input tax credit. What is the condition? It provides that input tax credit in respect of any supplier of the goods or services or both is available to the registered person only if the details of such invoices or debit notes in respect of the said supply has been furnished by the supplier in the statement of outward supplies, that is GSTR 1, and such details communicated to the recipient in the form of GSTR 2B. Okay, now, so consequently, rule number 36.4 has also been amended in order to take the effect of this amendment. Now, 36.4 reads as follows: no input tax credit shall be availed by a registered person in respect of the invoices or debit notes, the details of which are required to be furnished under section 37.1. So once that particular details are uploaded or furnished by the supplier, then you can avail the input tax credit. If not, you are not eligible to avail the input tax credit. Are you following, everyone? Next, the same story repeats. So thus ITC can now be taken only for those invoices or debit notes whose details are reflected in form number GSTR 2B. That is only when the respective suppliers have filed the details of such invoices in their form number GSTR 1. So up to this is the latest provision. In this paragraph, this is the latest provision. Now here onwards, the old provision. Earlier, what is the old provision? What was the old provision? ITC in respect of invoices and debit notes not uploaded by the suppliers in their form number GSTR 1 could be availed up to 5%. That is why in my notes before the amendment, what I've taken 5% of eligible input tax credit. This is before the amendment. Okay, up to 5% of the eligible credit is available in respect of the invoices or debit notes, the details of which had been furnished by the supplier. So, but you can just ignore this provision now. Just simply ignore this provision. Just try to remember this provision. Simple answer, simple thing, only with respect to the invoices which are furnished or uploaded by the supplier in their GSTR 1, the credit attributable to such invoices allowed as credit to the recipient. That's it. If my supplier furnished only 80 invoices, what is attributable credit? 40 lakhs. Only that 40 lakhs you are eligible to claim the credit. That's it. Sir, with respect to 20 invoices not uploaded, the input tax credit available 0. 0. Okay. Next. And after that, the remaining amendments made by the Finance Act 2022. These amendments we are going to discuss in supplementary study material 2. Now we are discussing only supplementary study material 1 only. Supplementary study material 1 only. That means the amendments up to 30th of April 2022 only we are discussing. Right, sure. So you can see here the below mentioned amendments have not been effective till the time when the supplementary study paper was released for printing. So when this supplementary study paper released for printing, these amendments not came into effect. As I said you earlier, majority of the amendments taken place from 5th of July 2022. I think if you remember, I might have discussed here. Yeah, there are 2 amendments taken place on 5th of July 2022 and major amendments taken place on 1st of October 22. But before these particular dates, this supplementary study material 1 has been released. Okay, now don't worry. All this we are going to be study in the supplementary study material 2. Where it is supplementary study material 2? This is supplementary study material 2 only. Okay, now this contains amendments from 1st of May 2022 till 31st of October 2022. That's why I've mentioned it as supplementary study material 2. Okay, now, sir, every one of you. This is the first supplementary study material which contains amendments from 1st of May 2021 till 30th April 2022. The present we are discussing that only. And after that, we'll start supplementary study material 2 where we are going to discuss all this. Okay, now. So anyhow, we are discussing this in supplementary study material 2. I'm skipping here. I'll show you in supplementary study material 2 also regarding this amendment. Yeah, here it is. This is supplementary study material 2 only, right? And you can see here the very first amendment is the amendment which we have discussed here. You can see the two tabs. This is 1 and this is 2. So in 1, you can see the amendment just now we have discussed. ITC can be availed only by the recipients, only if the supplier have uploaded invoices or debit notes. The same discussed here also. ITC can be availed by the recipients only if the supplier have uploaded relevant invoices. This anyhow I already discussed in the supplementary study material 1. So that's why in supplementary study material 2, this I will be skipped only. And apart from that, the next amendment you can see here. Just a second, sir. So the second amendment, time limit for the availment of ITC by a registered person. You can see here in this table, the 16.4 explains about the time limit for the availment of input tax credit. So whatever the amendments discussed in this table will be covered in supplementary study material 2. So you need not worry about these amendments covered in the table that I will be covered in my supplementary study material 2 discussion. Okay, now. So with this, we have completed the amendments from the chapter input tax credit. And now moving to the registration chapter. Registration chapter. Sir, in registration chapter also, we have very few amendments and they're not so important from examination point of view, right? Look at here. The first one is about Aadhaar authentication mandatory for existing registered person. So a new rule has been introduced in rule number 10B. Right, sir. Now you can see here Aadhaar authentication mandatory for existing registered person, new rule 10B. So Aadhaar authentication has been made mandatory for the new registrants as well as for the existing registrants. Basically, when it comes to the new registrants, at the time while they are applying for the registration, by default, they happen to give their Aadhaar details. But when it comes to the existing registrants, so GST came into effective from 1st of July 2017. It's almost 6 years nearing. Right, sir? But when the GST was introduced, that is with effective from 1st of July 2017, the Aadhaar authentication has not made mandatory. Very lately, Aadhaar authentication made mandatory. And initial days, it was made mandatory only for the new registrants. Later on, it was made applicable even for the existing registrants. Those who are registered very earlier before this rule, now they are also supposed to do this Aadhaar authentication. How? Look at here. With regard to the existing registrants, section 25(6)(a) stipulates that every registered person shall undergo Aadhaar authentication or furnishing of the proof of possession of Aadhaar number in the prescribed form and manner. New Rule 10B prescribes that manner in which Aadhaar authentication needs to be done by a registered person. See, in section number 25(6)(a), what they said, in section 25(6)(a), they said for every registered person, that means existing registered persons, they have to go for the Aadhaar authentication in a prescribed form, manner, and time. And this prescribed form, manner, and time explained in rule number 10B. What is the manner, what is the form, and what is the time limit in which this Aadhaar authentication should be done? Explained in this new rule 10B. Okay, ma. So a registered person who has been issued a certificate of registration under the GST shall undergo authentication of his Aadhaar number. See, when it comes to the proprietorship, right, the Aadhaar number of the proprietor should be given. When it comes to a firm, any partner's Aadhaar number should be given. When it comes to HEF, Karta of the family, Karta's Aadhaar authentication should be done. When it comes to a company, MD, for every company there is a MD, managing director. If MD is not there, whole-time director. So the managing directors or any whole-time directors, Aadhaar number should be authenticated. When it comes to association of persons or body of individuals or a society, any member of the managing committee, his Aadhaar authentication should be done. When it comes to the trustees in the board of trustees, Aadhaar authentication should be done, and of the authorized signatory. Suppose that I'm a GST registered person. I am running my proprietorship firm. Now, with respect to my registration, my own Aadhaar number should be authenticated. Are you following, sir? Every one of you. Next. In order to be eligible for this following purposes, sir, why? Why should I undergo Aadhaar authentication? Sir, in order to filing an application for the revocation of cancellation of registration. Suppose that for whatever might be the reasons, your registration has been cancelled by the officer, prescribed authority. Now, you would like to file an application for revocation of that cancellation. In order to become eligible to file such an application, Aadhaar authentication must have been done earlier. If Aadhaar authentication not have been done earlier, then you are not allowed to file an application for the revocation of cancellation of your registration. Second thing, for filing refund of application in form number RFD1. See, if you want to file any refund application, refund of the GST paid by you, Aadhaar authentication must have been done earlier. Number 3, for the refund of the IGST paid on goods exported, once the goods exported out of India and you submitted the proof of export, you become eligible to claim IGST paid as refund. But in order to file that application for the refund, the Aadhaar authentication must have been done earlier. Right. Next, consequential amendments by virtue of insertion of this rule number 10B have been made in the all these provisions. 23(1) revocation of cancellation of registration. Rule number 89(1) application for the refund of tax. 96(1) refund of IGST paid. First provisor to 25(6)(a) provides that if an Aadhaar number is not assigned to an existing registered person, don't worry, Amma. If Aadhaar number is not assigned to you, right? If you already applied for an Aadhaar but not yet received, don't worry, when you applied for an Aadhaar, you might have been provided with Aadhaar enrollment ID. So that enrollment ID must have been entered by you, must have been submitted to the GST department. Sir, I have not yet applied for Aadhaar. Don't worry. Don't worry. You can provide your bank details, bank passbook along with the photograph, or you can submit voter ID card as proof, or passport or driving license. This can be, you have to be, alternatively, you have to give to the department on behalf of your Aadhaar number. And the department will give you instructions. Okay. For the time being, we'll keep your GST registration active. Do one thing, go and apply for the Aadhaar immediately. Once you applied for the Aadhaar, you will get Aadhaar enrollment ID. Submit that Aadhaar enrollment ID to us. And once you got the Aadhaar number, submit the Aadhaar number to us. Provide the details of your Aadhaar number to us. So this is a procedure. If any Aadhaar number not assigned to you, look at here. If an Aadhaar number is not assigned to you, to the existing registered person, such person shall be offered alternative and viable means of identification. And such manner prescribed in rule number 10B. What are they? If Aadhaar number has not been assigned to the person required to undergo authentication of the Aadhaar, such person shall furnish the following identification documents. What are they? Aadhaar enrollment ID slip and bank passbook with photograph, voter ID card, issued by the Election Commission of India, or passport or driving license issued by the licensing authority. However, once the Aadhaar number is allotted, then he shall undergo authentication of the Aadhaar within a period of 30 days from the allotment of the Aadhaar number. Clear, sir? Every one of you. Next. The aforesaid Rule 10b shall not be applicable to the persons notified under Section 25(6)(g). That is the persons exempted from Aadhaar authentication. There are certain persons like central government, state government, certain entities which are exempted from the Aadhaar authentication. Okay, now next. So that's the first amendment from the chapter registration with respect to the Aadhaar authentication. Okay, now a new rule 10b has been introduced with respect to Aadhaar authentication. Earlier, section number 25(6)(a) provides that every registered person has to undergo the Aadhaar authentication in a prescribed manner, form, and time. And that prescribed manner, form, and time explained in rule number 10b. Okay, now next. Second amendment from this chapter. Second amendment from this chapter. We know that for registration criteria, one of the criteria is your aggregate turnover. Whether am I liable for registration or not is purely depends upon your turnover, aggregate turnover. And we know that there are three limits: 10 lakhs, 20 lakhs, and 40 lakhs, depending upon the state from where you are providing supplies. With respect to some states, we have the enhanced limit of 40 lakhs. Enhanced limit of 40 lakhs, and that is the condition is that it must be an intrastate supply within the same state and the aggregate turnover not exceeding 40 lakhs rupees. This we have discussed in chapter number 7. I'll take you there. Registration. Yeah, here it is. With respect to a supplier from Manipur, Meghalaya, Manipur, Mizoram, Nagaland, and Tripura, the threshold limit is 10 lakhs rupees. The threshold limit is 10 lakhs rupees. With respect to the states of Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, and Telangana, you can see the threshold limit is 20 lakhs. With respect to all other states, right, the threshold limit is 40 lakhs for goods. For services, it is always 20 lakhs only. It is always 20 lakhs. For goods, we have an enhanced threshold limit of 40 lakhs. But the condition is that it must be an intrastate supply. Jammu and Kashmir, Assam, Himachal Pradesh, and all other states, except these states. Okay, number. Now, the amendment is that the threshold limit of 40 lakhs for registration available to persons exclusively engaged in making supply of goods. This provision not applicable to the suppliers of fly ash bricks, blocks, building bricks, bricks of fossil mills, earthen or roofing tiles. Do you remember? We have discussed about this earlier. Fly ash bricks, blocks, building bricks, bricks of fossil mills, earthen roofing tiles. We have discussed about these goods earlier. Where? In chapter number 3. About what? The suppliers of these goods not eligible to adopt composition scheme. In the same supplement study material 1 itself, we have discussed in the chapter number 3. Yeah, here it is. You can see chapter number 3, charge of GST. And here we have discussed manufacturers of fly ash bricks, blocks, building bricks, bricks of fossil mills, earthen or roofing tiles, ineligible to adopt composition scheme. So these suppliers are also not eligible for the higher threshold limit of 40 lakhs for registration. Here it is. Are you following, sir? Every one of you. So the persons who are making the supplies of these goods not eligible to the higher threshold limit of 40 lakhs. For them, the threshold limit is 20 lakhs only, irrespective of the fact whether they are supplied within the same state or whether they are supplying to other states. The threshold limit is 20 lakhs rupees only. Okay, now, so if their aggregate turnover exceeding 20 lakhs, then they're supposed to go for the registration process. So, notification number 10/2019 exempts any person who is engaged exclusively in intrastate supply of goods and whose aggregate turnover in a financial year does not exceed 40 lakhs exempted from obtaining registration. However, the persons engaged in making the following supplies are not eligible for the higher threshold limit. Who are they, Amma? Ice cream, other edible oils, whether or not containing cocoa, pan masala, and tobacco and manufactured tobacco substitutes. Earlier, only these goods are not eligible for higher threshold limit of 40 lakhs. However, now with effective from 1st of April 2022, some more goods have been added. What are them? Fly ash bricks, flash aggregate with 90% or more, flash concrete, flash blocks, bricks of fossil mills are similar siliceous earths. Now, the suppliers of these goods also not eligible to adopt this enhanced threshold limit of 40 lakhs rupees. Clear, everyone? That's the amendment. Okay, building bricks and earthen roofing also there, sir. Okay. So just go through this amendment. Completed. Now let's moving on. Next amendment from this chapter. Extension of time limit for filing an application for the revocation of cancellation of registration by a registered person permitted beyond the stipulated time. Suppose that your certificate of registration have been cancelled by the prescribed authority. Now you have every right to filing an application for the revocation of such cancellation. So for that, you have a time limit, sir. What is the time limit? Within 30 days from the date of service of the order of cancellation of registration. So the date on which the order was serviced to you with respect to the cancellation of registration, from such date, within 30 days, you have to file an application for revocation with the proper reasons. And after that, if you show a genuine reason, a genuine cause, AC or JC have a right to extend the time limit for a period not exceeding 30 days. Joint Commissioner or Additional Commissioner, they have the right to extend the time limit for further 30 days. Or even after that also you are not able to provide or not able to filing an application. So general time limit 30 days. 30 days. And for which additional commissioner, joint commissioner have the power to grant you additional 30 days time limit for filing an application. So that means totally 60 days time limit is provided to you. Sir, even within the 60 days, if you are unable to file an application, then you have to show a genuine reason, genuine cause. Then the commissioner have every right to give you an additional 30 days time limit. An additional 30 days time limit. The totally 90 days time limit will be provided to you. Are you following, sir? This is a existing provision. Existing provision. You can see here, with effect from the 1st of January 21, proviso to section number 31 was substituted by Finance Act 2020 to permit the extension of time limit for filing an application for revocation of cancellation by a registered person. It stipulated that the time period prescribed for filing of application for revocation of cancellation of registration may, on sufficient cause being shown and for reasons to be recorded in writing, be extended by the AC or JC, as the case may be, for a period not exceeding 30 days. So generally you will get 30 days. Here I have mentioned already. In addition to that, you will get additional 30 days by AC or JC, total 60 days, or by the commissioner for a further period of not exceeding 30 days beyond the period specified in clause A. This is clause A. So you will get additional 30 more days by the commissioner. Totally 90 days you will get a time limit. In view of the above amendment, Rule 23(1) has been suitably amended to give effect the aforesaid amendment. Now, amended Rule 23(1) reads as follows. A registered person whose registration cancelled by the proper officer on his own motion may, subject to the provisions of Rule 10D, he can submit an application for revocation of cancellation in the prescribed form to such proper officer within a period of 30 days from the date of service of the order of cancellation of registration. So the original time period is as it is, or within such time period as extended by AC or JC or commissioner, as the case may be, in exercise of the powers provided under the proviso number 31 at the common portal, either directly or through facilitation center notified by the commissioner. Now see the amendment. Earlier, what is the maximum time limit can be given by the AC or JC or commissioner clearly mentioned. AC or JC can be given a maximum time limit of 30 days and commissioner have a right to give the additional 30 days. So put together 90 days. But now after amendment, the normal 30 days time limit you will get, and after that AC or JC and also commissioner, they can give the time limit up to such time period. You can see what is such time period. The act is silent. So earlier clearly mentioned 30 days, but now such time period as extended by AC or JC. They can extend up to 40 days. They can extend up to 50 days. Or they even can extend up to 20 days only. Are you following now? Right? Next. So that's the amendment of this rule number 10B. Earlier clearly mentioned the time limit for JC and AC 30 days, for commissioner 30 days. They have the power. But now that 30 days power removed and mentioned as such time period. What is such time period? It's purely at the discretion of such officer. Okay, next. So after that, amendments made by the Finance Act 2022, this will be covered in supplementary study material 2. All these amendments. Okay, now. Right, sir. So with this, in this session, we have covered input tax credit amendments and as well as registration amendments. So the remaining amendments we will be discussed in the tomorrow session. In tomorrow's session, we will be discussed amendments from chapter number 8 tax invoice and amendments from chapter number 10 returns. So that's the end of the supplementary study material 1. Clear, sir? Right. See you in the next session, sir. A very good evening, students. Welcome to the Ch.2 taxation classes. We are discussing GST amendments for May 2023 examinations. So for May 2023, ICI has released 2 supplementary study materials. One containing the amendments from 1st May 22 till 30th April, 1st May 21 till 30th April 22. That is what we are discussing right now. And the other material is containing the amendments from 1st May 22 till 31st of October 22. That will be discussed from tomorrow onwards. Okay, ma'am. Now, so far we have completed the amendments from the first 7 chapters. Now moving on to the 8th chapter. that is a tax invoice, credit notes, and debit notes, e-way bill. Now, the first amendment is with respect to e-invoicing is mandatory for all the registered businesses with aggregate turnover in any preceding financial year from 1718 onwards greater than 20 crores. Sir, e-invoicing concept is already there. It is an existing concept. What is the amendment in it? The amendment is that earlier, when the concept of e-invoicing was introduced, that is with effective from 1st of October 2020, for the first time, the concept of e-invoicing comes into the picture. The aggregate turnover limit was 500 crores. Over the time, this limit got reduced on a timely basis. Now it's been reduced to 20 crores. So earlier, if the aggregate turnover exceeded 500 crores in any of the financial years starting from 2017-18, then e-invoicing is mandatory for such registered persons. Now the limit of 500 crores reduced to 20 crores. That's the amendment from this provision. So look at here. With effect from the 1st of October 2020, e-invoicing was made mandatory for all the registered businesses with an aggregate turnover based on PAN in any of the preceding financial year from 1718 onwards greater than 500 crores for issue of all B2B invoices. Since then, the threshold limit for issuing the invoices is being progressively reduced. Now, with effect from the 1st October 2022, this is the amendment provision. This is the amendment. With effect from 1st of April 2022, such limit has been further reduced to 20 crores. Thus, e-invoicing has been made mandatory for all the registered businesses with an aggregate turnover in any of the preceding financial year from 1718 onwards greater than 20 crores. Are you following, sir? Now, GST was introduced during the financial year 2017-18. So after that, we have seen financial year 18-19, 19-20, 20-21, 21-22, and now we are in the financial year 2022-23. This is our current financial year. Right, sir? Now, in any of these preceding financial years, if the aggregate turnover exceeded 20 crores, right, sir, in any of the preceding financial years, even if for one preceding financial year, if your aggregate turnover exceeded 20 crores, then in the current financial year, e-invoicing is mandatory. E-invoicing is mandatory. Are you following, sir? That's the provision, sir. Now moving on. E-invoicing is not applicable to governmental depart and local authority. So generally, just now we have discussed in any of the financial years starting from financial year 17-18, if the aggregate turnover exceeding 20 crores, e-invoicing is mandatory. But of course, we do have some exceptions with the provisions of e-invoicing. Earlier, we used to have the exemption benefit only with respect to special economic zone units, SEZs, and insurance and banking companies, including NBFCs, and then GTA service provider, right? GTA supplying the services in relation to the transportation of goods by roads in a goods carriage, then supplier or passenger transportation services, and then person supplying the services of admission to the exhibition of cinematographic films. Only for these 5 entities, the concept of e-invoicing not applicable. For these five people, concept of e-invoicing not applicable. Concept of e-invoicing not applicable. Now for this list, 2 more persons have been added. 1 government depart, and 2 local authority. Now put together, this is the sixth one, this is the seventh one. Totally, there are 7 different classes of persons, 7 different classes of persons from whom the e-invoicing provisions not applicable. So you can see there, as seen above, e-invoicing is mandatory for all the registered businesses with an aggregate turnover in any of the preceding financial year from 1718 onwards greater than 20 crores. However, so whenever a provision started with the word however, that means it is an exception. Exception to original rule. Exception to original rule. However, the following entities are exempt from the mandatory requirement of e-invoicing. Earlier, we used to have only 5 entities. Now, the amendment, this is the amendment. The said notification has been amended to exempt a government department and local authority also from mandatory requirement of e-invoicing. Okay, sir, every one of you. This is the second amendment from this chapter. Third amendment. Dynamic QR code required to be provided in invoice on invoice issued to a person having a UIN, unique identification number. Right, sir? So generally for the specified international organizations, this UIN will be issued under unique identification number. Right, it's only for the specified international organizations like WHO, World Health Organization. Right, sir? Now, generally, what is the concept of dynamic QR code? Sir, if with respect to the B2C invoices, business to customer, all B2C invoices issued by a registered person whose aggregate turnover in any of the preceding financial year from 1718 onwards exceeding 500 crores are mandatorily required to have a dynamic QR code on the invoices. So don't get confused between e-invoicing concept and dynamic QR code concept. E-invoicing concept having an aggregate turnover threshold limit of 20 crores and dynamic QR code concept having a threshold limit of 500 crores. There is no change with respect to the dynamic QR code. It remains to be same 500 crores. Now, excuse me, what is the amendment in this provision? The amendment is not with respect to threshold limit. The amendment is that whenever you are issuing an invoice to a person who is having UIN, even on such invoices also, the dynamic QR code should be there. Earlier, the provision says that whenever a registered supplier issuing an invoice to a person who is having UIN, no need to issue any, that means no need to have a dynamic QR code on the invoice issued. But the amendment is there. Now we got an amendment even to a person. Suppose that you're issuing an invoice to WHO. Now in that case, whether my invoice should contain a dynamic QR code on that particular invoice, answer is yes. It's amended provision. So look at here, in this regard, a circular has been issued, clarified that who has obtained a unique identification number is not a registered person as per the definition of registered person. So therefore, any invoice issued to such person having UIN shall be considered as invoice issued for B2C supply and shall be required to comply with the requirement of dynamic QR code. Clear, sir? Next, fourth amendment. E-way bill generation facility to be blocked only in respect of the outward movement of the goods by the defaulting registered persons. Sir, generally, whenever a registered person made any default, suppose that he had not filed the returns for a continuous period of 3 months, for a continuous period of 6 months. Now he becomes a defaulting registered person. So when you are not complied with the provisions of the GST, when you declared as a defaulted registered person, then you're not having the option of generating the e-way bill for all your outward supplies. Sir, what about my inward supplies then? Earlier, if a person, registered person, declared as a default, not complied with the provisions of the GST, then he was barred from generating of the e-way bill with respect to his inward supplies and outward supplies as well. Both. He cannot raise an invoice, sorry, e-way bill with respect to his outward supplies. At the same time, the other supplier who made the supplies to this defaulted person, even that other person is also not able to generate the e-way bill. Are you following, sir? Let me explain you this with the help of the notes. Chapter number 8, tax invoice. Debit notes, credit notes, and e-way bill. Now look at the example. There are two persons, Mr. X, supplier, Mr. Y, recipient. Both are registered persons. Both are registered under GST. Both are registered under GST. Right, sir. Now, Mr. X supplied goods to Mr. Y. Not supplied, is in the process of supplying goods to Mr. Y. Now, Mr. X would like to generate an e-way bill here. Right? So he has to generate an e-way bill. Now, Mr. X is able to generate an e-way bill only when Mr. Y is not a defaulted person. Are you following, sir? Suppose that if Mr. Y not filed returns for a consecutive period of 6 months, for a consecutive period of 6 months, and he was declared as a defaulted, declared as defaulted registered person. Right, sir? Now, whether the e-way bill can be generated by Mr. X here. See, as per the old provisions, he cannot, because here the recipient is a defaulted person. Right, sir? Sir, even though it is an inward supply to him, and even though the e-way bill is generated by here Mr. X, the old provision is if the recipient is a defaulted person, with respect to outward supplies, inward supplies, both e-way bill cannot be generated, blocked. But now the amendment gives some relaxation here. If a supplier is declared as default, then only with respect to his outward supplies, e-way bill cannot be generated. E-way bill will be blocked. But with respect to his inward supplies, yes, e-way bill can be generated. So this is an inward supply to Mr. Y. Inward supply to Mr. Y. So here Mr. X can successfully generate the e-way bill, can be sent to Mr. Y. Absolutely no problem. Are you following, sir, here? So that's the provision here, sir. So rule number 138E contains the provisions pertaining to blocking of e-way bill generation facility. That is disabling the generation of e-way bill. Earlier, a user was not able to generate the e-way bill for GSTIN if the said GSTIN become ineligible for e-way bill generation. It implies that GSTINs of such blocked taxpayers could not be used to be generated the e-way bill either as a supplier or as a recipient. Either as a supplier means on his outward supplies he cannot generate, or as a recipient on his inward supplies also he cannot generate that e-way bills. However, now we got an amendment. This is amendment. This is old provision and this is an amended provision. What is amendment provision? However, the said rule has been amended to relax such a restriction. Henceforth, blocking of GSTIN for a e-way bill generation facility is only in respect to an outward movement of the goods of the registered person who is ineligible for the e-way bill. E-way bills can be generated in respect of inward supplies received by such registered person. So very, very important point. So an example also provided here. Mr. A registered person paying the tax under regular scheme in Delhi, has not filed Form GSTR1 for the last 2 months. Mr. B of Haryana, a regular return filer, wants to generate an e-way bill for goods to be supplied to Mr. A. See, who is a supplier here? Mr. B is a supplier. Mr. B from Haryana. Who is supplying the goods to? Mr. A. Mr. A, recipient. Here, Mr. B filing his returns regularly, whereas Mr. A has not filed the GSTR1 for the last 2 months. He declared a defaulted person. Now, whether Mr. B able to generate an e-way bill with respect to this supply of goods? Answer is absolutely yes. Absolutely yes. Because with respect to Mr. A, even though he is a defaulted person, becoming ineligible for the e-way bills, however, that restriction is applicable only for outward supplies made by Mr. A. For inward supplies, absolutely no problem, sir. You can check out here. As per earlier position of law, Mr. B would not have been able to generate e-way bill with Mr. A's GSTIN. However, in terms of the amended provision of the law, there will be no more restriction on generating the e-way bill. Mr. B, who is making outward movement of the goods, is a regular filer return. Okay, ma, every one of you. So the ineligibility, the restriction is only with respect to outward supplies, not with respect to inward supplies. Right. That's it. So Mr. A wants to generate an e-way bill in respect of this is one more example. Mr. A wants to generate e-way bill in respect of an outward supply of goods to Mr. H. The continuation of that example. Right, sir. See, whatever the goods he got from Mr. B, now Mr. A sending the same goods to Mr. H. Now, whether with respect to this transaction, whether Mr. A eligible for generation of e-way bill, answer is no. Now, because this transaction between A to B, A to H, now Mr. A is outward supplier. Since he's a defaulter, he cannot generate the e-way bill on his outward supplies. Next. After that, as I already explained in the previous sessions, whatever the amendments made by the Finance Act 2022, which came effective from 1st of May 2022, covered in supplementary study material 2, that I'll start from tomorrow onwards. First, let me complete the SSM 1, Supplementary Study Paper 1, which contains the amendment up to 30th of April 22. After that, we'll look after the amendments effective from 1st of May 2022. Clear? Huh? So all the table, whatever the amendments are mentioned in this table, now we will be covered in the Supplementary Study Material 2. Don't worry. Clear, sir? So there are 4 amendments from this chapter: tax invoice, debit notes, credit notes, and e-waybill. Okay, sir. So just go through it and ask the doubts if any. Every one of you. Completed, sir. Now let's moving on to the next chapter. That is chapter number 9, payment of tax. Now, the first amendment, guidelines for disallowing debit of electronic credit ledger under rule number 86A. Suppose that, let me explain you this with the help of the running notes. Chapter number 9, payment of tax. Suppose that, excuse me, there is a person or there is a company ABC Limited, a registered entity. Now, in his electronic credit ledger account, is having a credit balance of, let us say, some 10 lakhs rupees. Now, he would like to utilize this balance for the payment of his output tax liability. For the payment of his output tax liability. However, if the proper officer, not below the rank of assistant commissioner, having the reasons to believe that whatever the credit balance appearing in the electronic credit ledger, this one 10 lakhs, is wrongly taken by him through fraudulent actions, fraudulent means, or through wrongly refunded to him. If that proper officer, that assistant commissioner, having the proper reasons to believe that this 10 lakhs he falsely claimed, then that proper officer have every right to restrict the utilization of this credit balance for the payment of output tax liability. Are you following, sir? The proper officer has every right to restrict the debiting of electronic credit ledger. Now, the important point here is that, sir, what do you mean by the proper reasons to believe? What are the grounds? Under what grounds we can say yes, the supplier had claimed the input tax credit through fraudulent means? So that is explained in this particular amendment. Guidelines have been given for the proper officers in this rule number 86A. So rule 86A provides that in certain specified circumstances, the commissioner or an officer authorized by him, not below the rank of assistant commissioner, on the basis of reasonable belief, that ITC available in the electronic credit ledger has been fraudulently availed or is ineligible, so may not allow the debit of an amount equivalent to such credit in electronic credit ledger. CBIC has issued guidelines for disallowing the debit of said amount from electronic credit ledger. So on perusal of 86A, it is evident that the commissioner or an officer authorized by him, not below the rank of assistant commissioner, must have, this is important point, must have reasons to believe that ITC available in the electronic credit ledger is either ineligible or has been fraudulently availed by him before dissolving the debit of amount of such electronic credit ledger. Now, what do you mean by the reasons to believe? So the reasons for such beliefs must be based on one or more of the following grounds. First one, the credit available by such registered person on the invoices or debit notes issued by such supplier who is found to be non-existent or is found not to be conducting any business from the place declared in the registration. So, see, in order to claim the input tax credit, there must be documentary evidence. What is the documentary evidence here? Invoices or debit notes issued by the supplier. Okay, ma. Suppose that you are claiming that I have purchased goods from Mr. X. Mr. X has given me invoices. Based on these invoices, I am claiming input tax credit. However, the proper officer verified about the existence of Mr. X, and he found that Mr. X was not there at all. He's a, a person artificially created by the recipient here, a fake person, or Mr. X was there, the supplier is there, but he is not conducting any business from the registered premises. This is one of the ground where the proper officer can say this is the reason to believe from whom he got the invoices. The supplier was not at all there, or the supplier was there but is not doing the business from a registered premises. Number two, the credit available by the registered person and invoices or debit notes without actually receiving any goods or services or both. Okay, here I'm saying that I purchased goods from Mr. X on which I paid an input tax of 10 lakhs, which I would like to avail as a credit. I availed it already. But where the proper officer verified that I have claimed that input tax credit, I have availed that input tax credit without actually receiving any goods or services or both. On paper, I have shown that I have received the goods, but in reality, I have not received the goods. This is the second ground for the reason to believe that whatever the input tax credit lying in the electronic credit ledger is a fraudulent one, wrong one. Third one, the credit is available by the registered person on the invoices or debit notes, the tax in respect of which has not been paid to the government. See, these are all the conditions for availment of input tax credit. The tax must have been paid by the supplier to the government. However, here the tax has not been paid, but here you have availed input tax credit. So then you're not allowed to utilize such input tax credit. Next, fourth one, the registered person claiming the credit is found to be non-existent. Whoever claiming the credit is found to be non-existent or is found not to be conducting any business from the place declared in the registration. Even the recipient also who claiming the input tax credit is not there actually, or else he was there but he is not conducting the business from the registered premises. Again, this is also a ground to proper officer for denying the utilization of input tax credit. Next, the credit is available by the registered person without having any invoice or debit note or any other valid document for it. I've already mentioned you in this provision itself. The very first provision I've said, in order to claim the input tax credit, you must have documentary evidence. So you are availed input tax credit, but when proper officer asked for the documentary evidence, you're unable to produce any documentary evidence. So that means whatever the input tax credit lying in your electronic credit ledger is a wrong one. So these are the reasons or the grounds where the proper officer can say, yes, because of these reasons, I'm denying him from debiting his input tax credit ledger. Are you following, sir? Next amendment. Transfer of amount allowed from cash ledger under CGST Act of a registered person to the cash ledger under IGST, SGST, UDGST. See, this provision, we will be discussed in the supplementary study material 2, because this came into effect from 5th of July 2022. This is covered in the next supplementary study material. There I will discuss in a detailed manner. Clear, sir? So this is the amendment from the payment of tax. Only one amendment, which came into effect till 30th April 22. After 1st of May 2022, all such amendments covered in supplementary study material 2 only. We are discussing only the first one. Okay. So just go through it once. Completed, sir. Next. So whatever the amendments given in these boxes, don't worry, Emma. All this will be covered in supplementary study material too. Don't worry, every one of you. Okay. Next one, sir. So the last chapter, returns. Chapter number 10. Let us see the amendments from this chapter. First one, maximum late fees payable under section 47 for the delayed filing of forms GSTR 1, 3B and GSTR 4 rationalized. So whatever the late fees was there earlier, that late fees got rationalized. Right, sir? You can see the existing late fees. In our material, you can check it out. Returns under GST. So this is a returns chapter, and fees for the delayed filing of returns, you can see. Default in furnishing of the return. So here you can find the late fees. So for other than nil returns, it is 100 rupees per day of default or 5,000, whichever is lower. In case of nil returns, 25 per day of default or 5,000, whichever is lower. Right, sir. When it comes to the annual returns, it is 100 rupees per day of default or 0.25% of turnover, whichever is lower. This is the old provision. Now let us come to the amended provision. What are the late fees with respect to GSTR 1, 3B and 4? GSTR 4. You can see section 47 stipulates the specified amount of late fees for delay in filing of any of the following returns. Statement of outward supplies GSTR 1, returns including QRMP scheme, quarterly return, monthly payment scheme, right? And then final return. Now, the late fees can be waived off partially or fully by the central government. Since the inception of the GST law, late fee is being regularly waived off by the central government either partly or fully. So the right is given to the central government to waive the late fees in it. From the tax period June 2021 onwards, or quarter ending June 2021, or financial year 2021 onwards, as the case may be, late fees for the delayed filing of forms GSTR 1, 3B and 4 has been rationalized as follows. Let us see what is the late fees. So for delayed filing of GSTR 1 and or GSTR 3B. So this provision applicable from the June 2021 or the quarter ending June 2021 or from the financial year 2020-21. Now, with respect to the first case, registered person who have nil outward supplies, nil returns. When it comes to nil returns, this is with respect to nil return. The penalty is 500 rupees. How did you get that? 250 each under CGST and SGST or UTGST. Total comes to be 500 rupees, quantum of the late fees. And when it comes to the registered persons, other than those covered in 1, excuse me. So that means other than nil returns. Other than nil returns. Now here the aggregate turnover comes into the picture. If the aggregate turnover in the preceding financial year is less than or equal to 1.5 crores, the penalty payable, the late fee is leviable is 2000 rupees. The late fee leviable is rupees 2000 and 1000 each under CGST and SGST or UTGST. However, if the aggregate turnover exceeding 1.5 crores but not exceeding 5 crores, in between 1.5 crores to 5 crores, then the maximum late fee is leviable is 5000 rupees. Now, registered persons other than 1 and 2 above, the late fees is specified under 47, section 47. Okay, ma. So this is with respect to delay in filing of GSTR 1 and GSTR 3B. Sir, what about GSTR 4? You can see here for delayed filing of GSTR 4. So in case if it is happened to be a nil return, generally GSTR 4 filed by whom? GSTR 4 is filed by the composition taxpayer. So if the composition taxpayer filing a nil return, the maximum late fee is 5000 rupees. Sorry, 500 rupees. No, the composition taxpayer have some turnover, taxable turnover is also paying the tax, then the late fees leviable is 2000 rupees. Okay, ma'am. So this is a late fees with respect to the delay in filing of the returns. Now moving on to the second amendment, mandatory requirement of submitting the recent reconciliation statement audited by the specified professional done away with. So a kind of GST audit by the specified professionals, chartered accountants, cost and management accountants. Now the concept of GST audit is no more. With effect from the 1st of August 2021, Section 44 has been substituted by the Finance Act 2021 so as to remove the mandatory requirement of furnishing a reconciliation statement duly audited by the specified professional and to provide for the filing of annual return on a self-certification basis. This is the latest amendment to provide for filing of annual return on a self-certification basis. Earlier, for the filing of the annual return, the reconciliation statement must have been audited and must have been attested by a specified professional. Only then such a registered person become eligible for the filing of the annual return. However, now the concept of that, audited reconciliation statement has been removed and that reconciliation statement is self-certified by the registered supplier. Based on that self-certification, then he can file the annual return. No need for going the GST audit of the reconciliation statements. It is further provides that the commissioner to exempt a class of taxpayers from the requirement of the filing of annual returns also. So the power is given to the commissioner to exempt certain classes of taxpayers from the filing of annual returns. Now the substituted section 44 reads as follows. Every registered person other than an input service distributor, a person paying tax under section 51 and 52, that is CTP, casual taxable persons, and NRTP, non-resident taxable person, shall furnish an annual return which may include a self-certified reconciliation statement reconciling the values of supplies declared in the return furnished for the financial year with the audited financial statement for every financial year electronically within such time and in such form in such manner as may be prescribed. See, whatever the turnover you have given in your GSTR1 should be matched with the turnover which you are declaring in the financial statements. In the financial statement, in your trading and profit and loss account, whatever the turnover you are showing, the turnover should be matched with the turnover you are declared in GSTR once. That is what the reconciliation means to be. So that reconciliation statement must be self-certified. That is enough. Okay, now you can see here. However, the commissioner may, on the recommendation of the council, by a notification, exempt certain classes of registered persons from filing of the annual return. Further, nothing contained in section 44 shall apply to any department of the central government, state government, local authority whose books of accounts, see, generally central government, state government, local authorities, these people books of accounts are subject to audit by C&AG, Comptroller and Auditor General of India, or an auditor appointed by the auditing accounts of the local authorities under any law for the time being in force. See, the self-certified reconciliation statement filing of annual returns, this concept is not applicable for central government, state government, local authority because whose books are subjected to audit by the C&AG. Okay, that's it. And the remaining amendments you can see here, which came into effect from 1st of May 22 onwards. So that we will be discussed in the next supplementary study paper. So all this we will be covered in supplementary study material 2, sir. Every one of you following now. For your kind information, I am not skipping all these amendments. I will be covered. Don't worry. Right? So that supplementary study material 2 sessions will be starts from tomorrow onwards. With this, we have completed supplementary study material 1 completely. All the amendments. All the amendments from you can see in the very first page itself. From 1st of May 21 till 30th of April 22, I have covered. Right, sir. In the supplementary study material 1. And 1st May 22 to 31st of October 22, there is one more supplementary study material that will be starts from tomorrow onwards. Clear, sir? So if you come across any doubts while you are revising this, you can contact me at any time, right? Or you can post your doubts in our Stress Staff Fraternity Telegram channel. Okay, sir. Every one of you. So that's it for today. And we will start the SSP2 Supplementary Study Paper 2 in the tomorrow's session. Till then, have a good day and good night, sir.